businesses?
Well, what's happening, I think what happened is, and I am no expert on what happens in markets, particularly markets that have reached a level of exuberance that is beyond exuberant. But we're in a transition now. We have a new administration. I think people are hopeful about that transition. I think people are hopeful about vaccines. Maybe they are delayed, but they will eventually be here in profusion and people vaccinated. And at some point, I've been wrong in my predictions, whatever, on COVID, but at some point in calendar year 21, I think this will be over and we will begin to return to normalcy, and we will get there by the end of the year. So I think there's optimism generally about that. And there's optimism that we've turned a corner from a very tumultuous 4 years into something that's going to resemble a republic we can all respect.
That's fascinating, Barry. You know, let's talk about the role that business has to play here. It sounds like you think American behavior is basically self-correcting, that Trump will be excised from the narrative. It doesn't sound like you think business or corporate leaders need to get more strident in their statements, whether it's to employees, their customers, or stakeholders.
When you say strident, I don't know what do you mean, Carl? What do you mean strident?
Yes, I mean, this week, the National Association of Manufacturers said Penn should explore the 25th Amendment. I mean, it's one of the biggest trade groups in the world.
I think it's ridiculous. I mean, honestly, it's 12 days. Look, if it were 2 months or 3 months or 9 months or a year, go in good health. But 12 days to go, just move on. It's over. Anyway, it has nothing to do, God knows, with my comments or my feelings about how happy I am that finally he shot himself. And I do not mean that literally, obviously, but that he metaphorically shot himself. So, you know, that's great. But as for the dangers of the next 11, 12 days, I find it unlikely that anybody would execute any order he gives that's antisocial. So I think we're safe. And I think we should forget
Barry,
about...
You say, good morning, it's John Fort. You say it's 11, 12 days. I think we're safe. I try to be a student of history, not just in the United States, but in the world. And I can't help but notice that Donald Trump got more votes this past November than he did 4 years before. And all of his rhetoric up to this point, including yesterday, is that this is not over. This has just begun. We've seen the lengths that some who listen to him are prepared to go to. But you're very experienced, and that's an understatement, in this media space. What convinces you that he is on the decline and not just entering a different stage post-White House?
It's very possible. I mean, certainly that for what I think is a relatively small number of that 70+ million that voted for him, that are who are believers fully in Mr. Trump rather than what I think most people are, which is believers in his policies that were in certain areas positive for the economy, et cetera. So I look, of course, you know, he can rise from the ashes, but I think it's unlikely. I actually think he has this act of his has put, as against all the other acts, which you could say in stark relief or just as effective, they're not. Nothing comes close to what he did, which is to incite a riot. I think he's disqualified himself. And I think that's what will happen over a period of time. Maybe it won't. Maybe he'll have a resurgence. Good luck to that. But as for me, my attitude is now, move on. There's no productivity here. There's no productivity to do anything in the next few days other than quiet things down, get the inauguration finished, and start a new administration.
Speaking of that, Barry, how does business see Biden right now? And at some point, do you envision them bristling at the notion of higher taxes, more deregulation, the opposite of what they had applauded over the last 4 years?
I don't know what's to come. I don't know yet. I think none of us know. I think there will be probably higher taxes. I think that would have happened in any event. Well, I shouldn't say in any event, because who could predict what would happen if actually we had 4 more years. But I think that probably will happen. There's some justification for it. There's always a justification for rewriting our insane tax code. But what will happen with regulation? I'll tell you what I do find interesting. I had thought that a Biden election would cause the markets to drop on basically all of these worries that you just said. God, that certainly hasn't happened. So I think there's general optimism. What they'll do in these particular areas, I suspect, I don't know. I shouldn't say suspect. Look, I hope they govern from the center, center left, but center, which is what has been promised, and we'll see.
Hey, Barry, it's Deirdre. A few of the things that you've said over the last few minutes, things like let it go, let's just move on already. I just wonder, is that the kind of attitude that perhaps got us to Wednesday's chaos in the first place, this sort of passive acceptance of the misinformation, the calls for violence that have characterized the last few years?
It has nothing to do with it. It only has to do with its 12 days. What's the point? Why are we going to obsess over what is old news? Now, I'm not in any way...
But it's not just about the next 12 days. It's about the last 4 years.
Well, he's leaving office. So he's gone from his position of any power. So if we're talking about symbolism, that's one thing. I don't think the symbolism of throwing him out is worth it. I do think it would be great if he resigned. I think that's also symbolic because it's relatively meaningless. It's a few days to a new administration. They are already in power. So I just think, what's the point? I'm not talking about this as a symbolic act. I'm talking about it simply as pragmatic and practical and a waste of time.
Barry, I want to make sure... Barry, I want to make sure we get your thoughts on some of the big issues facing your businesses. And in particular, I see facing off with Google for its monopolistic approach. Now, in the past, we've heard a lot about IAC's issues with Google. More recently, Google has said it's taking issues with IAC's marketing practices as misleading, threatening to remove some of IAC's plugins, which could be potentially very damaging for IAC's business. What is your latest response to this from Google?
Well, response to Google, first of all, I think one thing that is going to happen in this year, and it's needed, it's been needed for a few years, there's going to be regulation, more stringent regulation of big tech companies. I don't know if there's anybody, sentient, who doesn't think that they have reached a state where sensible regulation is going to be applied. It'll take place this year or next year. And I think that will help. I think that will help. I don't think this playing field is ever getting leveled. Google is a monopoly without question. And so, I've always argued with Google that, I think of it as if you live, I think everybody lives as a serf, old Russian serfdom, on the lands of Google. But I also think that it is, I've said to Google, it's wise to treat your serfs really well, because otherwise they tend to rise up and overrun the castle. And I think what will happen is that regulation is going to help provide that. So I have a lot of equanimity about what I think is going to happen in the next couple of years.
And I know you've talked about competition with Google, not just in terms of IAC, but also in terms of Expedia. Do you think that Google should be broken up or just regulated more stringently in terms of how it can deal with its competitors?
No, I think breakup is, I mean, there are some extreme cases where it's appropriate. At Google, what are you going to break up? I mean, they are a search engine. All of their revenue comes from their search engine. There's no breaking up of it. There's no chopping it in parts. It's the most powerful search engine. I mean, it's a monopoly. And by the way, it is a great search engine. Our argument is simply that, look, ours is a company, our companies spend more than $5 billion a year on Google. And I'm perfectly happy to pay that as an advertiser to get people to come to our sites. What I don't want is that Google should compete with the money we are paying them for its own account. Because I think that's, I don't want to go fair and unfair, but I think that's improper. And I think that regulation will fix that, I believe.
Barry, I want to widen the aperture a bit. You mentioned a few minutes ago, you're talking about the markets. You said we're beyond exuberant. I don't know whether you're looking at what Bitcoin has done in the past few weeks. If you look at what Tesla is doing right now with its market cap above $800 billion, passing Facebook, what is the impact of this exuberance, you think, on investors writ large and on operators like you who are looking at M&A, who are looking at compensation, all kinds of things?
Well, I think you have to look at basics. I mean, if you look at just the markets and their current exuberance and make decisions relative to those values, as for me, operating our companies, I think it would be a great mistake. I think that what will happen at some point, has always happened, it will happen again. The market will break. Values will get back to less exuberant levels at some point for some reason, exogenous or otherwise. And that's, that's that. But to actually either put your companies in danger in terms of spending cash rather than conserving it and treating anything you spend it on sensibly rather than at, quote, market prices, I think that's a good thing. And I think that, well, forget what I think about what will happen.
Barry, I also want to get your thoughts on the future of online gambling, online gaming. IAC made a big investment in MGM in August, and just now IAC sent a letter to MGM in support of its acquisition of Entain, which has a big online gaming presence. My question to you is, how much more are you willing to invest in MGM to drive this acquisition of Entain and make it happen?
Well, what we've said is, look, we think, since we've acquired our interest in MGM, I've become anything, if anything, more positive. And I started out really skeptical about investing in this area, but I became, as time went on, as I started to understand it, I got enthusiastic about it. We invested $1 billion. Since then, everything I've learned, both about its management and its prospects, encouraged me to the point where I said that if this combination happens between MGM and Entain, that which is primarily stock, overwhelmingly a stock-for-stock combination, that we would, for those people who couldn't take stock, we put up an additional $1 billion, invest another $1 billion, or in any other words, double down, and have that cash be used to buy those shareholders out. So we're completely supportive of it. Whether it'll happen or not is, whoever knows in these things. There's no question. There are two things. One is putting these two companies together, an offline player that has begun to make online investments and an online player to have the world's largest gaming, resorts, entertainment company, I think is a fantastic combination. I can't imagine anybody, I've not heard a word of anyone saying, oh, this is a reach, this doesn't make sense, et cetera, et cetera. So as a combination, it's perfect. Whether it'll happen or not, the stars have to align and all of that. Whether or not it happens, MGM is going to be in the online business. It already is in the United States very significantly. And it will be, because it will invest to get there. All over the world, it will become a leader in the next years. The combination of MGM Resorts and their incredible footprint in resorts and gaming in the U.S., in Macau, that footprint allows us to be, unless we're utter dopes, and I'm pretty sure that the management of MGM is anything but, is the ability
and Barry, if that,
to get into the online area as effectively as they've gotten into the hard asset area.
And Barry, if that particular deal does not go through, are there any other online gaming assets that you would be looking at, or any other steps to increase your exposure to the online gaming space?
Yeah, there are opportunities all over the world. There are existing companies. There is the ability for us to go into any territory in the world. And with our very solid balance sheet, if we have to, we'll start from scratch. Whatever is going to happen, we're going to be there. If this opportunity doesn't happen, there will either be other acquisition opportunities or there will be investment opportunities. But there's no question that over the next years, online gaming worldwide is going to grow as online transference of everything has grown over the last decades. That is a certainty. So.
And it's the online growth that has certainly accelerated during this time of COVID. Barry Diller, thank you so much for joining us for this wide-ranging conversation. We really appreciate your insight on all of these different topics, and we hope you'll come and join us again soon.
Thank you. It's been a pleasure.
And as we had to break, Alibaba popping in the last few minutes as a new list of Chinese companies banned by the U.S. does not include Alibaba or Tencent. That stock had fallen earlier on in the week on reports the U.S. was considering targeting the company. Of course, it's been under pressure for a few months now because of pressure in China as well. We will be right back, so do stay with us.
It's hard work building a successful business. So make sure your payments platform is working just as hard. Adyen opens the door to innovative ways to pay, enhanced customer experiences, and new business opportunities, so you can focus on what you do best, growing your business. Stay a step ahead with the payments platform that adapts and evolves with you. Adyen. Business, not boundaries.
Digital transformation has failed to take off because it hasn't removed the endless mundane work we all hate. Automation can solve that by taking on repetitive tasks for us. Unleash your potential. UiPath. Reboot work.
Battling COVID. Doses of hope. The IPO alternative moving investors.
The public finally getting into some of the smaller companies that are out there.
New Year optimism on the path forward. Stay connected, stay informed. Watch or listen live on the CNBC app.
Super Wild Card Weekend is here with 2 primetime showdowns on NBC. Bucks, Washington.
To the end zone, touchdown.
Browns, Steelers.
That was awesome.
This weekend on NBC and streaming on Peacock.
Having trouble getting help for erectile dysfunction? Get help fast with Lemonade Health. Just answer a few questions. And they can send you medication so you can get better quickly. Visit lemonadehealth.com today.
I love this photo of my nephew, but getting it from here to here can be a real pain. That's why I started Keepsake, the free app that makes it easy and affordable to have your favorite photos framed. So if you've got a special photo on your phone, download the free Keepsake app and start framing today.
Hey, I'm Nick. We created Gabby because most people overpay for car insurance. Gabby is a free tool that saves you money by finding the best deal. Gabby saves users over $800 a year on average. Go to Gabby.com and stop overpaying for car insurance.
I finally found a reason to love staying at home. Each month, Literati sends me 5 amazing stories. And every box comes with tons of other fun stuff. Also, it's age appropriate, whatever that means. So go to Literati.com and sign me up.
Getting some breaking news out of Richard Clarida, the Fed vice chair, responding to the chaos on Capitol Hill this week, what it means for the economic outlook in a conversation with our Steve Leisman at the Council on Foreign Relations a few moments ago. Take a listen.
Well, Steve, thank you. And I think it's fair to say that, like all Americans, I was angered to see the chaotic images of mobs storming the Capitol and occupying halls of Congress, determined to disrupt the constitutional process. But I was thrilled and pleased to see that the House and the Senate have ratified the election results per the calendar and per the law. And I'm sure my colleagues will look forward to working with the Biden economic team when they take office on January 20th or soon thereafter. You're absolutely right, however, that confidence about the economy and our system is an important factor in economic activity. And I'm hopeful that we can get past this episode and look ahead as the new administration comes in and as we work together to put in place the economic policies that can support the recovery.
Would continued instability cause you to change your outlook on either the potential of growth or actual growth in the United States?
Well, that's a hypothetical. I think hypothetically, if that were to continue, then obviously any instability that erodes confidence and capital spending and investment and consumer confidence is something that we'd have to look at. I don't think that will be the case, but obviously, if it were, we would have to factor that in. But let me be clear: I don't foresee that as being a challenge.
I hope you're right about that. Let me ask you about this morning's payroll report, Richard. Came in down 140.
Some important headlines there, John. Also saying that sees keeping the current pace of purchases through 2021. And it can be quite some time, he says, before we begin to think about tapering, sort of echoing what the Fed chair has said in recent months.
Yes, indeed, Carl. And meanwhile, as we head to break, also keep an eye on Roku here. You can see it's up a little more than 5%. That's an all-time high, cracking $50 billion in market cap. The company also announcing it has acquired Quibi's library of content. As we talked about earlier this week, they were rumored to be working on nearly 3 months after that short-form video streaming service shut down. We will be right back. Stay with us.
Blunders, they're how we learn. But investment blunders are a costly lesson that can hurt your retirement. Decisions like trying to time the market, placing big bets on a single stock, or letting politics and elections influence your investments. Fisher Investments has gathered the 13 worst blunders and how to avoid them in this eye-opening free guide.
Why take a chance? Let Fisher Investments send you our free guide, 13 retirement investment blunders to avoid, like running short of money in retirement, or working with a money manager who's not a fiduciary. Call now, 1-800-208-4466.
Fisher Investments has helped thousands avoid costly blunders and achieve a comfortable retirement. If you have $500,000 or more to invest, call now.
Call Fisher Investments now for your free guide, 1-800-208-4466.
Don't just retire. Retire well.
Today, you are going to become a cook. So how do we do it? Let's just follow the directions. It's like a life hack. I can't believe we made it. It's really good.
Hit refresh with HelloFresh. Go to HelloFresh.com and use code TV10 for 10 free meals, including free shipping.
America, break free from 2020. Extended through January 15th. Join Planet Fitness for no enrollment. $10 a month, no commitment. 2020 is over. Start 2021 with tons of ways to get moving in our clean and spacious clubs. And spread out while you work out with cardio distancing and our new crowd meter. Plus, use our app to get moving anywhere. Your fitness is essential, so kick things off with the year's best deal. Join for no enrollment, $10 a month, no commitment. Deal ends January 15th.
This is Monogram. We're an Austin, Texas-based medical technology company transforming the orthopedic market by combining state-of-the-art surgical robotics with patient-optimized implant design. Monogram is the future of orthopedics. Visit thebonebot.com.
When it's time to sell your home, there's a lot of money on the line. How can you trust your real estate agent will get it right? There's good news. With HomeLight, you can compare actual performance data on thousands of agents near you, so you know who sells quickly, who sells for the best price. We'll match you with the perfect agent for your needs. And best of all, it's free. Sell your home for more money. Go to HomeLight.com today.
Surging COVID and transitioning government. The president-elect has said 100 million shots in the arms in the first 100 days. That's the goal.
It's going to happen gradually.
For the first time, he's acknowledging that there'll be a new administration.
That was Donald Trump finally, for the first time, conceding. It was also the kickoff of 2024.
Hopefully, calm returns. Hopefully there's hope.
The facts, the truth, the news with Shepard Smith. Weeknight, 7 Eastern, CNBC.
Welcome back, everyone. I'm Sue Herrera. Here's your CNBC News update at this hour. As flags fly at half staff on Capitol Hill today, a senior Justice Department official tells NBC News there is a federal investigation into the events surrounding the death of Capitol Police Officer Brian Sicknick. It is not being called a murder investigation at this point, as officials do not know if the death meets the legal definition of that crime. Today, President Trump is tweeting he will not be attending Joe Biden's inauguration this month. And there's a report he may head to Florida the day before the ceremony. He would be the first president since Andrew Johnson to miss his successor's inauguration. And Nebraska's Ben Sasse is now the first Republican senator to publicly say he is open to impeaching President Trump and removing him from office, while South Carolina Senator Lindsey Graham says a last-minute impeachment would do more harm than good, and it's time to heal and move on. You are up to date. I'll see you again in an hour. Deirdre, back to you.
Thank you for that, Sue. Still a big show ahead. We have an exclusive with C3AI CEO Tom Siebel. After the break, that stock soaring since its public debut last month, above $140 a share. We will be back in just 2 minutes.
I tried a new laxative that's both gentle and fast.
New great-tasting Dalcolac soft chews works naturally with the water in your body in as little as 30 minutes. Puts you comfortably in control. New Dalcolac soft chews.
I'm not ready to lose my hair. Not now. But I never thought there was a real solution. Now I use Keeps, the easiest way to keep my hair. And I can get my treatment without leaving the couch. Go to Keeps.com to learn more.
Meet Tonal, the smartest home gym that learns as you get stronger, with personalized expert coaching and revolutionary digital weight, so you can be your strongest. Visit Tonal.com.
You know what hurts? What really hurts?
The doctor's not available till next month.
What? What really, really hurts? What really, really, really hurts? But you know what's painless? Using ZocDoc to find an in-network doctor and compare reviews. And what actually feels kinda good?
Wow, that's better.
A same-day appointment.
Thanks.
What just... To instantly book an in-person or video visit, download ZocDoc.
It was so stupid.
Now you can skip the grocery store and stay healthy at home. Sunbasket delivers totally delicious meals ready in minutes. Fresh and ready meals done in minutes. New from Sunbasket.
Hey, can you adjust my strap? Girl, you need Lively. Mom, you need Lively. Babe, you need Lively. All bras for $35 at wearlively.com.
Hi, I'm Hanno. I created Gabi because most people overpay on car insurance. Gabi is a free tool that saves you money by finding the best deal. Gabi users save more than $800 per year on average. Go to Gabi.com and stop overpaying for car insurance.
Welcome back. C3 AI made its public debut about 30 days ago. The stock already up more than 200% from that $42 a share price where the IPO priced. And for a look at what 2021 may bring in the AI landscape, we are now joined in exclusive by C3 AI co-founder and CEO, Tom Siebel. Tom, good to see you. I want to talk about the technology space, but first, you've been in business for a long time, innovation globally. I want your take. What's the proper response of American business to the position we find ourselves in as a country right now, based on the events of the last few days and weeks? And do you see any impact on brand America and brand American business?
Well, good morning, John. And I think what's transpired in the last few days is it's, historic as it relates to the Republic. And it's just a tragedy. And I fully expect that the American people will band together as they do, and unify and get together and get on with the job of operating the greatest country in the world and building business, creating jobs, and dealing with, important social issues that need to be addressed. So I fully expect the American people will come together and get the job done as they have always done in the past.
Now, do you expect any ongoing impact of this in the way that business operates internationally? We talk about, there are all sorts of metaphors, shining city on a hill, the example that America sets, American leadership. China has certainly taken the opportunity of this challenge to American democracy to level some pointed criticisms at us. And there are a lot of ways in which China is trying to challenge American business and its influence globally. Is that an issue?
Well, I think that we are looking at a fundamental contest of two diametrically opposed political philosophies. One is a top-down totalitarian state versus a free market economy. And historically, the free market economy might be a little messy, but we seem to rise to the occasion and get the job done. And I believe that we will rise to this occasion.
Tom, how do you see that broader, AI race between the U.S. and China? You've been, hugely successful since your IPO in attracting investor attention. But, as I've reported in the past, there's a lot more startups focusing on artificial intelligence in China. So where do you think sort of the playing field is right now? Who's in the lead?
Well, I think China is investing tens of billions in this in a very well-organized fashion coming from the NRDC down, and they're very serious. And as Vladimir Putin said in, I think, September of 2017, whoever wins the war on AI dominates the world. I believe that's true, and it will not be Russia. So I think this is very critical. I think we need to take it very seriously. We have some very bright people in Washington, D.C. doing this, but I think it needs to be more organized. And, hopefully I'd be surprised if this administration doesn't step up to the plate, recognize the importance, make the use of the bully pulpit, and especially, mobilize the private sector as we do so well in Western economies to address this opportunity. But if we lose this war on AI, this story will not end well.
Tom, a lot of people who watch innovation and tech for a living are centering in on climate. It's certainly a priority for the new administration. Kara Swisher thinks that the first trillionaire will be somehow in the climate business. I wonder if you think it deserves to be at the center of the discussion from here on out.
Yes, I think that energy security and climate security are very important issues, and these are very natural applications of AI. So you can see the work that we are doing with at the C3 AI Digital Transformation Institute with Microsoft, MIT, Berkeley, Princeton, Carnegie Mellon, University of Chicago, and Stanford. That the next call for papers is going to be about applying AI and digital transformation to energy security and climate security. So I think this is a natural application of AI where we can have a huge impact on safer energy, cleaner energy, more renewable energy using AI for carbon sequestration, what have you. So yes, I think there is a very large opportunity there, and the C3 Digital Transformation Institute will be making a very large announcement on that shortly.
And finally, Tom, we had Barry Diller on earlier this hour, and he said, quote, "We're beyond exuberant," unquote, talking about the market. You just went through an IPO, not your first experience doing that, but the price, the valuation that C3 AI is getting now is so different from what the process suggested. Reflect, if you will, on that. Are you happy with how the process went as you try to manage the company from here and employee expectations? They have a stake in this as well. Does it present challenges?
Well, it's largely an employee-owned company, so all of this is perceived of as good news by the employees, by the customers, and naturally by the investors. Now, I'm not an expert in capital markets, but we are seeing, C3 AI is kind of the first pure play enterprise AI company, and it has been very well received by the public markets. And as we see the changes that have been really accelerated in the global economy since the onset of COVID whenever you might date that, say January or February, we're seeing a dramatic acceleration in the desire for digital transformation and the desire to apply AI to business and government and healthcare and telco and transportation and defense and intelligence. So this market is growing very rapidly, and it's our intention to play a substantial role in that space.
Yeah, and investors and traders want to play a substantial role, too. It seems your stock's up another 9.5% so far today. Tom Siebel, thanks for joining us. Happy Friday.
Thank you, John.
John, another thing that's up once again is Bitcoin hitting fresh record highs today after crossing 40,000 for the first time yesterday, now well above 41,000. It is up 40% just this week alone. That is its largest weekly gain since December of 2017. We will be right back, so stay with us.
Ready to shine from the inside out? Try Nature's Bounty Hair, Skin, and Nails Gummies, the #1 brand to support beautiful hair, glowing skin, and healthy nails. And try Advanced, now with 2 times more biotin.
You need the right pieces in your portfolio to preserve capital, diversify to mitigate risk, provide liquidity, while delivering returns. Gold, your strategic advantage.
Hey, you. Yeah, you.
I opened a SoFi Money account, and it was the first time that I realized I can be earning interest back on my money.
I just discovered SoFi, and I'm an investor with a diversified portfolio. Who am I?
I refinanced my student loan with SoFi because of their low interest rates.
Thanks, SoFi, for helping us get our money right. Thank you.
Stacy has 4 kids, I have 3, and we really started this business in the midst of all of that chaos and craziness. We're living in unprecedented times, and every shop does need to have a digital presence, whether it be people walking through our door or people hundreds of miles away looking at our website. We want everyone to feel like they know us.
This isn't just furniture. People trust us to find these pieces that I know they'll have for years to come.
Find the talent you need to transform your business today. Fiverr.
Wait, just keep clearing there, gentle. Sweetie, can you just be gentle with the clearance? Okay. I know you don't want to show, just gentle.
New projects means new project managers. You need to hire.
I need Indeed.
Indeed you do. The moment you sponsor a job on Indeed, you get a short list of quality candidates from our resume database.
Yeah, I think you'd be a good fit.
So you can start hiring right away. Claim your $75 credit when you post your first job at Indeed.com/home.
3 meetings and 3 stops today. There's just never enough time. If you've ever considered flying private jets, you have to check out One Flight's badge. The badge makes searching and booking private jets as simple as booking a hotel. Just type in your location and find the closest airport. Then choose from over 4,000 jets in one place. When I land, there's always a car waiting for me, courtesy of One Flight. What's your time worth? Badger.
What a week it's been for Tesla. Morgan Stanley, RBC, today it's Evercore increasing their price targets this week. Regardless, it's up 11 straight days, 20% in the past week alone, leading the NDX and bigger than Facebook. We're back in a moment.
It's a 13-hour flight. That's not a weekend trip.
15 minutes to wait for it.
I gotta take off. Now, you downloaded the TD Ameritrade mobile app so you can quickly check the markets?
Yeah, actually, I'm taking one last look at my dashboard before we board.
Excellent. And you have Thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set. Have a great flight.
Hey, thanks.
We'll see you. They're getting so smart.
Choose the app that fits your investing style.
At Amica, we believe in life's extraordinary experiences. We're an insurance company that delivers an experience that meets the only standards higher than ours. Yours. Experience Amica. Auto, home, and life insurance.
You need the right pieces in your portfolio to preserve capital, diversify to mitigate risk, provide liquidity, while delivering returns. Gold, your strategic advantage.
Medical school is very stressful. I lost a lot of hair during that time. Nutrafol is 100% drug-free and it's natural. You can't argue with clinical proof.
Start your hair growth journey at Nutrafol.com.
No more waiting. This year is gonna be different. My New Year's resolution, get happy.
Hey, I'm Nick. We created Gabby because most people overpay for car insurance. Gabby is a free tool that saves you money by finding the best deal. Gabby saves users over $800 a year on average. Go to Gabby.com and stop overpaying for car insurance.
It was time someone made a better wallet, so we did. This is the Ridge. Precisely engineered to fit all your cards and cash in a fraction of the space. And made from military-grade materials so we can guarantee it for life. Get 10% off today at ridge.com/TV.
Just on
Apple's potential electric vehicle plans back in the headlines, with Hyundai saying it's in early stage discussions with Apple, appearing to sort of step in something there, stick its foot in its mouth, and that Apple is also in talks with a variety of other automakers. Apple itself, of course, declined to comment. Shares of Apple slightly higher today. Hyundai, however, finished the session in Asia up almost 20%. Deirdre, it's a pretty well-known rule. If you're partnering with Apple, don't talk about it, because Apple will cut you off like that. So who knows if this electric vehicle thing is actually going to happen. but something tells me some people are duct taping their lips shut in Hyundai right around now.
I've seen that happen with some of the other big tech companies too, but you're right, it is so rare for Apple to acknowledge rumors, let alone its partners. So you have to wonder if Hyundai sort of shot itself in the foot a little bit. But that stock reaction kind of says a lot there, the excitement around such a project, Carl, even though Hyundai specifically said that it's talking to a number of other car makers. Just that prospect of an EV from Apple is enough to get the markets excited.
Yeah. Although, as we pointed out with Jim this morning, the Micron shortage sort of points to overall short supply in the chip business in general. Nikkei today with the piece on how Nissan is going to have to trim some production because it's just too hard to get the chips that go into cars right now. Dow's gone negative. We're down about 74 points. S&P 3808. We're back in a moment.
10 years ago, we founded Loan Depot because we were confident we could deliver the American dream of home ownership to individuals and families across the nation.
Serving more than 27,000 customers a month, lowering payments, providing jobs, and investing in neighborhoods and communities nationwide.
We know what it means to put down roots and bring dreams to life.
At Loan Depot, we know
home means everything.
Some things are good to know, like where to find the cheapest gas in town and which supermarket gives you the most bang for your buck. Something else that's good to know? If you have Medicare and Medicaid, you may be able to get more health care benefits through a Humana Medicare Advantage plan. Call the number on your screen now and speak to a licensed Humana sales agent to see if you qualify. Learn about plans that could give you more health care benefits than you have today. Depending on the plan you choose, you could have your doctor, hospital, and prescription drug coverage in one convenient plan. From Humana, a company with nearly 60 years of experience in the healthcare industry. You'll have lots of doctors and specialists to choose from. And if you have Medicare and Medicaid, a Humana plan may give you other important benefits. Depending on where you live, they could include dental, vision, and hearing coverage. You may also get rides to plan-approved locations, home-delivered meals after an inpatient hospital stay, a monthly allowance for purchasing healthy food and beverages, plus an allowance for health and wellness items. Everything from over-the-counter medications and vitamins to first aid items and personal care products. Best of all, if you have Medicare and Medicaid, you may qualify for multiple opportunities throughout the year to enroll. So if you want more from Medicare, call the number on your screen now to speak with a licensed Humana sales agent. Learn about Humana plans that could give you more health care benefits, including coverage for prescription drugs, dental care, eye exams and glasses, hearing aids, and more. A licensed Humana sales agent will walk you through your options, answer any questions you have, and, if you're eligible, help you enroll over the phone. Call today and we'll also send this free guide. Humana, a more human way to healthcare.
Here's what we want. We want stocks that can stand the test of time, not for tomorrow, not for next week, but for the year and beyond.
Watch or listen live on the CNBC app.
As we mentioned earlier, Carl, Roku has acquired Quibi Holdings, LLC. That is the entity that holds content distribution rights for the content that failed effort. Jeffrey Katzenberg, Meg Whitman was supposed to be bite-sized content, really optimized for mobile. Now Roku has those content distribution rights. They have not bought the infrastructure and technology, including that turnstile interface that were part of Quibi. All of this is supposed to live in the Roku channel. Roku's efforts to really have a unique content experience within Roku, not really doing original content, but they are doing their own sort of curation, their own deals for content. It's found a resting place, Carl. We can at least say that.
Yes. We talked to Anthony Wood earlier in the week, who's been resolute about not getting into the original content business, John, as you point out, but this is their own. I was looking back, Dee, at the shares 3 years ago this month, $40. So you're looking at basically a 10-bagger in a few years.
Yeah, an incredible rise. Something interesting in this acquisition, Roku will reportedly have to present the shows in those bite-sized formats, so they can't string them together. John, it'll be interesting to see if a different platform makes this content more appealing. I just wonder behind that decision, not putting them together, perhaps shaking up the whole format entirely. But I don't know. Personally, I didn't watch any Quibi shows. I wanted to, but I just really never found the place to do so, Carl. So, you know, I do have a Roku TV. Maybe people will take to that.
Yeah, those who gave content to Quibi, hoping for a second act here. We're getting a remarkable flow of headlines out of Washington today for obvious reasons. Eamon Javers is going to bring us some of the latest. Eamon?
Yeah, Carl, that's right. We're getting a letter now that Speaker of the House Nancy Pelosi has sent to her Democratic colleagues on Capitol Hill, and it contains a paragraph the likes of which I don't think we've seen before in American history. Pelosi reporting to her Democratic colleagues on a conversation she had with top Pentagon leaders. Pelosi saying, I spoke to the chairman of the Joint Chiefs of Staff, Mark Milley, to discuss available precautions for preventing an unstable president from initiating military hostilities or accessing the launch codes and ordering a nuclear strike. The situation of this unhinged president could not be more dangerous, and we must do everything that we can to protect the American people from his unbalanced assault on our country and our democracy. So, Carl, the Speaker of the House is reporting that she has spoken to the chairman of the Joint Chiefs of Staff about removing access to the nuclear codes by the President of the United States. Pelosi, in her letter here, is silent on what Milley's response may have been to that. And the trick here is going to be that there is really no constitutional way to remove the president from his authorities as commander-in-chief while he's still serving as commander-in-chief. That is, if he's not removed from office, there's no way under the Constitution that I know of anyway that you can remove some of the president's authorities, including launching a nuclear strike. So this is very dramatic and scary stuff. Pelosi here also putting the onus on Vice President Mike Pence in terms of removing the president from office, saying that she hopes that Pence will move forward with the 25th Amendment to remove the president from office. She says that she and other leaders have called Pence, and they still hope to hear from him as soon as possible with a positive answer as to whether he and the cabinet will honor their oath to the Constitution and the American people in moving forward with removing the president from office. So Pelosi here is silent also on the idea of impeachment. Clearly, she prefers that Pence and the cabinet remove the president and not Congress through the impeachment process. That's the project she's leaning on here. Deirdre, back over to you.
Well, Eamon, developments are coming quickly. Thanks for keeping us posted. Before we go, we also want to get to this enormous rise in Bitcoin, still above 41,000 this morning, Kate.
Hey, Deirdre, Bitcoin broke through 38,000 and then 39 and finally 41,000, all in about 24 hours. It's more than doubled in the past month, and it's up about 40% for the first week of this year. Analysts tell me this week's drivers are some of those same factors that pushed Bitcoin over 10,000. We've talked about that flood of new institutional investors who really see this as a hedge against inflation and a weaker dollar. But there's also been a resurgence of the retail buyer who really defined Bitcoin's rally in 2017. Take a look here at Google Trends. Since December, when Bitcoin first crossed $20,000, Google searches for Bitcoin have skyrocketed. Analysts chalk that up to FOMO, or fear of missing out. Another sign of retail interest, a recent boom in altcoins, or those smaller cryptocurrencies. New buyers may be speculating on the next Bitcoin. Bitcoin's boom this week puts the entire cryptocurrency's market value, which includes those smaller tokens like Ethereum and XRP, above $1 trillion for the first time. With these new buyers pouring in, blockchain data from Chainalysis shows that fewer people are actually selling, causing what they call a liquidity crunch, with an imbalance between lower supply and new demand, with people chasing fewer coins. We also had a bullish JP Morgan note out this week saying Bitcoin could hit 146,000 long-term as that competes with gold as a safe haven asset. And in the chaos with Washington this week may have also been a tailwind. Analysts say some are looking to that digital asset as a safe haven. Carl, back to you.
Yeah, everybody's looking for safe havens in some form or fashion. 10-year 111 now. Kate, thanks very much. Have a good weekend. Let's get to the judge.
Carl, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, the record run for stocks, whether it's sustainable or starting to teeter. We have some interesting buys and sells today from our investment committee. They're here to discuss and debate them with me for the hour today. Jim Lebenthal, Pete Najarian, Brenda Vingello is the CIO of Sandhill Global Advisors, Degas Wright, the Chief Investment Officer of Decatur Capital Management, Mr. Wonderful, Kevin O'Leary is the Chairman of O-Shares ETFs. Let's go to the wall, see the markets, where we've got new intraday highs today for the S&P 500, the NASDAQ 100, the Russell 2000, highs for tech, discretionary, healthcare, materials, industrials. You get the gist of what I'm trying to say, Pete Najarian. So there's your market picture, and I feel like we have a great debate to have today because I feel like it's happening all around us. Here are some highlights of the notes today. Goldman Sachs' David Solomon says, I'd be cautious. Those comments coming to Axios. Bank of America today, sell the vaccine. Tom Lee on the other side, no surprise. High probability for equities to post, he says, shockingly high gains. And then we'll talk about what Chamath Palihapitiya told me yesterday. But Pete, where are we? Who comes out the winner of this debate?
Well, I would say this, Scott. I would say that we are shockingly low in volatility given the fact of where we have been this whole week. When you started off the earlier part of the week and actually even how we closed the end of the year, you'd expect to see volatility a lot different than where it is right now, where we are in the very low 20s. So I think this gives a great opportunity for buying protection. That's something that I have done because I don't know how cautious. I have some cautiousness to me as I approach the markets, and I know that the trajectory has been to the upside in an absolutely massive way. So I want to be able to have a position on where I'm trading these very inexpensive options and buying a little hedging. One of the examples was I was long spider calls. I actually shifted, sold out of that position, and I bought some puts to the downside for the spider. Not because I'm negative, Scott, but I'd like to have that in place because volatility, like I say, is at the lower end. But it's given us a great opportunity. I am not owning or buying new stocks. As a matter of fact, I've probably gotten rid of a few stocks, but I have absolutely been trading these options because this is the time to really capitalize on what we're seeing, which is low implied volatilities, low VIX, and an opportunity to trade these markets. Even if I think that there's the possibility for a downside push, I think you've got to trade what's in front of you. We see it each and every day. How about the rally we got off of Monday and then the rest of this week, how we've been rocketing to the upside? And you just talked about some of these all-time highs. The SMH, the chips, they just continue to be a wonder to watch to the upside. And instead of just watching, I've been participating by buying multiple different names in that category. But I think there's a lot of different areas that continue to be remarkable, like the materials space. Financials have had a pretty daggone nice run. So I think there's a lot of great opportunities out there still, Scott.
Okay. Farmer Jim, on December the 28th, you agreed with everything that Tom Lee was saying. Right now, you got to ride this. That's what you told me, right? You were looking for this run to continue.
Yes.
Then I look up today, and I see that you sold Winnebago, massive winner, and that you sold your Apple trading position, which you only initiated a couple weeks ago. You got some splaining to do, bro. What's up?
Yeah. Well, yeah, I know. It sounds like you're calling me out, but that's not how I feel about it. When we spoke. Well, when we spoke with Tom Lee, here's what I said, and I remember it clearly because I've been consistent. I said I agree with him, you've got to ride it, and probably second half of January is when you get a correction, when the bonuses are all out there, 401k contributions are all done. Now, that doesn't mean I'm going to wait until January 16th and then start selling. As a portfolio manager, Scott, you know this, but this is important. What's my job? It's to buy low and sell high. Right now, with the market where it is so much easier for me to sell high than it is to buy low. So I look at Winnebago. Company's been just a phenomenal flyer, right? It's tripled, more than tripled in 2 years. But I'm looking at risk right now. I'm preparing for that correction. They've done well. It's time for me to sell high and look to buy low. Here's the problem, though. When I look to buy low, it's hard for me to find things I don't own. I already own Boeing. I already own Qualcomm. You know, I would look at a Caterpillar, but I'd say, you know what? It's no longer buying low there. So I'm going to sit tight. I've got about 10% cash that's both from Winnebago and that Apple trading position. And I don't feel like I'm backing off on what I said a few weeks ago. This market has ripped. and it's time for me to just take a little bit money off the table and wait until I can find the places to buy low.
I hear you. It's just especially the Apple thing, the trading position. It's just a quick turnaround, on the tractor, off the tractor.
Yeah, let me address that. I'm sorry, but when we spoke about that, that happened 2 Mondays ago, and you and I spoke about it. I said, look, this is an end of the year. I may be out of it this week. And then Thursday, New Year's Eve, you weren't on, which you're of course entitled to take a day off.
Thank you.
Should.
Thank you.
Morgan was on, and we just didn't get to it. So I wasn't able to tell people that I took it off last week.
Okay. All right. I appreciate you clarifying that. All right, Brenda, you're up. Where are we going from here? I mean, are we at an inflection point for the rally?
Yeah, I mean, I think we've had another week of news where we've gotten confirmation on some of these things that were uncertainties in the market. So now we know the way that the Senate is going. We know there's going to be a transition to Biden. So those are out of the way. But my question that I've been asking myself is, what more can we learn in terms of what more positive catalyst can we have here? So I do think that the market could absolutely experience some volatility. But I still want to be mindful of the fact that we are in an incredibly low interest rate environment. There's still cash on the sidelines. So it's a question of where do you go? So I think that will continue to likely fuel some of this rotation going into value and cyclical-oriented sectors. And that's how we've positioned our portfolios throughout the second half of last year, to really be tilted more towards those groups. And not only because there's nowhere else to go, but I also think as we look to 21 and 22, those groups should grow earnings at a faster pace than the traditional growth groups of technology and healthcare and so on. And historically, that has resulted in outperformance of these groups. So I think we could continue to see this rotation. And it will likely come at the expense of some of the larger cap tech names in terms of multiple compression.
Okay.
That's what we're expecting.
Okay. I'll get to you in a minute, Kevin O'Leary, because I'm going to play some sound coming into you. But Degas, you must not be worried. How could you be if you just bought Square?
Well, ultimately, the reason why I brought Square is that it gets into the payment systems. Obviously, during the pandemic, we shifted the way we live, work, and play. But also how we pay for things. And so Square actually addresses an issue for the small business owners. They also come in and they do a lot of work with small business community. So they're building their client base. They're also focused on the tech space and getting more students involved in tech. So they're doing a great job of getting more customers through their work with small businesses.
I hear you. I hear you. But what you're telling me is not new, though, right? I mean, I know why Square is good, right? I also know that Square's 52-week low is $32. Its 52-week high hit today is $246. That says rocket ship, right? You know where I'm getting on this, is why now? Why now? You can't be, if you're worried about the market in any way, shape, or form, you can't be buying Square today. So you're not worried, is my point.
Well, I'm not worried because ultimately now I'm seeing a pullback may occur in the first half of the year. And what we're sharing with clients is that if you have a concern, if you're really concerned about the market dropping, say 20% decline, you can buy some puts there, as Pete was talking about, for protection. And then you can write some calls to generate some income to pay for your put costs. So that's what we're sharing with clients there. But what we're seeing long-term, Scott, is 2021 at the end, we're going to see a positive market. So we're looking for a rebound after that pullback. And so what's happening though with Square, great question, Scott. What the business that Square is on and their business model is not going to go away because of this pandemic. This is a long-term play, and Square has really did an outstanding job of working with that small business owner with the application, starting out with the Square Reader. It made it easy for people to pay for things, and it really works well in their environment, and I think it's a great buy. And what we looked at is how is the market changing, and the Squares of the world is that innovation that we're seeing in the payment system. Also, it goes very well with our other financial services, to include MasterCard and also PayPal. So that's a great play that we see going forward.
Okay, I'm glad you gave me all that. It helps to help our viewers understand why buying a stock like that now maybe can still make some sense. All right, Kevin O'Leary. So you're last in this debate for a reason. You've heard everybody's point of view. I want you to hear somebody else's, because Brenda so wisely teed us up for this by saying, well, what's the catalyst? Where are the catalysts for stocks to take that next leg higher? Here's what Chamath Palihapitiya told me yesterday he sees as to why assets can keep going higher.
Personal consumer credit card debt had fallen off a cliff, which kind of makes sense, right? Because you were in the middle of a pandemic and you weren't going out as normal. On top of that, I saw data that showed that the amount of savings that individuals had gone up, and then the amount of money in money markets were at all-time highs. And so when you put those things together, it is rocket fuel for assets. And so whether those are housing markets or whether those are capital purchases like cars or vacations or stocks, in this case, if we're still under a lockdown, these things are just going to go to the moon for a while. And so you just have to be long. And, you know, everybody who's trying to sort of like understand why you shouldn't be long, I think is going to regret it for at least the next 18 to 24 months.
Okay, Kevin O'Leary, so I've come into the Shark Tank and I say, okay, I've got two products over here. Goldman's David Solomon says time to be cautious. Bank of America says sell the vaccine. I've got on the other side, hey, Kev, gang, look at these. I've got Tom Lee, high probability equities are going to post shockingly high gains. And I've got Chamath Palihapitiya saying you've got to be long. This is rocket fuel. Who are you buying?
I'm going into the got to be long, but for a slightly different reason. We haven't talked about the 10-year in quite a while, Judge, as it breached 1%. I believe it's going to end this year in December somewhere between 1.75 and 2%. And that is the beginning of an inflationary cycle, because we are bringing money into this market like never seen before. And because of what I saw in Georgia, I think we'll get a very strong and directional infrastructure package and maybe even more support. And that's all money supply. And so you have to ask yourself, what are you going to do when you're pouring so much cash from the sky? You want to protect yourself against inflation. Where do you do that? Well, you probably sell utilities, as I have, long duration preference shares, for example. Anything to do with duration has risk, including commercial real estate REITs. And you put that money into where you have pricing power against inflation. That's the consumer stocks, that's technology, and for me, it's healthcare as well, because I think we'll be repatriating all of our healthcare needs over the next 3 years because of the pandemic. And so at the end of the day, it's a reason to protect yourself. If you just hold cash and the 10-year goes up, you may be hurt from inflationary forces that you could price yourself away, de-risk by just buying hard assets. Well, one of those, and I realize there's a lot of Kryptonians out there, and I ride with the Kryptonians. I have $100 worth of crypto. I'm really excited.
Wow, that's a big bet.
Well, no, listen, Scott, it is, and I'm a Biddle-Lorian too. It's, you know, I bought all the cryptos 3 years ago, and if we get $50,000 today at the end of the day in a Bitcoin, I am going to break even. And I'm really excited, which shows you the only coin that worked was Bitcoin. But for me, gold is where I'm going to put my money now in a huge way, getting ready for inflation.
All right, so let me ask you this. You in laying out the stocks that you suggest our viewers should look at, you said technology, while at the same time talking about rates going up and inflation. If rates keep going up, if we start getting more worried about that, couldn't that cause multiples on those growth stocks to actually come down?
Not until the 10-year gets to 3%, and I think we're a good 3 years away from that. The point is it's going to happen in stages. And I think you still say long tech, because when you see this quarter's numbers from the big names like Facebook and Google and everybody else, and in addition to all of those stocks that everybody started to sell off as they thought the vaccine would take hold, the Zooms, the DocuSigns, the Strike Forces, I'm still long all those, because they're going to continue to perform until fixed income competes with tech. And that will happen somewhere between 3 and 4% on the 10-year. So we're a long way away from that. I'm staying long tech because the numbers, Scott, are going to blow your mind in Q1 on technology. You won't believe what Facebook's going to post.
So, speaking of right? Mizuho today, Brenda, calls Facebook their top pick. Okay, favorable e-commerce, new product trends, blah, blah, blah. Everybody owns it on the desk. So do you agree? Is it a top pick? O'Leary loves it. Do you?
I think if we look at it in the context of the other large cap technology names, it is one of the ones that you could argue is attractive, and it's still very controversial. The multiple is lower than we're seeing on some of the other names. Still plenty of opportunity play into those small businesses, although small businesses are hurting. But I think to the extent that we get a recovery in small business, that should only help the ad spend happening there at Facebook. And then also, if they're able to figure out how to monetize actual selling product through the website or through the site, I think that would be even more powerful. So I don't think it's a terrible idea. And I think in the grand scheme of things, when we look at the other names within the group, this one doesn't stand out as being one of the most extended names.
Is Pete, no one worried? Should we be worried about potential regulation, breakups of Facebook and some of these other names now that the Democrats are going to control the Senate, albeit, you know, it's 50-50, and Vice President Harris is going to end up breaking ties on actual votes of legislation and things like that. Is it a worry or no?
I don't think it's necessary. It's a little bit of a concern, Scott, but I don't think that's going to happen. And I think that, you know, obviously there's been a lot of conversation about that going on, obviously, throughout the entire this past year, as far as getting towards the election and what might happen. I really don't think they're going to be able to make these companies break up. And if they do, Scott, quite honestly, in some ways, they might actually create even more value. So I think the interesting thing is when I look at Facebook specifically, and you look at it trading, to Brenda's point, a little bit less expensive than some of the others, it's got a forward of 25 times. They got great cash position, and they get incredible cash flow. They continue to go into different verticals all the time. Now, I think that's a great business model. I think Zuckerberg's been absolutely an artist in how he has done the acquisitions that he has accomplished over the number of years. And by the way, it was not just during this previous administration. It was before that as well. They've made over 80 acquisitions since they went public. So there is a lot to this story here in Facebook, and I think there's still plenty of upside. It's kind of hit that pause button. I actually am very excited about Facebook for this year.
Kev, I mean, what about the idea of increased regulation on big tech as a result of not only Biden's win, but the Dems controlling Congress? And then if you want to throw into the mix, too, fallout against some of these social media companies for, you know, being maybe accomplices is probably too strong of a word to use, but certainly vehicles to foment anger and hate, which in some respects may have helped lead to what we witnessed so shockingly on Wednesday.
Yes, that the freedom of speech and expression issue makes heads explode on both sides of the aisle. But, you know, the cost of free speech has always been the 1% lunatic fringe. They get a voice, too. And that's a huge debate that I'm sure we'll get into. But in terms of regulating Facebook or Google, I think the Dems, when they get in power next week or whenever it is, the next 15 days, their slate is full. First of all, this 100 million vaccines the first 100 days, that's a massive logistics problem that will be on Biden's mind every night. He'll be looking at those numbers just like Lyndon Johnson looked at death tolls in Vietnam every night. It's going to be the same kind of situation. So very much focused on getting the country back on its feet. The chance of tax increases, I don't see it in the first 24 months. And then we have the election again, and he'll lose some seats in the House, as every incumbent does. So I think we're setting up here for a time that, and I would argue one other thing that we haven't really talked about with Facebook, and this is anecdotal data, but I've got enough companies buying Facebook now that it represents 80 cents of every dollar for small business in America because of geo-locked advertising. If you were to any way harm Facebook, you would be destroying small business in America right now. It's not going to happen anytime soon because it is the way they survived 2020. It is the way they're surviving 2021. Basically, you know, 30% of small business went to zero because they were involved in sectors that you couldn't fix or preference changed with consumers during the pandemic. But the other 70% are running on Facebook and Instagram and, frankly, the other social media platforms which many people want to vilify. Meanwhile, back at the farm, people are feeding their families with these social media platforms selling direct to consumers.
Speaking of farms, Farmer Jim. Thank you, Kevin O'Leary. Perfect segue. Microsoft named the top pick at Oppenheimer, which you own. I want you to opine on that one, not Facebook. I want to move on.
Yeah, okay, thank you. You know, but Microsoft, very similar to Facebook, very similar to Apple, very similar to Google. What do I mean? Obviously, they're large. Obviously, they're technology. But their valuations are, in my opinion, absolutely fine. We're looking at companies, all four of those, mostly around 28, 30 times this year's earnings. This interest rate environment, and most importantly, for the growth that Microsoft is putting up there. You know, that PEG ratio, I don't have it right at my fingertips, but it's a very attractive PEG ratio. So those names, Microsoft, Apple, Google, Facebook, those aren't the ones I'm worried about in this market. I think they're growth at a reasonable price, Now, some of these things, I'll say it, you know, look, Tesla, you know, even still Zoom, some of these stocks at those multiples, I just find them untouchable for me. I'm perfectly fine having some GARPy names, and you know I have my value names, but these hyper-growth, hyper-valuation names, I just can't touch them.
Man, you say Tesla like it's a dirty word, Jim.
Well, you know what? I guess it's me feeling guilty, right? I mean, let's be honest. I don't own it. The stock's up, what, eightfold in a year? I mean, it's up another 5% today. What is that? Another General Motors market cap just today. I can tell you that what I just said, the last 10 seconds, makes no sense whatsoever. But you can tell me, and you probably will, but Jimmy, you've been wrong the last few months. So the anxiety you feel, that's what it is.
I mean, I'm not saying that the move, it's not for me to say whether the move in Tesla is justified or not. Back to polyhepatia on Tesla. Here's Chamath, what he told me yesterday. We got a couple people who own the stock, so let's hear from him again. He's bullish.
The big disruption that's coming is to power utilities. There are trillions of dollars of bonds, of capex, of value sitting inside the energy generation infrastructure of the world that is going to go upside down. And when that goes pear-shaped, Tesla will double and triple again.
Degas, you certainly hope so since you own it.
Scott, and I agree with that because you can't really look at Tesla as an automobile company. That's the wrong way of looking at it and the wrong matrix. So as we start looking at it, and we took a while to get there with Tesla, but what's occurred, we started really digging into understanding the full business model of Tesla. Automobiles, EV is one aspect, but as he just mentioned, power generation. They have the Gigafactory 1 in Nevada is actually at a zero net energy. So it's not adding any emissions to the environment. And this is one of the first time it's been able to be done from a factory from the ground up. So they produce the batteries and the automobiles. So, and we really like this. If you think about Tesla, back in June of 2019, they were still at a negative 46 cents. The last quarter, they actually surprised, and it was actually 27 cents to 22 cents, the Wall Street. So they've actually went from a negative position in their EPS to a positive position. And as we know, they're up a significant amount. They're at $770 billion in market cap. So I think it's more than just automobile. It's the EV, it's the batteries. And as he just stated, as that market comes to bear, Tesla is going to be in the forefront.
Okay, that's fair. You're not,
Scott, can I say something?
Yeah.
Yeah. Look, you played Chamath. That was yesterday. Stock's up 7.5% today. It's $50 billion worth more today since Chamath said that. So Chamath's already in the picture. We got $50 billion. I am telling you, that is not a fundamental move. I don't know what you want to call that move. It's not technical either. It's froth. It's mania. Today's $50 billion is not fundamental. Degas is right. I love his analysis. I'm just saying that's not why it's up $50 billion in market cap.
All right. I mean,
today.
look, it's up 1,100%, Kevin O'Leary, since the March low. So what do you own it, right? I mean, what do you do with it? What do you do now?
You know, when you get a stock like this in a portfolio or in a mandate, it's a disruptor. It's a wonderful thing to see happen, but it causes chaos in portfolio theory. So in my case, I can't have a stock more than a 5% weighting. I bought this stock at $263 3 years ago, I think, before all the splits, and I have been a net seller practically every week. because of that mandate. So I can't tell people to buy it. I'm selling it all the time, trying to keep it within the mandate. But, you know, you got to think about something here. You can't value it as a car company anymore. Everybody knows that. So you're really buying into a new world vision. And there are people that are willing to do that, not just with Tesla. You're the same. If you're buying Bitcoin, you're doing the same thing. And you've been rewarded for it. But at some point, we all know Icarus flies too close to the sun, and the wings melt off, and poo-poo happens. I don't know when that's going to occur. I won't care. My cost base on Tesla is 0. And I've left so much on the table, I don't even think about it anymore. But at the end of the day, portfolio theory guides me because I'm a guy that's lived through ups and downs, and I have to protect my hiney. So 5% max, and when you get a disruptor like Tesla, you cry every day as you sell it down.
Pete, give me no more than 45 seconds. How do I protect my Tesla if I'm in it?
Well, you absolutely can do it through options. As a matter of fact, some folks, I think, are doing this exact trade that I'm going to describe, which is stock replacement, Scott. They're actually selling out of their stock because of these unbelievable runs that Jim and Mr. Wonderful are describing right now, and actually putting themselves into options. We see that trade all the time. Also, the one other way, Scott, would be just to protect it through puts. Yes, they're going to be expensive, but that's insurance that's well worth it because of the rise that we've seen in the stock, the acceleration of this move in the stock. I think that that's a very, very prudent way to try to play it, and that way you can hold on to the money that you've already made in the stock.
Okay, good stuff. You listened to the timing cue, too. I appreciate that. All right, we'll take a quick break. We'll come back. Energy stocks are surging this week. How the investment committee playing that sector. We'll talk about it next. And don't miss a big interview with us on Monday. Double Line CEO Jeffrey Gundlach. It is a halftime exclusive, has not been on since April. It's been 9 months since we've heard from the Bond King out west. We're looking forward to Monday. Should be a big show. We're back in 2 minutes.
Interactive Brokers charges 1.59% for a $100,000 margin loan. Do you know how much your broker charges? Upwards from 6.82% at Fidelity or Schwab to as high as 7.45 to 7.75% at E-Trade or Ameritrade. Move your account to Interactive Brokers and save at least $5,200, or much more if you're trading big bucks.
At C3.ai, we're solving previously unsolvable problems. Inventory optimization, predictive maintenance, anti-money laundering, operational readiness, precision healthcare, energy management. C3.ai is AI built to transform your business at its core. C3.ai, this is Enterprise AI.
Surging COVID and transitioning government. The president-elect has said 100 million shots in the arms in the first 100 days. That's the goal.
It's going to happen gradually.
For the first time, he's acknowledging that there'll be a new administration.
That was Donald Trump finally, for the first time, conceding. It was also the kickoff of 2024.
Hopefully, calm returns. Hopefully there's hope.
The facts, the truth, the news with Shepard Smith. Weeknight, 7 Eastern, CNBC.
Egypt Cancer Network is a U.S.-based nonprofit organization that supports the treatment of pediatric cancer patients for free at the Children's Cancer Hospital in Egypt, 57357, the most advanced pediatric cancer hospital in the region, providing free cancer treatment to thousands of children. Please call 877-573-5757 or go to EgyptCancerNetwork.org to make a donation now. Your tax-free gift can save the life of a child battling cancer. Help us bring their laughter back. Donate today.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
Welcome back, everybody. I'm Sue Herrera. Here's your CNBC News update at this hour. In a reversal of the current approach, transition officials say that when he takes office, President-elect Biden will release most of the available COVID vaccine doses so that, quote, we can get more shots in Americans' arms now, end quote. The Trump administration has been holding back doses to make sure those getting the first shot will also be able to get their second shot 3 weeks later. The combination that has been tested and shown to provide very strong protection. Deutsche Bank will be paying more than $100 million to settle charges it violated U.S. anti-bribery laws as it sought business in China. And the pro-Trump crowd that caused extensive damage outside the Capitol building on Wednesday also targeted news equipment that had been abandoned by fearful technicians outside the building. This video was shot by a reporter for the NBC station in Washington. And Tommy Lasorda, who managed the Los Angeles Dodgers with great passion as they won 2 world championships, has died at the age of 93 after a heart attack. You are up to date. That's the news update, Scott. I'll send it back to you.
Gonna miss Tommy.
Yeah,
Gonna
absolutely.
miss Tommy.
Grew up a Dodgers fan in L.A. He was amazing.
I grew up a Dodger fan, not in L.A.
Right.
And I still am today, and largely because of Tommy Lasorda's teams through those years.
Inspirational.
Going to be missed, for sure. Sue, thanks.
You got it.
All right, let's talk about the market again. Energy is the top sector this week, gaining more than 10%. We've got some ownership in the group, too. So, first of all, Brenda, do you think it's sustainable as oil moves towards $52? And a stock like Chevron, which is in your book, can it work in that environment? 3 months, it's up 21.5%.
Yeah, I think, there's a call out there, and it's legitimate, that renewable energy will eventually become much more viable and much more widely used, and it continues to grow. But I think we can't ignore the fact that 56% of oil demand comes from transportation, and we are going to see a recovery in transportation at a global scale. And so that will drive more demand. Meanwhile, much of the supply has been coming down. So I think we will have a period of perhaps sustained supply-demand imbalance, and that could certainly continue to move prices higher, and it could continue to cause investors to look towards the energy space to finally add some exposure if they haven't had any. So we've been in Chevron. We continue to think it's a safer way to play the group. They have been very financially conservative, I would say, in the group, and we continue to like that about the company. But I think overall the group could work for a more sustainable period of time.
All right, so Pete, energy's up 9.5% this week alone, okay? Chevron got upgraded today to overweight from neutral. That's at Piper Sandler. You own Chevron. You own ExxonMobil as well. And I'm just curious, your thoughts here, given the environment that we're in and really given this move that we've already had, as people are thinking about, I wonder if our viewers are starting to think about whether energy really does have some legs and if it's going to be one of the surprise leadership groups of 2021.
I think it could be a surprise leadership group in the early parts of 2021, Scott. I think I'd be very cautious. I'd be very careful. I'm long, as you said, Chevron and Exxon in terms of stock. I also have some of those beta names on the call side, and that has been some of the better trades that I've had, because if you go back to November when this really started to really kick off, it's been an amazing run. I mean, we talk about just this week, but even go back to November and take a look at how fast this has moved. The price of oil obviously moving from under 40 back now up, as you said, about near 52. So a really dramatic move in the price of oil, and you're starting to see a little bit of the catch-up from these stocks. I do think there's more upside, but I would be very cautious and say you've got to be on your toes. You've got to be understand that the run has already started. So you better understand that half of this run, I think, is already over, and you got to be a little bit more careful as we extend through the first part of 2021. I don't say that I think 2021, the entire year, is going to be for energy. I think sooner or later we'll see that start to slow down on the price of oil. That'll bring back some of these stocks a little bit.
Okay. Interesting thought. Degas, so you own Chevron and you bought Ameresco. Tell me about Ameresco, since we got the Chevron story out already from the others.
Right, so Ameresco. So this is a play on infrastructure and sustainability. What Ameresco does is that if you think about retrofitting facilities, and they also do power generation, they actually construct and operate power generation plants, energy plants. And so that's their business, and that business is booming. They just recently signed a contract with the New York City Housing Authority for over $100 million to retrofit about 15 of their developments. And over a 20-year period, that's going to just save the authority some $100 million. So outstanding positioning for this company. And also, it's a small cap company, about $3 billion in market cap. And it's been surprising on the upside. It actually had the last earnings surprise was about 52% from a 38 cents to compared to 25 cents for the street. So once again, growing revenues, surprising on the upside, in the right market infrastructure investment. We've been talking a lot about that, and sustainability.
Okay. Kevin O'Leary, you know, it's really a tale of two conversations, I think. Whereas you can be, and I know you are and have been, sort of negative on fossil fuels, right? But the flip side of that, and it still falls under the energy umbrella, is clean energy. And we know that a Biden administration is going to make a huge focus in that area. Do you play it at all? And if so, how?
You know, let's go back to hydrocarbons, because energy is not energy anymore. When you go, and you know, I'm in the indexing business with O-Shares, so I'm always, as the chairman, trying to help the company license its indexes or talk to pension plans or sovereigns so that they take on an allocation of an index like OUSA, which used to hold in it Chevron and Exxon and Schlumberger. And I saw this for the very first time back in Q3 last year. I've never seen this before. You're sitting down with the investment committee of a large pension plan or a state pension or university pension. This happened multiple times. And because you have to be totally transparent, your index is right there on Bloomberg. They can see the weightings in every name. And they immediately say, oh, you have Exxon in here. You've got Mobil. You've got Schlumberger. We don't touch that. We don't get involved in hydrocarbons. And I'm saying, wait a second, these things are fantastic balance sheets with wonderful distributions. No, 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 no. And so I got tired of getting beaten up like that. I don't own any of this stuff anymore because the incremental buyer, Scott, the institution, the sovereign, the pension plan, is not going to buy that stock from you. The PEs on these companies over the next few quarters are going to continue to compress, even though earnings get better because they're getting much more disciplined on CapEx. It scares me. I've never seen a wonderful sector like energy get turned into kryptonite and toxic waste like the way it's being turned into it now. And that was before Biden got his mandate. Can you imagine what it's going to be like next quarter?
Yeah, but I mean, that's why clean energy is the place to be, though, right?
Well, I have another problem with clean energy. I like to make money. So, you know, I'm looking at, I want strong balance sheets not laden with debt and having strong cash flows that are growing. You're not finding that in clean energy yet because we're still in the experimental stage. Solar's getting better, but if you strip away the state and federal subsidies, you're not making any money. So we're in that transition period. Personally, I don't have a problem owning hydrocarbons. I will never utter the word Chevron again in an institutional meeting. I swear I'll disown it like I never even knew what it was. And that's what's happening out there.
Okay, up next, Pete has some new trades for you in unusual activity. And as we go to break, a check on the S&P sectors today. We'll be right back.
What do I do when my love is away? Does it worry you to be alone? How do I feel at the end of the day? Are you sad cause you're on your own? I can't find a little help from my friends. So I'm gonna try a little help from my friends.
You know what's making Sarah's migraine worse?
Okay, let's table that.
But you know what gives her some relief? Using ZocDoc to book a video visit.
You'll get the prescription this afternoon. Does that work?
Yes!
Oh!
ZocDoc makes healthcare easy.
The future of fitness isn't dumbbells. It's revolutionary digital weight that learns as you get stronger so you can be your strongest. Visit Tonal.com.
Dinner, a constant struggle. Wasting time buying food you don't need. Life getting in the way of eating well. Unable to satisfy your picky eater. Stuck in a rut making the same recipes over and over again. Hit refresh with HelloFresh this year. Pre-portioned ingredients, step-by-step recipes, delicious meals that everyone enjoys. Ready to change your routine?
Hit refresh with HelloFresh. Use code TV10 for 10 free meals, including free shipping.
When other price reporting agencies said U.S. oil was worthless, I said S&P Global Platts is worth a closer look. That's why for 2021, I need my PRA to exercise a sense of judgment and context.
Marcus Lemonis explores the unique industries that define America's most iconic streets.
What happens in Miami never happened.
Streets of Dreams with Marcus Lemonis. All new Tuesday, 10 Eastern. Set your DVR now. CNBC. Get yours.
All right, we're back. Unusual activity. Pete?
Yeah, Scott, I'm going to start off with MGM. Now, this is a name that earlier in the week we had some call buying in MGM as well, and they were buying the January 31 strike calls. Today, they're buying the January 31 strike calls. And it's pretty aggressive because they bought over 7,000 of these calls, around 75 cents at the time. Stock was below 31. And, it only takes a little bit of movement for these to actually start to move to the upside. They're already starting to move to the upside, Scott, and maybe there's a little bit more. I'm going to be in this for at least the next couple of weeks. I love seeing this kind of a trade. We usually see Wynn. We see some of the other names, but MGM's a little bit more of an unusual for us as well. Secondly, let's get to the material space. We've been all over this, been talking about this since November. It's been Freeport. It's been U.S. Steel. It's been just about every one of those different names in the material space. Vale has hit on multiple occasions. It hit 5 times just in the last couple of weeks. But today they're buying the February 19 calls. They bought 39,000 of these calls, Scott. So aggressive positioning there as well. I'll be in those. I added to an already position that I'd already had from other unusual that we've seen in the past. And this is another case where I think we can continue to roll up to the upside because this is an area that just continues to grow. And I think the material space, if you believe in the industrials, you've got to kind of like these materials even a little bit more. I think they're in front of it and they continue to move to the upside. I like this Vale trade a lot.
All right, good stuff, Pete. Thank you. Pete Najarian. Up next, the investment committee unveiling their top picks for 2021. We're back in just 2 minutes to do that.
We're thrilled to be one of the first tech companies in the United States to go public since the pandemic. ZoomInfo is here today for one reason. Not giving up is embedded in our DNA. We used our platform and 20 years of go-to-market expertise to drive value when our customers needed it the most. We are resilient, this country is resilient, and we will all move forward together.
Hey, you. Yeah, you.
I opened a SoFi Money account, and it was the first time that I realized I can be earning interest back on my money.
I just discovered SoFi, and I'm an investor with a diversified portfolio. Who am I?
I refinanced my student loan with SoFi because of their low interest rates.
Thanks, SoFi, for helping us get our money right. Thank you.
Night, buddy.
Sleep soundly tonight from the brand that more families trust for quality and timeless protection, ADT.
Get an edge. Invest like a pro. Access CNBC's live streams around the globe. Unparalleled access to CNBC experts. Actionable investor insight and ideas. Start your free trial today at cnbc.com/pro.
I was having night terrors. I wasn't sleeping. I'd seen BetterHelp ads, and I was like, I should give it a shot. I was paired with a really good counselor. I feel hopeful for the first time in a long time.
I have 5 incredible choices in front of me, but I can only choose one. Do I go with the mysterious one, the funny one, or the one every girl's trying to get her hands on? I'm torn. Unless, is one longer than the others?
What?
This one is gonna keep me up all night. Book of the month, find the one.
Managing your money can be hard, but what if there was a secret financial control center that helped you organize your spending, manage unwanted subscriptions, and lower your bills? Download Truebill, your all-in-one finance app.
All right, we're back. The investment committee, as I said, unveiling their top picks for 2021. Let's go to Brenda first. Brenda, Booking Holdings and Boeing. Talk to me.
Yes, we like both of these names. Booking Holdings, we think, is a way to play the return to travel and leisure activity, and it's with a very low-cost business model and very tech-centric. So we think there'll be plenty of leverage when people come back to that business, which we think is likely. People will stop spending on their homes, will start spending on travel, dining, etc. Boeing is a controversial name, but we have seen the news become more incrementally positive. We've seen several contract wins. We also got clarity more recently from the DOJ penalty. So I think that'll pave the way for more people to begin to step into this name, because we do think that there will ultimately be a recovery in the business. The stock is still significantly depressed versus where it was even pre-COVID. So we still think there's plenty of upside there.
Okay. Degas, Upwork and IDEX Labs?
Yes, these two stocks are really making a play on what's happening with our economy. Upwork is actually the freelancer's way of working anywhere on the globe. And we really like this company because it's getting into that, what we see as the trend going forward. And so we purchased this firm. This is a small firm, about small cap firm, about $4 billion. We like the fact that they also did something for the community. They actually gave warrants to a nonprofit that will benefit as the price of the stock increases. And then they can do the good work in the community as it relates to increasing technology education for students in their community. So we really like the business model around this. And we think this is a stock that really outlines how we will work in the future. This company allows, it's in over about 180 countries, and it's doing a great job of letting you work anywhere. IDEX. IDEX is in the healthcare, but healthcare for pets. And we joked about the fact that a lot of people are getting pets now, given the pandemic. Well, that's not going to go away. And IDEX does a great job of positioning. They have been surprising on the upside on their EPS and also on sales. So they're actually generating more sales in this pandemic market. As we come out of the pandemic, they're going to continue to do well. Plus, when we look at their valuations, they're very favorable valuation, and profitability is very positive for this particular company. So we think both of these companies would do well into 2021.
Okay. Brenda, I realize you didn't really give us anything on Boeing, but rather than have you pitch the stock, let's do it this way. Kevin O'Leary, I know you don't like Boeing, so why don't you tell us why, and then we can have Brenda with the rebuttal.
Well, I don't like airlines. I don't like Boeing. I think they get captured in the same sentiment in terms of traders. I think what's going to happen by Q2 of this year, your heart's going to be broken on business travel. There's an assumption underlying the vaccine rollout that all of a sudden people are going to travel for business again and entertainment. Not going to happen. I'm seeing budgets now for small private companies being slashed 20 to 50% right through the end of the year, 2021. I don't think we're going to bring back business travel for 5 years, maybe longer, because it's a waste of money. You can do it using technology instead. And so what's going to happen, and I'm using Jets, which has a basket of all the airlines whose balance sheets have been turned upside down. Even though they've gotten grants from the government, those are the worst balance sheets they've ever had. And Boeing's also put on a lot of debt, too. Now, Boeing itself also has a defense business, but I think what's going to happen is the airlines correct, and some may even have to go bankrupt into consolidation unless they can find a way to get travelers, to Disneyland for $39 or whatever they're charging for those seats. It's a miserable space, and it just hasn't manifested itself with the numbers yet. I hate the space, and I think Boeing goes down as a result. Hey, that's what makes the market.
Okay, so last word to you then, Brenda.
Well, I think the last word I'll say on business travel is I think sentiment has become overly negative on business travel. But I think it will be interesting to see what happens, especially in sales-related business travel. Which company goes and actually visits the client in person, and who actually gets the sale? And the minute someone loses a sale because they didn't go in person and they had a virtual sales call, I think that's what's going to drive more business-related activity. So I think there could be more of a turn in business-related travel than what's expected right now.
Okay, we'll take another quick break. We'll come back with more trades. We'll do it next.
Enterprise artificial intelligence has the power to transform the most complex organizations and the world, delivering medical supplies where they're needed, keeping our armed forces at the ready, cleaner, safer energy, all thanks to 1 billion predictions per day. C3.ai is AI at a global scale, harnessing the power of data to build a better future. C3.ai. This is Enterprise AI.
I do about 400, maybe 500 joints a year, and I've seen every possible complication. I've seen every bad outcome. And you look at the way we do joint replacement surgery, it's pretty much the same way that we've been doing it for 40 or 50 years. There are technologies that are maturing that can really change the way that we do orthopedic surgery.
Monogram is the future of orthopedics. Visit thebonebot.com to learn more. That's thebonebot.com.
Nowadays, there are two things you can't live without in your vehicle: your phone and hand sanitizer. But they never seem to stay put. Now there's the perfect place for both. The WeatherTech Cup Phone hand sanitizer holder. With removable cups, the Cup Phone fits in virtually any vehicle and holds virtually any phone. It's the easiest way to keep your phone secure and your hands sanitized. The WeatherTech Cup Phone hand sanitizer holder comes with 2 bottles of Purell hand sanitizer. Order at WeatherTech.com.
When other price reporting agencies said U.S. oil was worthless, I said S&P Global Platts is worth a closer look. That's why for 2021, I need my PRA to exercise a sense of judgment and context.
It's time for the Futures Outlook and a plan for the week ahead. Scott Nation's helping you prepare.
Futures traders will have lots of interesting data to trade on next week. Most of that's going to have to do with fixed income markets. And earlier this week, we saw the 10-year Treasury yield finally climb above 1%, something it has not done since March. The best vehicle for trading interest rates is the 10-year Treasury futures contract. The ticker symbol for that is ZN. The front month is currently March of 2021. Each contract represents $100,000 face value of the 10-year Treasury. Contract is priced in points, 30 seconds of a point, and then halves of a 30-second. That means that each full point is worth $1,000 and each 30-second is worth $31.25. Well, given the fact that rates are increasing, that means that the price of the future is decreasing. I'd be a seller, and I'd be selling that March contract at 137.16. My target, once I'm short, would be 136 even, and my stop to the upside, we're always going to trade these with a stop, is 138 even.
All right, our thanks to Scott Nations for that. We'll follow up, of course, on the trade after the data comes in. We'll do final trades next.
Futures Outlook is sponsored by CME Group and Interactive Brokers.
Every era presents its own unique set of challenges and opportunities. Trade CME Group futures with Interactive Brokers at low cost and seize the moment. A single integrated account gives you access to the world. Navigate evolving markets with confidence using Interactive Brokers' cutting-edge technology and powerful analytics platform. Interactive Brokers, now offering CME Group Micro E-mini futures contracts with small size, puts you in command. Start investing today at interactivebrokers.com.
No one likes to choose between safe or sporty, modern or reliable. We want both. We want a hybrid. So do banks. That's why they're going hybrid with IBM. A hybrid cloud approach helps them personalize experiences with Watson AI while helping keep data secure. From banking to manufacturing, businesses are going with a smarter hybrid cloud, using the tools, platform, and expertise of IBM.
Options Action. Strategies from the street's top traders. New opportunities to profit from the market's hottest trends. Options Action. Today, 5:30 Eastern, CNBC. Sponsored by Thinkorswim by TD Ameritrade.
Peacock has The Office. Office parties, office weirdos.
Ever seen a foot with 4 toes?
The Office. Every episode, extras, and exclusives. Streaming now at peacocktv.com.
No more waiting. This year is gonna be different. My New Year's resolution, get happy.
Managing your money can be hard, but what if there was a secret financial control center that helped you organize your spending, manage unwanted subscriptions, and lower your bills? Download Truebill, your all-in-one finance app.
Hey, can you adjust my strap? Girl, you need Lively. Front adjusters. Mom, you need Lively. Rollable, no-wire bras. Babe, you need Lively. J-hooks. It's not just a bra, it's a movement. All bras for $35 at wearlively.com.
When the market is unpredictable, BAM gives you certainty. In the face of market volatility and illiquidity, BAM-insured municipal bonds deliver default protection, value preservation, and a durable rating. BAM. Build America Mutual.
The Rocket Mortgage Super Bowl Squares Sweepstakes is back. Every time the score changes, someone will win $50,000. Touchdowns, field goals, extra points, 50 G's. Plus, $2 500,000 prizes. Put it toward a dream home. One way to enter, 2 ways to win. Squares is back. Sign up for free at RocketMortgageSquares.com. Rocket Mortgage, official mortgage sponsor of Super Bowl 55.
It's hard work building a successful business. So make sure your payments platform is working just as hard. Adyen opens the door to innovative ways to pay, enhanced customer experiences, and new business opportunities, so you can focus on what you do best, growing your business. Stay a step ahead with the payments platform that adapts and evolves with you. Adyen. Business, not boundaries.
MoonPod, a breakthrough in relaxation that's quickly becoming the world's most popular beanbag. Our custom zero-gravity bead technology acts as your personalized cushioning system. MoonPod is the most comfortable place in the universe. Try yours today at moonpod.co.
At C3.ai, we're solving previously unsolvable problems. Inventory optimization, predictive maintenance, anti-money laundering, operational readiness, precision healthcare, energy management. C3.ai is AI built to transform your business at its core. C3.ai. This is Enterprise AI.
3 meetings and 3 stops today. There's just never enough time. If you've ever considered flying private jets, you have to check out One Flight's badge. The badge makes searching and booking private jets as simple as booking a hotel. Just type in your location and find the closest airport. Then choose from over 4,000 jets in one place. When I land, there's always a car waiting for me, courtesy of One Flight. What's your time worth? Badging.
Another reminder of our exclusive on Monday, the Double Line CEO, Jeffrey Gundlach, joining us on halftime. We'll get his take on the record rally, rising rates, whole bunch more, as we always do with Jeffrey Gundlach. Looking so much forward to that. Let's do final trades. We don't have much time. Kevin O'Leary, your 2021 top pick is your final trade. You got to be quick, though, real quick.
GLD, hedge against inflation. And if you can't ride with the Kryptonians, it's worked in the past.
Okay, Brenda?
CVS Health, well positioned within the healthcare industry and driving costs lower.
Is that the same as yours, Jim?
I'm with Brenda. She's smart. I'm with Brenda.
All right, Pete?
I'm going to give you Billy, Chinese online entertainment. I think it's going higher.
All right, Degas, lastly and quickly to you.
Yeah, ChipMed, making boomers aging, hospice care, millennials buying homes,
All right.
Roto-Rooter.
All right, good weekend, everybody. Thanks for watching The Exchanges now.
Thank you, Scott, and hi, everybody. Welcome to The Exchange on this Friday. What do you do with Bitcoin now? Famed value investor Bill Miller joins us in just a moment for an exclusive interview. He was early betting on the cryptocurrency, which has soared over $41,000 today. We will get his latest thoughts on crypto, crude, and more. Plus, corporate debt relief is an economic dud. That's what former FDIC Chair Sheila Bair says in a new op-ed. Why? And what should the Fed do instead? We'll ask her. And the disconnect between soaring stocks and the individual investor. Should you pull back on risk or not? We'll explore all of that ahead today. But first, let's get the latest market moves. Dom Chu here with more on that. Hi, Dom.
All right, so Kelly, on this Friday, we should at some point pull back from record highs, but it won't be today. The Dow is modestly lower, but for the S&P 500, still holding above that 3,800 mark, and for the NASDAQ Composite over that 13,000 mark. By the way, modest gains here for the S&P, outperformance in the NASDAQ, but both of these get gold stars because they both hit record intraday highs at some point in trading today. Take a look at one of the other themes developing right now. Look at these reflation or economically sensitive type stocks hitting record highs. Every one of these has hit a record high so far today. Target, speaking to the consumer perhaps. Applied Materials, a leading indicator for the semiconductor chip business. BlackRock, the world's biggest asset manager, up on the day as well. And Fastenal on the industrial side. All of these stocks have made record highs today, so perhaps a little bit of commentary about where investors think that economically sensitive part of the market will go. Still to the upside at this point. We'll see if it pulls back at some point. And then you mentioned Bitcoin. I don't even know what to say about it right now. It's 41,144 in coin metrics, the last trade there, up by about 6%. It's been a fairly volatile trade intraday so far today, though, but still, these moves higher. At some point, it will come down, but right now, Kelly, for those people who follow statistics out there, it is now about 3 standard deviations above its 50-day average price. For those of you that don't follow statistics, it just means it's a very, very rare occurrence for it to go this high this quickly. The overall market cap for Bitcoin now over $1 trillion. This is something to watch. Kel, I'll send things back over to you.
Yep, Bitcoin and all the other cryptos. Dom, thank you. It's exactly where we're going to pick things up right now, Dom Chu. One big believer in Bitcoin for years now has been Bill Miller of Miller Value Partners. In his latest newsletter to investors, he wrote, Warren Buffett famously called Bitcoin rat poison. He may well be right. Bitcoin could be rat poison, and the rat could be cash. Joining me now with more on crypto and his broader investment strategy for 2021 is Bill Miller. He's the Chairman Chief Investment Officer at Miller Value Partners. Bill, it's great to have you back. Welcome.
Thanks, Kelly, and nice to be back.
I, in some ways, think you kicked off this whole thing in early November. You were on this program. We talked about a number of different things that day. I asked you about Bitcoin because I know you've been a bull on it for some time. But at the end of the interview, and this was when Bitcoin was just under $15,000, I think, I said to you, of all of the things we've discussed, you know, what are you most excited about? Or is there an emerging technology that you're excited about? And you said, I'm most excited about Bitcoin. Are you as excited today, Bill, with it at 41,000 as you were when it was under 15?
Oh, absolutely. One of the things that's interesting about Bitcoin is that it gets less risky the higher it goes. So that's the opposite of what happens with most stocks. But because Bitcoin is so early in the adoption cycle, and you can't, even though the OCC will allow all the big banks and investment banks to custody or to buy and sell Bitcoin, you can't do that at any of them. So they're permitted to, but they haven't done it yet because basically I think they're concerned. But every day, Bitcoin's a supply-demand story. There's 900 new Bitcoins created every day. It's estimated that PayPal and Square alone are buying, their customers are buying all of those. And Bitcoin's total supply is growing less than 2% a year, and it's obvious by the price that the demand is growing much, much faster than that. So as long as that obtains, Bitcoin is likely to go higher and perhaps considerably higher.
How much higher, Bill? Because one of the questions, there's this kind of the two sides of the same coin people are asking right now. The ones who have been in Bitcoin are saying, okay, you know, am I getting too greedy? Is it time to sell, take a little profit? The ones who haven't been in are similarly asking, do they wait for the inevitable pullback? You heard what Dom said, we're 3 standard deviations moves above normal. Do they wait for the pullback if they want to buy some? What would your advice be?
Well, so Dom makes a good point that, you know, 3 standard deviations is fairly extreme. But the issue is, though, when Bitcoin has these moves, as it did in 2017, you go to those levels of standard deviation because Bitcoin tends to move in spurts, which tend to be followed by corrections. I think there have been 3 corrections of 80%, which is normal in this type of very, very early technology with a very, very big total addressable market. But for those people who were waiting for the pullback, they got it in the first quarter. I mean, you could have bought Bitcoin at, what, $4,000 or $5,000 in the first quarter, but the nature of almost any correction is that when things correct sharply, the stock market went down 38% because of COVID, and if people were waiting for a correction to buy, they weren't buying, they were selling. So that's what typically happens, is that once things correct, those that are waiting for the correction then are waiting for the correction to keep going lower, and then when they miss it on the upside, they're waiting for, they're asking if they should buy it.
Bill, so one of the ways that which you've made this analogy for years now with Bitcoin and why you think it's attractive is starting to play out this year. You've likened it to the market cap of gold, said if people start to hold it akin to gold, it could have huge upside. You've also said, and we've seen this as well, that people are putting their cash in. Even John Najarian on Halftime Report, I mean, that's been one of his strategies, is holding some of his cash in Bitcoin. So those, you know, those two factors have been part of the argument. But I don't know if you saw last week, JP Morgan, which a few weeks back had put out a note saying, to your point, you know, that if institutional investors put just 0.5% or less than that of their portfolios in Bitcoin, we're talking about, you know, it doubling, and it has since they wrote that note. Their latest note, they say they're not so sure that further upside is sustainable. They say that it's more volatile than gold. It behaves differently. You know, you can't just assume that all of these institutional players are going to pile in to that extent. So is that argument kind of running its course? Have we already seen most of the upside that's going to come from people and the huge big money players getting involved with Bitcoin, or do you really think that it's sustainable much higher from here?
Kelly, the Fed has told you that they're going to pin interest rates at 0 for the foreseeable future. And we just hit inflation expectations, or the break-even inflation rate just crossed 2%, which it's only happened 2 quarters in the last 10 years. And so if you look at that, if you hold your money in cash, it's a guaranteed loser by at least 2% a year. So taking some portion of the cash balances that people have in their savings or that companies have on their balance sheets, especially the big cash-rich companies, that seems to me a no-brainer. I mean, if you put 1 or 2% of your cash into that, I mean, you can afford to lose that if Bitcoin happens to be an ultimate failure. I don't think it will, but nonetheless, you can still afford it. But what you can't afford is to have your cash balances eroded by 2% a year or more if the Fed keeps interest rates pinned at 0. And as I think Larry Lindsay might have been talking about earlier, wage inflation starts to really heat up. So I think it's more a risk management strategy than anything else to have a little bit of money in Bitcoin. And Square put 50 million in, MassMutual put 100 million in. Michael Saylor at MicroStrategy has over $1 billion in Bitcoin. He's got all of the company's cash in Bitcoin, and I think that's that may be a bit extreme, but it's no more extreme than having all of your cash as a guaranteed loser.
One more question on this. It's a point that my dad has made time and again, where he says, listen, there's no way federal regulators are going to just let this thing go and go and go. And to his point, in the last month or so, we've seen new guidance coming out that is requiring some of these providers like Square to keep contact information of parties in both sides of a Bitcoin transaction. Now, your point is not that Bitcoin is valuable because it's being used for nefarious purposes, quite the opposite. But is there a risk, a regulatory risk here, that there's no way this thing can just keep going and going without government pushback?
I think, you know, we've had concerns all along about various regulatory actions that could have been taken, concerns about the Chinese potential digital currency, what that might mean for Bitcoin. The problem is, as my son says with Bitcoin, I mean, you can't cut the head off the snake here. It's decentralized. So if the U.S. government tries to put regulations in that are so onerous for Bitcoin, then the people that would own Bitcoin or want to own Bitcoin will just go to other exchanges overseas that are less regulated and that are more opaque. So I think that you mentioned that series of guidelines that came down from FinCEN. There's been, I think, close to 7,000 comments on that. And I think that while that would be negative for Bitcoin, the market clearly isn't worried about it because that guidance came out 2 weeks ago, and Bitcoin has gone straight up since then. So it may be the case that the people in the Bitcoin market, again, I don't know what everybody's thinking, that to the extent that the government tries to do something like this, it just shows that it's more valuable. Namely, it's something that what Bitcoin is trying to protect you against is the sorts of things that happen in Venezuela or Nigeria or Argentina, where the government wipes you out or confiscates your money, or as Franklin D. Roosevelt did in 1932 or 33, confiscate your gold. So I think it's something that you have to expect that it's going to be very, very volatile. And if you can't take the volatility, then you probably shouldn't own it. But the volatility is the price you pay for performance.
So the final point on this bill then is you've kind of ruled out the prospect of a deep correction, said that we already saw that in the first quarter of last year. And because you have to think about this realistically for your investors every day, you know, do you stay exposed, and if so, for how long? What is your price target for Bitcoin? When is Bill Miller selling out, or under what conditions if we're not seeing them right now?
Well, first of all, we own Bitcoin in a partnership that my colleague Samantha McLemore started recently called Patient Capital, and it's about a 5% position in there. But we don't own it in the fund because it's very, very difficult to do that. We're looking right now at the regulatory aspects of that and considering having the SEC give us the go-ahead to do that in our funds. But that's part of the issue on Bitcoin. Bitcoin's got where it is with basically, it's very, very difficult for the average person to access through their normal channels, which is why Grayscale and people like that have done so well. So in terms of a price target, I don't have a price target. I have some price expectations, which I think that Bitcoin from here, anyway, should probably be up 50 to 100% from here in the next, I'd say, 12 to 18 months. And if you were to ask me the over or under on that, I would definitely say it would be much more likely to be higher than lower. But again, I want to emphasize, you said that I thought the big correction was over. I have no idea what the correction is going to be if there's a correction. We've had 3 80% corrections. I think if you can't take that, then you probably should not own Bitcoin.
Well, and to your point, if we're talking about that kind of upside, that would be $60,000 to $80,000 over the next 12 to 18 months. All right, so you're sticking with it. It's a perfect time to check in, Bill, after this extraordinary parabolic move higher that we've seen. So while you're here, let me ask you about what else, if anything, is on par with Bitcoin in terms of your enthusiasm for 2021. But given everything that is kind of underpinning this discussion as it relates to the Fed and inflation and other things, and as we see the 10-year yield go to 1.1% today, what's your advice for investors? Can you stick with growth? Do you have to look to kind of traditional value? I mean, just kind of talk us through how you'd be positioned outside of crypto.
I think that, the so-called growth names or the FANG names have dominated the market for many years. We had a value rotation that began in September of 2019 and then continued till 2020 until the pandemic hit, and then growth came back online again. But since just in the past few months, value has taken over again. Amazon, for example, which has always been one of our largest holdings, is flat for the last 6 months, and the other big FANG stocks have basically, I think, gone sideways. And so I think that we're going to in a value rotation that should probably last 12 months at least. But I don't think that those big growth names are going to go down significantly. I think they may underperform value, but I think the market is broadening out here because the deflationary risks that we've seen for the past 10 years, I think, are done. And now the risks are to the inflation side, which means that the risks are that growth will be higher than people expect, pricing power will be greater than people expect, and the Fed is going to be on hold for a considerable period of time. So that's the recipe for the extension and broadening of the bull market that we've been in.
And you're a stock picker, so what does that mean in terms of, I can imagine some sectors, maybe energy, banks, that kind of thing, but what are the plays?
Yes, I think, banks have underperformed, financials have underperformed. They're outperforming so far this year. They're underperforming today. But they're a big beneficiary of a steepening yield curve, as I wrote in my last two shareholder letters. We've actually begun to buy some energy names. This is quite unusual because I've hated energy for most of my career. The only time we actually went big in energy was in 1986, which was some time ago. But I think right now that the price expectations, or just say the valuation expectations that are built into energy stocks today, are such that there are some opportunities there. And again, owning an energy stock now, the worst performing group of the last 10 years, owning some energy stocks right now does provide you some protection on the inflation side, and it also should, it also should help out on the side if growth is bigger. And the Saudis took a fairly big cut to their production the other day. I don't know how long that'll last, but I think the risk reward in energy is okay and it is solid. And then there's just a bunch of other names. DXC Technology, which is the merger of computer sciences and the old Hewlett-Packard Enterprises. They got a takeover approach yesterday from a French company, and the stock was up about 10%. But that takeover approach, I would expect and I would hope that Mike Salvino, the CEO, and the board would reject, and I would expect them to do so. I mean, this is a stock that was 70 a couple of years ago, and the people expect it to be a secular decliner. We expect it to be at worst flat secularly in terms of revenues, but Mike thinks that they can actually grow, and if they can grow, then it's a $70 name again. So that's a name where it would have to be much, much higher for us to be interested in selling out. So that's one. And then ADT, a longtime favorite. ADT has gone nowhere. It came at 14 and it's about 8 right now. And it is, I think, a great, great company. I mentioned to Jeff Bezos a couple of years ago that they should buy ADT, and they obviously didn't buy ADT. But Google has now come in and made a significant investment in ADT, and it's the largest company in an absolutely essential service. It generates a ton of free cash flow. It's a very fragmented business, and I think there's very little risk in ADT today. And then just two other examples quickly. One is a company called Desktop Metals, DM. So 3D Systems, DDD, is up 150% in the last couple of days. I'm not quite sure why that is, but that's the old 3D printing technology, and Desktop Metals is basically the future of 3D printing and what's called additive manufacturing. So, and they're started by a bunch of MIT scientists. They're ringed with patents, and I think this over the next several years, maybe not over the next several months, but over the next several years will be great. And then lastly, online purchasing of used cars has about a 1% market share, and a company called Vroom, VRM, came public last year, and it was started by the management that was behind Bookings.com, which has about a $70 billion market value. And so we think this one can grow, 30, 40% a year with a capital-light model for as far as the eye can see. There's 42,000 auto dealers out there so that they can take share from. So those are two names.
Well, and we saw ADT spike as you were discussing them. Bill, I have two final questions. The first one is if you're still a big holder of Alibaba, and if so, I mean, David Faber has had to come out with reporting about the fact that he's not disappearing, he's just lying low. I mean, I don't have to tell you about what's been going on there. Do you still have exposure, and would you maintain it here?
Oh, yeah. We think that that's giving you a buying opportunity in Alibaba. I mean, the Chinese government doesn't want Alibaba to fail. They just want to make sure that Jack Ma or whoever's running these companies kind of follows the party line on things. And Jack Ma was very critical of the regulatory system in China, and it was no surprise that they're coming down on him. But that the stock trades now at around 17 times their fiscal 22 earnings, which is extraordinarily low for a company of that scope and reach, not just in China but globally. So yeah, I think it's attractive here. If you own names in places like China, you have to expect volatility and to get surprised from time to time. But the real question is, what's the impact on earnings and cash flow over the next couple of years? And we see very little on that.
Interesting, because that one also has been on the skids. And Bill, I want to ask you, because you've talked great length, and again, for years, about your enthusiasm for Bitcoin, but it is odd that it and Tesla are behaving almost the same way lately. And, you know, I can remember maybe years ago we talked about maybe GM and Ford being interesting investment opportunities, but I've never heard Tesla be one that you are necessarily looking to. Do you just have any thoughts on why its price action is so eerily similar to that of Bitcoin, or what is going on with that stock?
With Tesla? Or, well, yeah, sure.
Yeah.
So we actually looked at Tesla before people knew about it, and that was one of the big investing mistakes because, you know, I think it was trading on the original stock at around $25, and then it went to $28. I said, forget it, it's too expensive. So right now what's happening with Tesla is that, I mean, everybody considers it the giant disruptor in the auto market. And to date anyway, none of the major competitors have been able to come out with a product that anybody really wants to buy relative to Tesla's stuff. So if you look at the size of the global auto market, you know, Tesla's price is not necessarily out of whack if they were to get, you know, 50 or 75% of the market eventually down the road. But right now, I think it's just going up because it's going up. And, you know, at some point, I mean, the market right now for companies that are the true disruptors, the market doesn't care about valuation. And so people just want to go to the company that is perceived to be the leading disruptor. And Tesla is that. I mean, if I were Elon Musk and I had a market value of what Tesla's market cap is, I would buy General Motors. And then I pick up global, you know, global manufacturing, a great balance sheet, huge free cash flow, a strategy which is actually good. And Mary Barra has got, I think their electric strategy is probably as good as anybody's out there. I don't think that's going to happen, but nonetheless, if it's strategically, that would make a whole lot of sense. Or selling a lot of stock here. That's the other thing they could do.
That's fascinating. Bill, before we go, we're seeing markets take a leg lower here, and gold as well, down about 4%. Democratic Senator Manchin saying he opposes $2,000 stimulus checks, and so we don't know what the fate yet of that relief package will be. Do you think that any of these are buying opportunities? I mean, for stocks broadly, I haven't asked you. Gold, I think you're also quite bullish on, and is that predicated on more stimulus coming from D.C. this year?
I would just say that I do think gold is attractive here, but anybody who owns gold and does not own at least half as much Bitcoin as they own gold, I think is making a big mistake. I also think that Senator Manchin's comment here is really significant. I hadn't heard that before. But, you know, people are worried now that the government, that the Senate will be controlled by the Democrats, which it will be mathematically. But the key is going to be people like Senator Manchin from West Virginia, Senator Collins, the moderates. And nothing's going to get passed if they can't get the moderates in the Democratic Party, or the Republican Party for that matter, to go along with it. So I think that to me is a sign that if he isn't interested in $2,000 stimulus package right now, then I'm pretty sure he's not interested in a capital gains tax rate that's equal to the ordinary income rate, which is part of the Democratic platform. So I'd be encouraged by that with respect to the types of things that can be done legislatively. I think it's going to have to be bipartisan, and I think it's not going to be radical. It'll tilt to the center left, but that's okay.
And that's good for stocks, presumably, then.
Oh yeah, absolutely. I mean, I would not own bonds here when basically we've still got, you know, $18 trillion of global bonds, and inflation rates are headed higher. So that's not a recipe for a successful investment.
Bill, it's been great to have you today. Thank you so much.
Thanks, Kelly, and we'll see you in several months, right? Back on the air.
Yes. Thank you. Going to be a dramatic weekend over here. Bill Miller of Miller Value Partners joining me. Let's get to the latest out of Washington. As I just mentioned, some headlines on top of what's already been a dramatic week. The president already back on Twitter, acknowledging for the first time that a new administration will be inaugurated Jan 20th. All this as several of his cabinet members have now resigned, and we're expecting to hear from the president-elect in the next few moments. Kayla Tausche is here with more for us. Kayla?
Hey, Kelly, the question now is how much longer the president's term will last and if President Trump's term will go all the way until January 20th. House Democrats are on a call that's ongoing right now discussing next steps for a possible second impeachment of the president, with that process potentially beginning as soon as Monday, according to NBC News. Speaker Nancy Pelosi is telling colleagues that she is expected to speak with President-elect Joe Biden later today to discuss the option, which House Democratic leadership had said in recent days was sort of a backup option if Vice President Pence did not remove Trump from office himself through the 25th Amendment. Some Republicans who voted against Trump's last impeachment, like Nebraska Senator Ben Sasse, have suggested they could support it this time, but others like West Virginia moderate Joe Manchin, a Democrat, have raised doubts it would succeed this time. Now, three sources familiar with the matter tell me that Secretaries Mnuchin and Pompeo are among the cabinet secretaries who separately explored the possibility of the 25th Amendment in recent days, but it was seen as too lengthy and uncertain a process to succeed, and so the conclusion was to let the clock run out on Trump's presidency and hope that family members could convince him of a détente. In the meantime, Speaker Pelosi issued a statement saying today she spoke with the chairman of the Joint Chiefs of Staff about the remaining days of Trump's presidency and said that she wanted to prevent Trump from, in her words, initiating military hostilities or accessing the launch codes for a potential nuclear strike. Kelly?
Kayla, so many different developments. I just wanted to mention this one that the Washington Post is reporting about Senator Manchin and his potential opposition to $2,000 direct stimulus checks. We did just hear some thoughts from Bill Miller and others, but I guess, Manchin is probably the significant player now who has to take the pulse of his constituents and decide which way he's going to go on all of these big agenda items.
Well, Manchin is one of the most closely watched members in the Senate, and even more so now than ever. People on Capitol Hill are joking that he is the new majority leader, not Senator Chuck Schumer, because it is the moderate caucus that will be able to determine which policies succeed and which fail. And Manchin's in a difficult spot here. He was elected as a Democrat, but West Virginia was the second widest margin of victory for Trump, the widest margin of victory for Trump in 2016 and the second widest in 2020. So clearly there is a very conservative constituency in the state, even though he was elected as a Democrat. But his views are going to be extremely closely watched. And that's another reason why his views on impeachment and the pulse that he's taking of his colleagues on both sides of the aisle is seen sort of as a bellwether here in this moment, Kelly.
It is, and we see markets selling off on that as well to some extent, maybe taking some of those odds out of betting markets. Kayla, thanks. Kayla Tausche in D.C. for us. Take a quick break here. Coming up, despite all the recent turmoil we've seen, the markets do continue to climb for the most part. Individual investors are scratching their heads over this seeming disconnect and what to do about it. We'll explore that. And more encouraging vaccine news around the globe, and boy, do we need it, as deaths in the U.S. cross 4,000 for the first time, and London grapples with a super outbreak. We've got all the latest right after this.
At C3.ai, we're solving previously unsolvable problems. Inventory optimization, predictive maintenance, anti-money laundering, operational readiness, precision healthcare, energy management. C3.ai is AI built to transform your business at its core. C3.ai. This is Enterprise AI.
Managing your money can be hard, but what if there was a secret financial control center that helped you organize your spending, manage unwanted subscriptions, and lower your bills? Download Truebill, your all-in-one finance app.
Do you feel like your prescriptions are too expensive?
I know I do.
Then it's time to take 10 seconds and check the single care price.
That's right. With single care, you can save up to 80% right at the register.
That's my line. They want me to say that at the end.
Why?
Because I'm the guy.
And I get that.
Then don't say it.
Don't say what? With single care, you can save up to 80% on your meds?
You said it again, and you left out right at the register.
Well, isn't that part obvious?
Doesn't matter. You're still not the guy.
Well, I'm a guy.
Cut. Let's try it again.
Try what again?
Ah.
The WeatherTech Cup phone is the safe way to secure your phone while driving. The desk phone is perfect for the home or office. The Cup phone fits virtually any size cup holder. Nice! And offers an extender arm for easier viewing. The desk phone has a sturdy non-slip base with a 2-view option. So if you have a phone, WeatherTech has you covered. Has anybody ever told you you're a handsome devil? Yes! Order your American-made desk phone or cup phone today at WeatherTech.com.
Night, night, buddy.
Sleep soundly tonight from the brand that more families trust for quality and timeless protection, ADT.
You know what's making Sarah's migraine worse?
Okay, let's table that.
But you know what gives her some relief? Using ZocDoc to book a video visit.
You'll get the prescription this afternoon. Does that work?
Yes! Oh! ZocDoc makes healthcare easy.
I prefer HelloFresh over any other meal kit because the variety in these boxes and the quality of the food totally exceeds any other meal kit company I've ever tried. I love it.
Hit refresh with HelloFresh. Use code TV10 for 10 free meals, including free shipping.
Welcome back to The Exchange. Let's get a quick check on markets. We're at session lows right now after those comments the Washington Post attributes to Joe Manchin, the West Virginia senator, saying he would potentially oppose $2,000 stimulus checks. The Dow's down 153 points. The S&P's down 5. The Nasdaq still up about 0.25%. You can see in the sectors, discretionary is leading the way today with a 1% gain. Tech is slightly positive, but on the flip side, industrials, financials, and materials are your biggest decliners. Here are some of the individual movers. Check out U.S. Steel, which is jumping on a double upgrade from Deutsche Bank to buy from sell. The firm says it's positioned for impressive cash flow and greater leverage thanks to elevated steel prices. Deutsche also highlighting the potential for greater infrastructure spending driven by a Democratic-controlled Senate. The market's already come to this conclusion. U.S. Steel is up 34% this week. Next, from trash to treasure, shares of Roku are higher on the announcement it has acquired the catalog of failed streaming startup Quibi. Roku adding 3.5% today. And another day and another all-time high for Tesla. Analysts over at Evercore out with a note confessing, quote, "We have been on the considerably wrong side of Tesla for over a year now." This week alone, Tesla has added a GM's worth of market cap. It's practically done that today. It's up 6% to $868. Tesla is now bigger or what should I say, I should mention here, actually, we just spoke to Bill Miller a few moments ago, the value investor. In case you missed it, I asked Bill about the Tesla price action. He said didn't have an opinion on it per se, but thought at this point, Tesla should just buy GM and take advantage of its global manufacturing base. Tesla's market cap is now worth more than Facebook's. It's over $800 billion. Let's get to Sue Herrera now for our CNBC News update. Hi, Sue.
Hello, Kelly. Good to see you. Hello, everyone. Here's what's happening at this hour. Lawyer Sidney Powell, a key player in the effort to reverse Joe Biden's election, is being sued by Dominion Voting Systems for defamation. The company wants damages of more than $1.3 billion, accusing Powell of falsely claiming Dominion rigged the election, had bribed Georgia officials, and was created in Venezuela to rig elections for Hugo Chavez. The FBI has released this photo of a possible suspect and is offering a reward of up to $50,000 for information leading to the person or people responsible for leaving 2 pipe bombs at the Republican and Democratic National Committee headquarters on Wednesday. Officials say the devices were found before they exploded but could have caused great harm. And on the 10th anniversary of the shootings that killed 6 and wounded 13 others, including Representative Gabby Giffords, bells rang out in Tucson to honor those victims. And a color guard escort as well. Kelly, you are up to date. I will send it back to you.
All right, Sue, thank you very much. In fact, we have more breaking news coming in now. Kayla Tausche rejoins us with that. Kayla?
Well, Kelly, one of the many jarring images from Wednesday's siege of the Capitol included a man sitting at the desk of House Speaker Nancy Pelosi with his feet up on the desk. And we now just learned that his name is Richard Barnett. He was seen in that photo, and he's just been arrested in Arkansas by authorities and charged with entering and remaining on restricted grounds with violent entry and with theft of public property. We are awaiting more details, but we learned from a Pelosi aide earlier today that there was a laptop stolen from a conference room adjacent to her office that was used mostly for presentations. It's unclear if that is the property that is referenced in these charges, but is certainly something of concern on Capitol Hill. And Richard Barnett of Gravette, Arkansas, has been arrested for violent entry, as you see in that picture. Kelly, back to you.
Kayla, thank you. Kayla Tausche. Coming up, the Fed went into uncharted territory last year when it started backing corporate debt. Was it successful, or did it just prop up an already bloated market? Sheila Bair has some thoughts. She joins us ahead. Don't go anywhere.
The future. It's impossible to see. And when it's finally here, it might not be what you'd expect. It might just be better. Introducing Luxury Electric. Introducing Lucid Air.
You need the right pieces in your portfolio to preserve capital, diversify to mitigate risk, provide liquidity, while delivering returns. Gold, your strategic advantage.
Every physical store has to have a digital presence.
Fiverr made it easy for us to find the right freelance talent to create the website to tell our story. Now we have a digital storefront that's an extension of our physical one.
Transform your business today. Fiverr.
This is Monogram. We're an Austin, Texas-based medical technology company transforming the orthopedic market by combining state-of-the-art surgical robotics with patient-optimized implant design.
What's really unique is the software that controls the arm, because that someone would have to develop from scratch.
This is the future of orthopedics, and it is inevitable.
A unique opportunity awaits. Monogram is the future of orthopedics. Visit thebonebot.com to learn more. That's thebonebot.com.
No more waiting. This year is gonna be different. My New Year's resolution, get happy.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
Hi, I'm Hanno. I created Gabi because most people overpay on car insurance. Gabi is a free tool that saves you money by finding the best deal. Gabi users save more than $800 per year on average. Go to Gabi.com and stop overpaying for car insurance.
Battling COVID, doses of hope. The IPO alternative moving investors.
The public finally getting into some of the smaller companies that are out there.
New Year optimism on the path forward. Stay connected, stay informed. Watch or listen live on the CNBC app.
Welcome back. We got the jobs report this morning, showed the economy lost 140,000 jobs in December. That's the first monthly decline since April, as surging virus cases and fresh restrictions took a toll on the recovery. But we did see some positive signs as well. Job gains were revised upward for October and November, nearly offsetting the December losses, and wages were surprisingly strong. Here to help us make sense of the data and the state of the economy is Michelle Meyer. She is head of U.S. economics at Bank of America Global Research. Michelle, great to have you here today. I mean, the wage number was pretty strong. That's like 10% annualized.
Yeah, it was exceptionally strong, the wage number, but we have to be really careful reading too much into that. A lot of it has to do with compositional shifts in the labor market. So when you think about where the job cuts were concentrated, it was highly in leisure and hospitality, which tend to have lower paid workers. The fact that those individuals fell out of the labor market numbers means that overall wage growth, just from a compositional perspective, looks stronger. So unfortunately, we don't really have a good sense right now of wage growth. We haven't of the last several months ever since COVID hit, and we probably won't for some time going forward until we've had a more complete healing in the labor market.
But are you generally in the camp, Michelle, that thinks that those wage pressures are going to subside later this year? Because I read Jeffries thinks we're going to go, to be maybe 3% wage gains. But if we don't, I mean, if they stay elevated, then that's going to be a very different policy response from the Fed.
So the economics would suggest that the wage pressure should certainly moderate, just from the fact that the unemployment rate is still elevated. It's come down, but it's still high above where you should be in terms of full employment. So all else equal, that should lead to, downward pressure on wages, which we will find out after we've returned to some sort of equilibrium in terms of the composition of the labor market. So I would be in that camp as well, that you're going to see somewhat slow wage growth. That said, to your point, Kelly, if there is a surprise, if wages end up, remaining elevated or actually accelerate from here, that would then fuel the inflation narrative, which is already moving through markets.
And we've seen a number of different places raising their GDP forecast considerably over the past week since the Democrats took Georgia. And it looks like I'm seeing estimates on the order of $1 trillion of stimulus that is now being priced in, with GDP estimates of 6.5% growth for this year. Now, I don't know if that just got brought to a screeching halt with these comments by Senator Manchin to the Washington Post, where he's saying he's not necessarily on board with $2,000 stimulus checks. Now, that would only be $350 billion. But, that gives us a sense that maybe there's going to be more pushback to some of those big numbers than we thought. So how do you guys sort of put all that together and figure out how much fiscal stimulus is coming down the pike and what that's going to mean for growth?
Sure. So at the moment, our forecast for GDP growth this year is 4.6%. So it's strong. But we have a pretty weak start in Q1 with only 1% GDP growth. If another round of stimulus is passed, and I think that it is certainly leaning in that direction, the dollar amount we'll still find out. There's obviously, quite a lot of negotiation that has to go through before we can get that stimulus through the door again, especially after $900 billion was just passed. But if we get another round, call it in February or early March, that will then boost growth at the start of the year and provide an even bigger buffer to the consumer. And also remember right now that there's a lot of money already out there. There's over $1 trillion of what we would consider excess savings that's already outstanding. Now, there's distributional issues with that. A lot of it is kind of unintentional saving. The people who probably need the money most are not necessarily the ones that are sitting on those piles of cash. So more stimulus will help, but there's already a lot of money out there. So you have to think very carefully about the multipliers with every additional round of stimulus, how much it will then boost the economy. I think it will highly depend on how that stimulus is designed and how able it is to be targeted to the people and the parts of the economy that need it most.
Exactly. Whether it's checks or different kinds of investments, we'll see state and local aid. A lot still to be decided. Michelle, thanks so much for joining us today. It's great to have you.
You got it, Kelly. Thank you.
Michelle Meyer with Bank of America. Despite all this D.C. chaos and the back and forth, the stock market generally keeps ticking higher. Sharon Epperson is here now with a closer look at this disconnect. Sharon, and what should individual investors be doing with their money right now?
Well, Kelly, it seems this pandemic and the political fallout over what has happened at the U.S. Capitol cannot keep the stock market down. And in fact, some investors, particularly new investors, may be wondering how they can actually invest here with this disconnect as they're looking at their portfolios. For the most part, average investors appear to be following major market participants. About 68% of the stock market is made up of institutional investors, whether that's banks or institutional advisors or pension funds. And the rest is individual investors. And many of those investors are investing in target date funds or using robo-advisors. Now, Dan Egan, who's the director of behavioral finance at Betterment, says that may help take some of the emotions out of investing. And though you have to remember that before making an impulsive move, he says you should always be asking yourselves these questions.
Are you excited? Is your heart beating a little bit fast? Do you feel a little bit of adrenaline? Nobody makes good financial decisions in that setting. Nobody is going to make a smart long-term decision based upon short-term anxiety. So the first thing is almost a cooling off trigger to say, I'm really worried. I'm worried about this right now. I'm unlikely to make a smart decision for the next few years today.
Now, one of the things that you can do proactively right now, instead of trying to time when or to get in or out of the market, is to choose investments that are socially responsible investments. And in that way, Egan says you can have a portfolio that really reflects your own views and your own values. Kelly.
Sharon, are there other moves that you should make with your investments right now?
Well, that tried and true stay the course. Maybe you don't exactly want to do that right now. What you want to do is review your asset allocation and make sure that it aligns with whatever your financial goals are and your investment goals, as well as your time horizon and your risk tolerance. You also want to keep in mind that now might be the right time to rebalance your portfolio. You've seen some strong gains. Maybe it's time to kind of trim some of that strength and add to the weakness and to some of those underperformers that still will fulfill eventually your investment goals. And then also consider boosting that savings for the safety buffer that will allow you to take more risk with your investments and also be able to sleep at night. Kelly?
And that is the most important thing. Sharon, thanks so much. Good to see you, our Sharon Epperson. You can read more about this on cnbc.com/investin.you. Coming up, former FDIC Chair Sheila Bair writing that the Fed's efforts to prop up the corporate debt market were a dud, as companies not only didn't need the cash, they didn't spend it wisely. She joins us to discuss why and how it should end next. And take a look at the markets right now as we see a sell-off across all three indices on headlines that Democratic Senator Joe Manchin opposes $2,000 direct checks. The NASDAQ has now joined the other two in negative territory, down 0.25%. The Dow's down 246. We're back in a moment.
How far does $1 million go in retirement? Like so much in life, it depends. Is your portfolio in stocks, bonds, cash, gold? Have you planned for greater healthcare costs as you age? Where do you live? Cost of living makes a difference, as do market conditions. Bull or bear? Lots to think about. Fisher Investments can help.
Call now for your free Fisher Guide, the 15-minute retirement plan, and find out how long your portfolio will last, how much income you can take each year, how cost of living may impact your retirement, and more. Call Fisher Investments for your free guide, 1-800-330-0011.
For over 40 years, Fisher has helped investors achieve a comfortable retirement. If your portfolio is over $500,000 and you want to make your retirement last, call now.
Call now for your free retirement guide. Call 1-800-330-0011.
Don't just retire. Retire well.
We're thrilled to be one of the first tech companies in the United States to go public since the pandemic. ZoomInfo is here today for one reason. Not giving up is embedded in our DNA. We used our platform and 20 years of go-to-market expertise to drive value when our customers needed it the most. We are resilient, this country is resilient, and we will all move forward together.
A new piece in the Wall Street Journal criticizes the Fed's corporate debt relief this year, saying most companies benefiting from the Fed's bond buying didn't need the cash to begin with and didn't spend it well either, going as far to say as the Fed's corporate credit facility should be left to die. For more, I'm joined by one of the authors behind this piece. Sheila Bair ran the FDIC during the financial crisis and is now a director at the Volcker Alliance. Sheila, it's great to have you back. And I think a lot of people would say they're wary of the Fed doing this, as a normal matter of business going forward, but that it would have made sense in response to the pandemic. Why do you disagree?
Well, I was actually initially supportive, and I assumed their focus would be on the primary credit market and how allowing large companies who were impacted by the pandemic access credit markets to continue operations. That's not really what happened. The bulk of the intervention was in the secondary market. It was really more of a bailout of investors and underwriters and a boondoggle for a lot of companies issuing a lot of debt, which they probably didn't need. And we've got unprecedented levels of corporate leverage now. So it doesn't. The original idea was to support these companies as employers to continue operations, but that's really not what happened. The Fed didn't put any strings on any conditions on this assistance. There were have been massive layoffs of a lot of the companies benefiting from it, even while some of them are paying dividends. There were no restrictions on shareholder distributions or using this money for executive compensation as well. So no, I don't see the evidence there that it really trickled down to Main Street. It was a huge boon to corporate debt markets, and it also has resulted in a lot of misallocation of capital. I think these low interest rates had already highly favored large companies over small companies, growth companies over value companies. That was just intensified with the announcement of these unprecedented facilities. So I know they were well-intentioned. Initially, it sounded like a good idea, but it did not work out that way. And yes, they should be allowed to die.
I wonder if part of the issue is that we're looking too closely at it here, because most of the people who have cited the importance of the corporate bond buying are doing so as it relates to the entire recovery. I mean, a lot of people really pin the whole recovery to that moment when the Fed said, we're going to go beyond just the usual toolkit to this additional measure, because it was really a psychological tell to everybody that we'll do whatever it takes. You know, the famous Mario Draghi line. So, you know, does it miss the forest for the trees here? Yeah. Well, certainly Wall Street celebrated it. It was great for the corporate debt markets. I don't have any quibble with that. But is that what we want to use monetary policy for? Right. So I think government interventions, whether through monetary authorities or fiscal authorities, should be geared towards Main Street and labor markets and helping the people who can't help themselves. So, yeah, it was a huge boon to Wall Street and widely celebrated, I'm sure. And again, initially, it seemed like a good idea. But, yeah, I think it's been overdone. And again, if there was evidence that this had trickled down into real job growth, that would be different. But we're seeing, you know, a weak unemployment report again today. There's this huge disconnect between Wall Street and Main Street. And the overarching problem is we keep relying on monetary policy to lead recovery. And when we get into these difficult times, monetary authorities just simply are not well equipped to get the help to Main Street. It has to come through fiscal intervention. And yes, we are distorting capital allocation significantly in the process. People worry about consolidation, big companies getting even bigger. Yes, but again, a lot of that is being fed by ultra low interest rates and now this, you know, extension of quantitative easing into corporate debt purchases. So I do think the Fed, well-intentioned, stand down, back off. Corporate America doesn't need any more help from you. And I'm hoping Janet Yellen and Mr. Biden's new economic team will be very focused on Main Street when they come into office. Yeah, and we haven't even delved into the obvious piece of it, which is now the expectation that that and more will be on the table in any response. Sheila, thanks so much. It's a great piece. We appreciate you joining us. Thanks. Sheila Bair writing in the Journal today. In a moment, mortgage forbearance numbers had been looking up in 2020, but the most recent data paints a more dire picture. We will dig into the latest findings and what it means for the housing market in just a minute. But take a look first at the dollar, which is surging in the past half hour to session highs as stocks are dropping. It's the flip side of the coin from what we saw when there were expectations of big stimulus coming. Now, Joe Manchin in the Washington Post pushing back on that to some extent. Don't forget, you can watch us live on the go using the CNBC app. We're back in a moment here on The Exchange.
Of all the companies on the Fortune 500 in the year 2000, more than half no longer exist. Digital transformation isn't just a good idea. It's a matter of corporate survival. Enterprise AI enables organizations to use artificial intelligence at enterprise scale, solving previously unsolvable business problems to help you not just survive, but thrive. C3.ai. This is Enterprise AI.
Do you own an annuity, a fixed annuity, indexed annuity, or a variable annuity? Are you paying high fees and getting low returns on your annuity? J.D. Mellberg Financial would like you to have this free book and learn the pitfalls and mistakes of buying an annuity and how to get out of one if you're unhappy with the one you own. The Annuity Do's and Don'ts for Baby Boomers. From a leading financial firm, you'll learn the little-known truths about annuities, how to help reduce your fees, and increase retirement income. That's right. Call now for your free book, 800-378-5959. And as a bonus, we'll include a free annuity rate report. We researched over 1,200 annuities and summarized rates and benefits of annuities from financially strong insurers. Annuity Do's and Don'ts for Baby Boomers and an annuity rate report. Both absolutely free for calling J.D. Mellberg Financial. Supplies are limited. Call now, 800-378-5959. 800-378-5959.
Here's what we want. We want stocks that can stand the test of time, not for tomorrow, not for next week, but for the year and beyond. Watch or listen live on the CNBC app.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
Having trouble getting help for erectile dysfunction? Get help fast with Lemonade Health. Just answer a few questions. And they can send you medication so you can get better quickly. Visit lemonadehealth.com today.
Hey, I'm Nick. We created Gabby because most people overpay for car insurance. Gabby is a free tool that saves you money by finding the best deal. Gabby saves users over $800 a year on average. Go to Gabby.com and stop overpaying for car insurance.
Welcome back. A new year, but an old problem. Borrowers still unable to pay their mortgages due to the pandemic. The number is improving slightly of late, but as with so much in the economy right now, that improvement is weakening again. Diana Olick joins us from Washington with more. Diana?
Well, Kelly, it's a real mixed bag on the mortgage bailout. New numbers out today show that as of this week, just over 5% of all mortgages, or 2.74 million, are in government or private sector COVID-related mortgage bailouts. Now, these plans allow borrowers to delay their monthly payments for up to a year. The payments are then either made up at the end of the loan or when the home is sold. Now, that is a decline of $92,000 or 3% from the previous week, and that's a lot, but it's because a large volume of plans expired at the end of December. Remember, the mortgage bailout is offered in 3-month increments. Borrowers have to reapply every 3 months. So while it's good news that so many people came out, the concern is that this is actually the smallest improvement at the end of a quarter since the bailout started in April. To compare, at the start of July, after the first quarter, the numbers came down 9%. And at the start of October, after the second quarter, they fell by 18%. So this 3% drop now is far short of the improvement we had been seeing. And all this is happening as we head toward the 1-year mark when the plan expires for those who started in April. So, Kelly, it's really not looking as good as we had hoped.
Diana, does that 1-year mark trigger foreclosures? Is that the next shoe to drop?
Well, that is the next shoe to drop, and it's going to mean that the banks are either going to have to do mortgage modification programs, which they are already doing for some people, or there's going to have to be that conversation of the plan is done, the bailout is over, can you sell the home perhaps instead of going into foreclosure? The difference between what we saw during the financial crisis and now is that we have a very strong housing market, a lot of demand for homes, and very low supply. So a person who is in trouble could easily sell their home and potentially even pocket some extra money rather than have to go into foreclosure. But those who are in dire circumstances, they may be headed that way. Kelly.
All right, Diana, we appreciate it. Thank you, Diana. Look, keeping tabs on the market for down in Washington for us. Speaking of the market, it has been a negative session here after some headlines earlier this hour from Joe Manchin. We will follow all of it next on Power Lunch. We also have business leaders from around the country weighing in on some of the riots in D.C. earlier this week. Billionaire commercial real estate investor Rick Caruso will join us with his thoughts and reaction. I'll join Tyler Matheson after this quick break. Don't go anywhere.
Some things are good to know, like where to find the cheapest gas in town and which supermarket gives you the most bang for your buck. Something else that's good to know? If you have Medicare and Medicaid, you may be able to get more health care benefits through a Humana Medicare Advantage plan. Call the number on your screen now and speak to a licensed Humana sales agent to see if you qualify. Learn about plans that could give you more health care benefits than you have today. Depending on the plan you choose, you could have your doctor, hospital, and prescription drug coverage in one convenient plan. From Humana, a company with nearly 60 years of experience in the healthcare industry. You'll have lots of doctors and specialists to choose from. And if you have Medicare and Medicaid, A Humana plan may give you other important benefits. Depending on where you live, they could include dental, vision, and hearing coverage. You may also get rides to plan-approved locations, home-delivered meals after an inpatient hospital stay, a monthly allowance for purchasing healthy food and beverages, plus an allowance for health and wellness items. Everything from over-the-counter medications and vitamins to first aid items and personal care products. Best of all, if you have Medicare and Medicaid, you may qualify for multiple opportunities throughout the year to enroll. So if you want more from Medicare, call the number on your screen now to speak with a licensed Humana sales agent. Learn about Humana plans that could give you more health care benefits, including coverage for prescription drugs, dental care, eye exams and glasses, hearing aids, and more. A licensed Humana sales agent will walk you through your options, answer any questions you have, and, if you're eligible, help you enroll over the phone. Call today and we'll also send this free guide. Humana, a more human way to healthcare.
Dinner, a constant struggle, wasting time buying food you don't need, stuck in a rut making the same recipes. Hit refresh with HelloFresh. Get simple recipes and fresh ingredients delivered to your door.
Use code TV10 for 10 free meals, including free shipping.
This is my phone. It's also my new bank, GoToBank, the ultimate app that makes banking super easy. There are no monthly fees with direct deposit, and I get 10 times the national average on my savings. It's mobile banking at its best. Open an account at gotobank.com.
Super Wild Card Weekend is here with 2 primetime showdowns on NBC. Bucks, Washington.
To the end zone, touchdown.
Browns, Steelers.
That was awesome.
This weekend on NBC and streaming on Peacock.
Good afternoon, everyone, and welcome to Power Lunch. Along with Kelly Evans, I'm Tyler Mathison, and stocks are falling to session lows in just the last hour as President-elect Biden's plan for $2,000 stimulus checks has hit a major speed bump. It is an individual senator. We've got details about that. Plus, check out shares of Tesla higher for the 11th day in a row. The stock at an all-time high. Is there anything that can stop the rally? And don't look now, but Bitcoin surging as high as $42,000 today. And value investor Bill Miller telling Kelly Evans last hour, the higher it goes, the safer it is to own. Power Lunch starts right now.
Let's get to Dominic Chu now for a quick look at what's moving this hour. Hi, Dom.
Well, the overall markets are moving to the downside. They've been losing steam, and it's what Tyler mentioned before. They'll get more into it, but Democratic Senator from West Virginia, Joe Manchin, making some comments perhaps opposing $2,000 stimulus checks, but that's what took the market down. You can see here it had been kind of hovering a little bit around the flat line and then a precipitous move to the downside. At the highs of the session, the Dow was up roughly 99 points. At the lows of the session, just within the last half hour, we were down roughly 240 points. Just to give you an idea of the range of the Dow move so far today, we're off 156 right now. As for what's moving in terms of the downside, take a look at materials and financials. These two sectors are the ones that are leading the declines in the S&P 500. Meanwhile, consumer discretionary and the real estate sector are the two ones that are actually showing some signs of life. So those are your movers up and down for the overall markets. And one place, of course, to keep that close eye on in terms of the stock market overall is what's happening right now with shares of Tesla. And one of the other moves out there that we're seeing, we are seeing some movement there with Tesla up about 6.5%. It's off its session highs right now. But currently, Tyler, it is now the 5th biggest stock in the S&P 500. It is bigger than Facebook. It can only now look ahead to what's happening with Apple, Microsoft, Amazon, and some others.
Dom, we're going to interrupt. I'm sorry to say, excuse me, Dom, we're going to go to the president-elect right now, who will make some comments and introduce his economic team.
Sicknick, who has died in the line of duty. Our sympathies and our concerns go out to his family. And the people responsible should be held accountable, and they will be. But today I'm pleased to announce the latest members of our economic team. And with their announcement, I'm proud to announce we have finished naming our cabinet, saving the best for last year. 24 outstanding women and men who will get our country moving again, and who are going to restore trust in our government again. and all of whom are ready on day one to do their job. This is a cabinet that I promised you, and I've fulfilled that promise. It looks like America. It taps into the full range of talent we have in our nation, and we have immense talent. It's a historic cabinet. This will be the first cabinet ever that is evenly composed with as many women as men in the cabinet. This will be the first cabinet ever with a majority of people of color occupying this cabinet. And it has more than a dozen history-making appointments, including the first woman Secretary of Treasury, the first African-American Defense Secretary, the first openly gay cabinet member, and the first Native American cabinet secretary. We're also on track. We named a record 50 high-level appointments that are subject to president confirmation, more than any president ever elected has done. We've done our job. We've begun my job of naming these people. It's my expectation and hope that the Senate will now move to confirm these nominees promptly and fairly. It's especially the case for the nominees of Secretary of State, Defense, Treasury, Homeland Security. I nominated them back in November. Given what our country has been through the last 4 years, the last few days, given the threats and the risks in this world, they should be confirmed as close to January 20th as possible. There should be no vacancies at State, Defense, and Treasury and Homeland Security. And we will remain in this dark winter of pandemic and with the economic crisis that's deepening, and we have no time to lose with regard to the entire team. Consider the December jobs report released today. The anxiety and fear of the women and men out there reminds me of when President Obama and I were sworn in during the Great Recession of 2009. This December jobs report shows millions of Americans are still hurting through no fault of their own. We lost another 140,000 jobs, the first negative jobs report since the height of the pandemic in the spring. More people have just lost a job, while many have been out of work for a long time. And the ongoing gap between Black and Latino unemployment remains much too large, that gap. And in many ways, the jobs report is a pandemic report. With the pandemic raging, people are losing work and losing hope. The hospital industry, restaurant, bars, lost more than 372,000 jobs. State and local governments are slashing jobs. 20,000 local educators lost their jobs just last month. In the midst of this pandemic, there are millions of people out of work, unable to pay their rent or their mortgage. They're waiting in line for hours to get food from a food bank. Think of this, the United States of America. People are lined up for miles in their automobiles, waiting to get a meal to put on the table to feed their family. And they're left staring at the ceiling, so many, unable to sleep, worried will they have their health insurance, wondering if they'll be okay. The bottom line is the job report shows we need to provide more immediate relief for working families and businesses now. Not just to help them get on the other side of this painful crisis, but a larger purpose, to avoid a broader economic cost that exists out there, that will happen due to long-term unemployment, hunger, homelessness, and business failings. But by acting, the vast majority of leading economists suggest that that's what we need to do to revive the economy. In fact, economic research confirms that with conditions like the crisis today, especially with such low interest rates, taking immediate action, even with deficit finance, is going to help the economy long-term and short-term, reduce scarring in the workforce, increase growth, and reduce our national debt burden. Failure to act will have the opposite effect. I've said before, the bipartisan COVID relief package passed in December was a very important step, but just a down payment. Next week, I'll be here with you all laying out the groundwork for the next COVID economic relief package that meets the critical moment of our economy and our country and we face at the moment. For example, vaccines give us hope, but their rollout has been a travesty. This will be the greatest operational challenge we will ever face as a nation. We're going to need billions of dollars to get the vaccines from a vial into someone's arm, the vaccination, for millions of Americans. We're also going to need tens of millions of dollars to help reopen our schools and reopen them safely. State, local, tribal communities need tens of billions of dollars to keep educators, police officers, firefighters, and other first responders and public health workers on the job. We need more direct relief flowing to families, small businesses, including finishing the job of getting people that $2,000 in relief, direct payment. $600 is simply not enough when you have to choose between paying rent, putting food on the table, keeping the lights on. I also hope that Democratic control of the House and Senate will raise the odds of prompt action on increasing the minimum wage. I've long said that we need to reward work, not just wealth in this country. People in both parties now recognize it's time to raise the minimum wage so hardworking people earn at least $15 an hour minimum. No one should work as millions are doing today, 40 hours a week at a job and still live below the poverty line. They're entitled to at least a $15 minimum wage per hour. Folks, the big focus will also be on small businesses and how to correct the current administration's failures to get relief to Main Street small businesses that are most in need. Mom and pop stores are the backbone of the economy. And they're also, as you all know, they're the glue that holds communities together. It holds them together. But today, more than 1 in 4 small businesses are not open. At least 400,000 are closed for good. And as the month goes by, 1/3 of Black-owned businesses, and more than 1/5 of Latino-owned businesses, and more than 1/4 of Native American-owned businesses have less than 1 month in reserves to cover expenses. Previous rounds of economic relief last year helped millions of small businesses stay afloat and keep employees in the payroll. But there were clear problems. Black and brown-owned small businesses had less access to that relief. Mom and pop shops were often the last in line, while big, well-connected businesses jumped in front of the line and got more relief and got it faster. And at every turn, this administration, the Trump administration, has undermined accountability for every tax dollar spent, weakening oversight, firing inspector generals. So it's no surprise an independent watchdog found that tens of thousands of ineligible companies receive relief they should not have, including from fraud and abuse, siphoning off support for their very small businesses that that need it so badly. But the good news is that the relief package passed last month provides additional aid to small business and workers. But as I said from the beginning, the need to make sure that relief and future relief reaches everyone who needs it, we need to do more. These relief dollars will start to flow quickly, potentially while the current administration is still in office. And they may send out money that they won't have any control over. But for what we have to need control over, I want to be very clear what my priorities are for distributing this emergency aid swiftly and equitably. Our focus will be on small businesses on Main Street that aren't wealthy and well-connected, that are facing real economic hardships through no fault of their own. Our priority will be Black, Latino, Asian, and Native American-owned small businesses, women-owned businesses, and finally, having equal access to resources needed to reopen and rebuild. But we're going to make a concerted effort to help small businesses in low-income communities, in big cities, small towns, rural communities that have faced systemic barriers to relief. Think of the mom and pop owner with a couple of employees who can't pick up the phone and call the banker who doesn't have a lawyer, an accountant, to help them through this complicated process, to know if they're even qualified, or who simply didn't know where this relief was available in the first place. We went through this, Don, when we brought Detroit back off its knees. And as we saw in this morning's job report, restaurants, bars, and hospitality industry have been slammed by this virus. We're going to direct relief to those businesses and others that have been so badly hit the hardest. We owe them that support to help them get through the other side of this crisis. And I promise you, we will investigate and prosecute waste and fraud in these programs so that money goes to the companies that deserve it, and we'll use it to help their employees and their communities. When my president, President Obama, asked me to implement the Recovery Act, along with Don, who helped me a great deal, we invested more than $800 billion in our economy to help recover, rebuild, and less than 2/3 of 1% waste, fraud, or abuse occurred. We know how to do this. We know how important predictability and clarity are to small businesses. From day one, this administration worked to ensure that small businesses and financial institutions in every community understand the rules for these programs, the resources available to them, where they can turn for technical assistance if they need it. We will have navigators who help guide them through each step of this process until the money they need is in their bank account. And to the lenders participating in these programs, you should move quickly, without delay, to begin extending relief. But I urge you not to disabuse these funds. Not to disperse these funds in the same inequitable way you have in the past. Here's my commitment. In return, we'll make our expectations of you crystal clear, the banks, so that you can quickly and equitably deliver relief to the communities that you serve, unlike what's been happening in many places. The bottom line is, we're in the midst of the most unequal economic and jobs crisis in modern history. Congress needs to act as quickly as possible on all the issues I just laid out. That's how we can contain the pandemic, build back better with an economy that works for all Americans. And this is a team that's going to help get that done. For Secretary of Commerce, I nominate Governor Gina Raimondo of Rhode Island, the daughter of a working-class family who knows what it's like when her parents' factory job was shipped overseas. She never took her parents' sacrifices for granted. She always remembers where she came from. She became a successful entrepreneur who created jobs on Main Street and brought businesses back from the edge. She became a state treasurer who invested in local communities and took on financial predators. And today, she's one of the most effective, forward-thinking governors in the United States of America, the first woman ever to lead the ocean state. She created an innovative loan program that helped minority-owned and women-owned businesses access the capital they need, but wasn't always available to them. She's worked with employers to design skill training programs so that local workers would be equipped to take the good-paying jobs in their own communities. She's put Rhode Island on the path to achieving 100% renewable energy, and she'll be a key player in helping position the United States as a global leader in the 21st century clean energy economy. And she knows what her fellow governors, Democrats and Republicans alike, are dealing with on the front lines of the pandemic and economic crisis they're facing, and how we can all partner together as one nation to contain COVID-19 to build back better. I'm honored, Governor, you're willing to join the administration, and we're really looking forward to working with you. For Secretary of Labor, I nominate a good friend and a stand-up guy, Marty Walsh of Boston, son of Irish immigrants. From his only downside, they're not from Mayo, they're from Galway. From Galway, moved to Boston. Marty was born and raised in Dorchester. I know him, tough as nails. Diagnosed with cancer at age 7, beat it at age 11. Joined the laborers union, 223, at age 21, elected to the state legislature, became union president, and graduated from college at age 42. He's now in his second term as a successful mayor of the iconic American city of Boston, who always puts working people first, fighting for a $15 minimum wage, paid family leave, providing frontline workers with emergency child care and protective equipment they need. Marty understands, like I do, that the middle class built this country, and unions built the middle class. He sees how union workers have been holding this country together during this crisis. Healthcare workers, keeping our hospitals safe, clean, and effective, and efficient, I might add. Public service workers, fighting against budget shortfalls to keep communities afloat. Port workers, car haulers, warehouse workers, folks keeping our air and rail systems running. They're literally what's keeping us going. And they deserve a Secretary of Labor who knows how to build their power as workers, who knows that when I say our future will be made in America, it will be a future built by American workers, a future with historic investments in infrastructure, clean energy, manufacturing, and so much more that's going to create millions of good-paying jobs. Marty knows worker power means not just protecting the right to unionize, but encouraging unionization and collective bargaining. The Fair Labor Standards Act way back didn't just say you can have unions, it said the government should encourage the formation of unions. It also means protecting pensions, ensuring workers' safety, increasing the minimum wage, ensuring workers are paid for the overtime they've earned, like we fought for in the Obama-Biden administration, but this administration has weakened. Making sure that we have a trade policy where for every decision we make, unions are at the table, focused on winning good jobs for American workers. This is one of the most important departments to me. I trust Mayor Walsh, and I'm honored he accepted. But I also want to say I did give serious consideration on nominating my friend Bernie Sanders to this position before. I'm confident he could have done a fantastic job. I can think of no more passionate, devoted ally to working people in this country. But after Tuesday's results in Georgia, giving Democratic control to the United States Senate and a tie vote, Bernie and I agreed. As a matter of fact, Bernie said we can't put control of the Senate at risk on the outcome of a special election in Vermont. And he agreed we couldn't take that chance. We also discussed how we'd work together, travel the country together, helping Marty, meeting with working men and women who feel forgotten and left behind in this economy. We agreed that we'll work closely on our shared agenda of increasing worker power and to protect the dignity of work for all working people. I want to thank Bernie for his continued friendship and leadership. I look forward to us working together, along with Marty. And he thinks I made a good choice. For Administrator of the Small Business Administration, I nominate Isabel Guzman. Isabel grew up in California, working alongside her dad in a small veterinary business that he built. She devoted an early understanding and developed an early understanding of what small business means to their employees and to the neighborhood they support and to the families whose dreams they represent. She dedicated her career to creating jobs, to supporting entrepreneurs as a senior official on the Obama-Biden Small Business Administration. As director of California's Office of Small Business and a small business advocate, she worked tirelessly to ensure that everyone with an entrepreneurial spark had a fair and equal shot at getting off the ground and succeeding. The Biden-Harris administration will be locked in on helping small businesses recover, rebuild, and remain the engines of our economic strength. And as head of the SBA, Isabel will be leading a critical mission, not only to rescue small business in crisis, but to provide the capital to entrepreneurs across the country so they can innovate, create jobs, and help lead us into recovery. I'm grateful that she accepted the call to serve in Washington. For Deputy Commerce Secretary, I nominate, and I have to admit to you, good, loyal, and great friend, Don Graves. Don is a long-time and trusted advisor. He was there at the Treasury Department during the depths of the Great Recession, helping small businesses weather the storm and stay afloat. When President Obama asked me to lead the effort to get Detroit out of bankruptcy and off its back and on its feet again, he said I could take anyone in the administration on my team to do it full-time. So I went to the Treasury Department. I tasked Don to come over and work for me and work on it full-time. It was the best decision I ever made in that effort. I'm not sure how he thinks about that, but I think it was the best decision I've ever made. And did a great job working with the city officials, state officials, on its road to recovery. And by the way, it's the little things. It's getting to know what's happening on the ground. Remember how we went through the issue about the number of buses and lights, street lights and the like. It gets down to the nitty-gritty of what has to be done. We found out that Detroit had a lot of qualified people, but during the Great Recession, almost everyone who knew how to program anything left. So when we finally got it back on its feet again, we found out there wasn't anybody left to know how to turn on the streetlights, literally, run the sewer department. So we went out and we got an outfit to come in, and we said, find us some high-tech people. They came back, what was it, 53, 55 people. They all happened to be women. Most were minority. None had more than a high school degree, and a quarter of them only had a GED. And I remember even our very liberal friends, we told them we were doing this, they said, oh, I'm not going to do this. Well, guess what? In a 14-week program, they were taught how to program. They were taught how to do it all. They ended up putting the city back on its feet. Every one of them left after that time because we went to the graduation. The lowest starting salary, if my recollection is correct, was $49,000. The highest, $104,000. Point is, give people a chance. Americans can do anything given a shot. It also helped me lead our national strategy to equip workers with the skills they need for good paying jobs in the 21st century in healthcare, IT, clean energy, advanced manufacturing, and so much more. He was there to help me launch the National Cancer Moonshot and marshal the full resources of the federal government to help end cancer as we know it. A cancer survivor himself, diagnosed and treated while he was working on this for me. Don knows about hope and he knows about resilience. I'm grateful to him and his wonderful family for once again answering the call to serve. I want to thank you all. Thank your families. And I don't want to embarrass him, but there's one guy up in the gallery here, Tommy, who's my buddy, who is the son of the governor. Thanks, Tommy, for supporting Mom doing this. And to American people, I know these times are tough, but I want you to know that we're going to get through this. Help is on the way. These people know what they're about. They know what it's like. So may God bless you all, and may God protect our troops. Now what I'd like to do is turn this over to the team, starting with our next Secretary of Labor, Marty Walsh. And after all is said and done, what I'll do is I'll come back and answer.
That's the President-elect Joe Biden introducing the rest of his cabinet and also making a couple of comments policy-wise that might be moving the markets. You can see we're well off the session lows. The Dow is only down 100 points right now. The President-elect saying he is going to lay out the groundwork for his economic package last week. Also saying the jobs report this morning says we need more immediate relief right now. That context is especially interesting because of the comments we've had from Democratic Senator Joe Manchin in the past couple of hours that originally sent stocks to their lows. For more on that and what we've heard just now, let's bring in Kayla Tausche with some context and reaction. Kayla?
Well, Kelly, we reached out to the office of Senator Manchin after those headlines initially hit and sent the market down quite a bit. And they clarified through a spokesperson that Senator Manchin is undecided on any future proposals and is not outright opposed to $2,000 checks. In theory, the office of Senator Manchin said that the incoming administration will craft its stimulus proposals as it sees fit, and that Senator Manchin will evaluate those when the administration sends them to the Hill. In a statement, in part, spokesperson Sam Runyon says when the time comes, Senator Manchin will evaluate those proposals. He has also made clear that the focus when delivering economic relief must be on those who are unemployed through no fault of their own. Manchin is a little bit of an ambiguous ideologue on this issue for a few reasons, Kelly. Number one, he's an elected Democrat. Number two, he represents an extremely deep red state. But number three, West Virginia has one of the highest poverty rates in the country. And so with a higher unemployment rate than average and being extremely hard hit by the pandemic, you could imagine that constituents there, albeit very conservative constituents, might not be happy to hear that he would potentially be voting against a proposal that would put money in their pockets. So we will see what the proposal looks like when the president-elect unveils it, as he said, next week, and what that means for support on Capitol Hill as they start to digest its details. Kelly?
Yeah, Kayla, on that note, it's interesting also to look at these remarks from Art Cashin. He was saying, a lot of people were attributing that market pullback to comments by Senator Manchin, but he says he thinks that while it's a contribution, the primary cause is the reintroduction of impeachment and just this back and forth over this kind of open-ended question about what happens in the next couple of days amid this transition to power. So I don't know if we've heard anything as well on that front, but certainly you can see the market off the lows, maybe reassured by what Joe Biden was saying of the sense of kind of full steam ahead with laying out his next economic package next week anyhow.
Yeah, perhaps. And NBC News has reported that House Democrats could begin the process of impeachment as soon as Monday. Earlier today, Democrats joined on a call to discuss next steps. But there seems to be not a uniform view on how to move forward. And Speaker Pelosi is going to be speaking to the president-elect this afternoon. And we'll see whether they decide to move forward with this. It is a rather lengthy and rather cumbersome process. They've been through it one time before. And because of that, Senator Manchin actually said earlier today, he told the Associated Press that he did not believe that there would be enough support among his Republican colleagues for impeachment to succeed this time around, where it failed this time last year. So certainly we will see where it goes from here, whether in fact Democrats decide to move forward with that and how lawmakers decide they'll vote on it this time around. Kelly?
And Kayla, markets further off the lows on your reporting there. Thank you very, very much for bringing that to us. The S&P has now turned positive, and the Dow lagging by only about 70 points right now. Over to you, Ty.
All right, thank you very much, Kelly. So what happens to the market and the economy if the stimulus tap is turned off under President-elect Biden's administration, even with a Democrat-controlled Congress? Samantha Azzarello is global market strategist at J.P. Morgan Asset Management. Samantha, welcome. It's always good to see you. Let me get your reaction to how dependent this market is on there being another round of stimulus and cash money deposited into the accounts and pockets of American citizens.
So, Tyler, it's absolutely a factor, undoubtedly. Support for the consumer is something we're always keeping our eye on. But I will just say there are other positives that are obviously supporting the market. The big obvious one is the Fed. Right? We know the Fed is not raising interest rates likely until the end of 2023. So that provides some buffer. I would also mention corporate resilience on the earnings front. I mean, that's fundamentals. We would have expected corporate profits to be lower, but that's just not the case. We think we're going to hit all-time highs in corporate profits this year. So I do think there's other positives supporting the market, but you're exactly right. If we don't get stimulus supporting the consumer, that's going to lead to some bumps and absolutely some volatility for the market.
All right, Ron Insana joins us as well. Ron, good afternoon. Let's get your reaction to that. How dependent or vulnerable is this market to the lack, possibly, of a stimulus agreement? And we were talking the other day, when you've got a 50-50 Senate with one tiebreak in the form of Vice President-elect and soon-to-be Vice President Harris, it puts amazing power in the hands of individual senators.
Indeed, it does, Ty. And looking at the comments that Senator Manchin made to the Washington Post prior to the clarifications by his press secretary to Kayla, he was talking about vaccinations are the #1 job. We all know that, but we don't know what the time frame is for completely inoculating the country. So I think in the short run, most certainly, both the markets and the economy are utterly dependent on stimulus. And as Kayla said, with West Virginia being one of the most impoverished states in the country, I don't see necessarily how Joe Manchin can turn his back on this, and he says they're going to evaluate it. I mean, let me point out one other thing, is that with the budget reconciliation process that can be used twice this year by the Democrats in the Senate, they only need that 51 to 50 majority to get things through. So there might be a Republican, let's say Mitt Romney, just for example, with no knowledge on my part, who might be willing to cross the aisle and help if it comes to the point where they need to deliver this money to people who need it most. And as the president-elect said, the employment data tell us that there are a lot of people who need more money to get to the point where we've achieved the type of immunity that will allow the economy to return to some semblance of normality.
I would just point out, obviously, when you have this kind of narrow margin in the Senate, what can get put into the sausage as the sausage gets made can really sweeten things for individual members and maybe tilt them in the way. And boy, Joe Biden knows how the Senate works. Before I go back to Samantha, who I know is going to raise the point about some of this year's gains maybe being pulled in to last year into 2020. But before I do that, Ron, I want to talk about the level of speculation in the market. We see stocks going up, up, and up, and up on the day that the Capitol was invaded. We also see Bitcoin going up and up and up. We see SPACs, we see IPOs. What does that signal to you?
Look, Ty, you and I have talked about this now for months with some degree of success in the summer and in the early fall, and then with less success with respect to the what we expect to be the downside risk in this market over the last couple of months. Look, I think there are enormous pockets of speculation. They may not necessarily apply to the entire market, but certainly when you look at something like Bitcoin and the parabolic move that it's had, and listen, I know I've been wrong about Bitcoin since it was first priced at 5 cents over a decade ago. It's gone up 842,000 times its initial price and made billionaires out of some people and made some of us look quite silly. I still think that's a speculative episode. I think that SPACs are also selectively going to face trouble. And I do think the 17 million individual traders who have taken to day trading and options trading are going to have a rough day somewhere down the road. So, yeah, look, I think there's a lot of speculation in this market. Again, timing it is the most difficult part of this. As you and I know, going back to 1998, when the stock market reached its momentum peak, it didn't reach its price peak till 2 years later.
Samantha, let me turn to you and get your reaction to what Ron just said, his concerns about speculation in the market. Another word for that, I guess, is froth. Good on a bottle of on a pint of Guinness, bad in the market. But I was really struck by your observation that maybe some of this year's gains were pulled into last year. Explain what the consequence of that could be.
Well, that's exactly right. So it's always a balance. We love risk assets. It's how our clients transform income into wealth. That being said, there's a lot of exuberance, right? And you would just have to look at some of the stats. So through last year, we made 20 all-time new highs in global equities. And this wasn't just the S&P 500, US small cap up over 30%, emerging markets up over 18%. And I could go on. And that didn't feel congruent with the environment. Yes, we know that we hit a bottom with the recession. Now, obviously, we're seeing pandemic-related weakness in the jobs data. It'll likely flow into the GDP data as well. But I just think it feels a little intellectually lazy to keep saying the market is a forward-looking mechanism. Yes, it is, but there's a lot more churn that has to happen. And we had a lot of those gains, a lot of those recovery, coming out of the pandemic gains, we got those last year. So we do think some of those returns, like you said, have been pulled back into last year's returns. And that just means we need to be a lot more cautious and a lot more selective in how we invest this year.
Samantha, thank you so much. Have a great weekend. We'll see you soon again, I hope, and the same, Ron and Sana, to you. Kelly.
Tyler, thank you so much. Coming up, growing calls from Congress for Trump's removal from office as more Republican lawmakers are getting on board after the fallout from the riots on Capitol Hill this week. How is the rest of the world reacting? We'll have that. Plus, we're going to talk to billionaire Rick Caruso about all the chaos and what should come next. There's a whole lot more Power Lunch right after this quick break.
Want to sell the best burger in every zip code? Add an employee. Or 10. Then easily and automatically pay your team and file payroll taxes. That means world domination. Or just the West Side.
Run payroll in less than 5 minutes with Intuit QuickBooks. Of all the companies on the Fortune 500 in the year 2000, more than half no longer exist. Digital transformation isn't just a good idea. It's a matter of corporate survival. Enterprise AI enables organizations to use artificial intelligence at enterprise scale, solving previously unsolvable business problems to help you not just survive, but thrive. C3.ai. This is Enterprise AI.
When the market is unpredictable, BAM gives you certainty. In the face of market volatility and illiquidity, BAM-insured municipal bonds deliver default protection, value preservation, and a durable rating. BAM. Build America Mutual.
Marcus, meet Michael.
No! I don't want to touch you.
My philosophy is don't ever do anything to anyone.
That's what you're going to do, Luke!
Red flag number one. For any reason whatsoever.
I am in his side!
What? Catch up with The Prophet, streaming on Peacock. And The Office, every episode, extras, exclusives, streaming now, only on Peacock.
It was so stupid. What was you were just...
Hi, I'm Hanno. I created Gabi because most people overpay on car insurance. Gabi is a free tool that saves you money by finding the best deal. Gabi users save more than $800 per year on average. Go to Gabi.com and stop overpaying for car insurance.
Selling a home is expensive and stressful, so we set out to create a better home selling experience with a network of the most successful real estate agents in America that'll sell your home for as little as a 2% commission.
The icing on the cake with the ideal agent was that we saved $12,000 in commission.
They were so stress-free. The whole process was amazing, and I would definitely recommend them.
We are not a discount brokerage. These are top local agents that'll get you the best results.
Welcome back. Growing calls today in Washington for President Trump's removal from office. And business leaders from Apple CEO Tim Cook to JP Morgan CEO Jamie Dimon have spoken out to criticize the events. Yesterday, billionaire investor Nilsen Peltz joined Closing Bell in a powerful interview. Listen.
What happened yesterday is a disgrace, and as an American, I'm embarrassed. You know, I didn't vote for Trump in 2016. I voted for him in this past election in November. Today, I'm sorry I did that. I supported many of his policies, which I still think were good ones, trade efforts, economic policies. I think they're good for our country. But so much good was undone yesterday with what we all saw.
Joining us now with his reaction to the D.C. riots is billionaire businessman and philanthropist Rick Caruso. Rick, it's good to have you back, and what are your thoughts on the matter?
Well, thanks for having me back. I've got a few thoughts, and thank you for allowing me to share the thoughts. Listen, what happened yesterday was despicable. I condemn it at every level. There's no excuse for it. The behavior of those who are out there on the streets and climbing up the Capitol, in my opinion, was un-American behavior. And the leaders that were endorsing it before, after, and during, again, un-American and wrong. But I do want to share a point of view that may be a little bit different on this. I was watching, horrified like everybody else in this country and around the world, what was happening. But an equal emotion that I had that really became the emotion that overcame me was this incredible confidence in our democracy, incredible confidence in our Constitution, and incredible confidence in the goodness of the American people. There wasn't a minute in my mind that I ever felt democracy was threatened. So I think to say our democracy, some people have said, and that's fine, but in my humble opinion, to say our democracy was threatened gives too much credibility and credence to those people who are out there doing bad things at the worst possible time and also just despicable on what they were doing. To say there's a stain on this country, I don't think so. I think there's a stain on the leadership that endorsed it, incited it, approved it, condoned it. There's a stain on those who participated in it. What was threatened yesterday was a great building and very good, precious people that were put at risk, which is unthinkable. But this country, this democracy, is so strong and so good that it was never at risk. And I tell you, I had dinner with the family afterwards. We were watching as the electoral votes were being walked down the aisle of the chamber. And there's the vice president and the Speaker of the House. And with great dignity, great honor, great professionalism, they carried out the constitutional mandate to count those votes, in spite of what happened hours earlier. That is our democracy. That is our country. We are the envy of the world. We're very transparent, so we share all of our warts, and that's fine. That's the strength of a democracy to do that. But I think, and just watching President-elect Biden on your show, I think he's got an opportunity now to heal this nation in a way that no other president has been given an opportunity to heal, and I think he can. And I hope the leadership around him follows the same tone of unity. We got so many important things to do. Get the vaccine out, get small businesses, families are hurting and hungry, we got homelessness. Let's get back to work. That's the America I know, is the America that works together and solves problems and never loses the pride in this country.
Rick, you alluded to it, but what is the opportunity for the president-elect, and what is the risk here? Maybe not for him so much, but for other supporters. You know, it's a point that Nelson Peltz made in passing about how he supported the president's policies, and there were 70 million people ostensibly in that vote who to some extent were voting for policies more so than the president himself. So what is the right tone for the president, for the new president, for Biden, for everybody else, that suggests everything that you're saying, kind of brings out the best of us, brings people together, and kind of avoids this sense of retribution, if you want to call it that?
Yeah, and I watched Nelson's. I don't know him. I'd like to get to know him after I watched his interview yesterday. I thought he was exceptional. Here's what I think the right tone is. Here's the America that I think has done so many great things over the last couple of centuries. We have put aside differences. We will have great debate. They can be robust. But once a decision is made, everybody commits to work together and go down the same path. So I think the blame game has got to be over. The pointing of the fingers has got to be over. And really, President-elect Biden has the opportunity. He's got to be all-inclusive, including the 70 million people that voted for Trump. It really doesn't matter because, as he said, and I believe that he feels this way in his heart, he is the president for every American. Nancy Pelosi is the Speaker of the House for every American. And here's what I think is so important. We have to get back to the notion that when you're in elected office, you're in service for others. What we saw the other day was a president that was in service for himself. That can never be tolerated. And we need to hold all elected officials, local, state, and federal, to the standard of do what's right for the people you serve and put political differences aside. And I think that should be his tone. I hope it will, and I believe he really wants to do the right thing. And hopefully the leadership around him will support him in that cause.
Well put. Rick, thank you for joining us to add to the thoughts we've heard from people this week and for some much-needed perspective. Rick Caruso, Tyler.
Thank you, Kelly. Thank you, Tyler.
All right, Kelly. And thank you, Rick, very much for your, one of the things that is a joy to many of us who work at CNBC is when we talk to business people. They're almost unfailingly optimistic individuals to a person. And that's why they're in business, because they like the future and they look ahead. And I think Rick Caruso, if you listen to him there, that's what he was doing. Still ahead, stocks retreating from record highs in just the last hour on a possible roadblock to more stimulus in the form of a single senator from West Virginia. We'll see, though. Materials and financials, they are your laggards at this hour. Plus Tesla higher for the 11th day in a row, record high for that one. What's driving its unstoppable rally? We've got the details right after this quick break.
I'm searching for info on options trading, and look, it feels like I'm just wasting time.
That's why TD Ameritrade designed a first-of-its-kind personalized education center. Their award-winning content is tailored to fit your investing goals and interests, and it learns with you. So as you become smarter, so do its recommendations.
So it's like my streaming service.
Well, except now you're binge learning.
See how you could become a smarter investor with a personalized education from TD Ameritrade. Visit tdameritrade.com/learn.
Enterprise artificial intelligence has the power to transform the most complex organizations and the world, delivering medical supplies where they're needed, keeping our armed forces at the ready, cleaner, safer energy, all thanks to 1 billion predictions per day. C3.ai is AI at a global scale, harnessing the power of data to build a better future. C3.ai. This is Enterprise AI.
The future. It's impossible to see. And when it's finally here, it might not be what you'd expect. It might just be better. Introducing Luxury Electric. Introducing Lucid Air.
Japanese innovations are paving the way to a post-pandemic future, where endearingly emotive robotics disinfect and protect.
As the situation with the virus evolves, robots will begin to play a more important role. Robotics can be applied in many real-world applications to help in this pandemic.
AI reinvents retail experiences.
If we stick to conventional business models and refuse to change our mindset, we will definitely lose our customers. Retailers have to decide if they want to embrace this change.
And virtual reality solves the challenges of telecommuting.
You won't be constrained by the time and space. So you can be anywhere. You can use robot as your another body.
Advancing our world in the new normal. Japan, powering tomorrow.
Here's what we want. We want stocks that can stand the test of time, not for tomorrow, not for next week, but for the year and beyond. Watch or listen live on the CNBC app.
All right, as we keep our eye on the markets as we head into the final hour of trade, let's give you the final power movers of the week, and we start off with a biotech bust. Sarepta Therapeutics losing half its value. That is nearly $7 billion lost. Its drug to treat Duchenne muscular dystrophy did not meet statistical significance in a trial. WD-40 moving the other way today. Earnings doubled from last year. It is benefiting from people stuck at home. WD-40 gets you unstuck and fixing things around the house. The CEO saying he calls it isolation renovation. And the company is seeing it in all markets across the world. Just spray some of that. It's the best product. And we want to end with a check on gold, down more than 3% today. A big move by gold standards. We're going to go back to President-elect Joseph Biden.
Let me take some of your questions. We'll have chances again this week to do it. But let me yield, and you tell me who we're talking to.
Mr. President-elect, while we have been here, as you've been announcing your economic team, we've learned that House Democrats are currently planning to introduce articles of impeachment against President Trump as soon as Monday. At that point, it'll be just a little over a week before the president leaves office. Do you believe this is a good idea?
Look, I've thought for a long, long time that President Trump wasn't fit to hold the job. That's why I ran. And my job now, in 12 days, God willing, I'll be President of the United States of America. And I'm focused on the urgency of 3 immediate concerns. 1, the virus, getting under control, getting the vaccine from a vial into people's arms. I think the way it's being done now has been very, very sad. Number 2, we've had 4,000 deaths. 4,000 deaths yesterday. And things continue to rise, to escalate. That's my number one concern, to get the virus under control. We lost over 125,000 jobs this last month, and people are really, really, really in desperate shape. And so I'm focused on the virus, the vaccine, and economic growth. What the Congress decides to do is for them to decide. But I'm going to have to, and they're going to have to be ready to hit the ground running, because when Kamala and I are sworn in, we're going to be introducing immediately significant pieces of legislation to deal with the virus, deal with the economy, and deal with economic growth. So we're going to do our job, and the Congress can decide how to proceed with theirs.
But if a Democratic member of Congress were to call and ask for your advice about whether they should proceed with this, what would you tell them?
I'd tell them that's a decision for the Congress to make. I'm focused on my job.
And did you speak with House Speaker Nancy Pelosi before this decision was made, or is that conversation that's still going to happen?
I'll be speaking with Nancy and the Democratic leadership this afternoon, as a matter of fact, about my agenda, as well as whatever they want to talk to me about.
Okay, thanks.
Thanks, Mr. President-elect.
Thank you, Ken.
I wanted to ask you about your agenda in light of the jobs report that came out today. You're going to be laying out the principles of your plan. Do you think the need in the COVID relief bill is greater than you anticipated? And what is the price tag that you're looking at? I've been told it could be in the $2 to $3 trillion range. And then as it relates to the direct cash payments, you've talked about the need for $2,000 checks. Do you want to see that in a Senate standalone bill as a way to speed up the process? Or do you think those direct cash payments should be part of the package that you're going to be proposing?
Well, we're going to be proposing an entire package. And parts of that package are of equal consequence to people. Unemployment insurance, being able to continue with rent forbearance, a whole range of issues. So that's number one. We think that they all have to be dealt with. The price tag will be high. But as I said, made scant reference to in my opening comments, the overwhelming consensus among the leading economists, left, right, and center, is that in order to keep the economy from collapsing this year and getting much, much worse, we should be investing significant amounts of money right now to grow the economy. And that's a pretty wide consensus. And as you know, Moody's had done an analysis of what I originally had been talking about and said that it was necessary to keep the economy from going down. It would rise, we'd create 18.6 million jobs, create $2 trillion more in economic growth than the other administration would, this outgoing administration. So it is necessary to spend the money now. The answer is yes, it will be in the trillions of dollars, the entire package. But it will be, I'll be here next Thursday laying out in detail how that package is going to go. But the basic story is simple, that if we don't act now, things are going to get much worse and harder to get out of the hole later. So we have to invest now. Secondly, we're going to have to meet the emergency needs of the American people. I mean, literally, I know you know this, Ken, that people are having trouble just putting food on the table, just having to keep the payment of their car, maybe able to turn the lights on. There's a dire, dire need to act now, purely out of what is a humanitarian need here at home. And thirdly, we're going to, in the third stage of this, the whole story is we're going to have to invest, as I suggested throughout the campaign, in infrastructure, in healthcare, and a whole range of things that are going to generate good-paying jobs that will allow us to grow the economy. So that's a long answer to a short question, which is that the idea of, with interest rates as low as they are, with the Fed having had its power sort of taken away in terms of what they could do to help this administration like last, it's important across the board. Every major economist thinks we should be investing in deficit spending in order to generate economic growth.
And I wanted to ask you about what took place at the Capitol this week. You served in the Senate for 36 years, and importantly, you were there in 1983 when there was an explosion in a Senate corridor. You were there in 1998 when 2 Capitol police officers were shot. You were there during the anthrax attacks in 2001. What kind of an investigation needs to take place, and what steps need to take place to improve the security of the Capitol? And then secondly, how do you think the people who were involved in the storming of the Capitol, how should they be treated by your Justice Department? Should they be treated as domestic terrorists?
Yes, they should be treated as they're a bunch of thugs, insurrectionists, white supremacists, anti-Semites. 6N is not enough. I mean, come on. You know, these shirts they're wearing, these are a bunch of thugs. And they're terrorists, domestic terrorists. And that'll be a judgment for the Justice Department to make as to what the charges should be. But the fact is, they should be prosecuted. They should be prosecuted. The difference here is this had the active encouragement of a sitting president of the United States. And the way in which the breakdown in security occurred needs to be thoroughly investigated. I'm not going to prejudge what it was, but the idea that these people were able to just march up the stairs, march in, and do it in the way we had, there's a great debate. I don't know the answer. Great debate now. Was the governor of Maryland correct when he said that I was ready to send in the National Guard? I couldn't get authorization. What happened? It deserves a full-blown investigation. People be held accountable and steps taken that something like this could never happen again. And the difference this time is every nation has dealt, every democracy has dealt with individual terrorist attacks by groups that are very targeted. The largest target was 9/11 and the buildings. Well, right down to blowing up, you know, a bomb going off in the Capitol when I was there, and 2 policemen. But the idea that thousands of people could be marching up the steps of the United States Capitol, breaking windows, breaking doors, forcing their way in, stepping aside. And the photographs of, well, I don't know what the circumstances, the photograph of it looked like you had some of the Capitol Police taking selfies with these people. That has to be thoroughly investigated. The authorities responsible have to be held accountable for the failures that occurred, and we have to make sure that this can never, ever happen again. The damage done to our reputation around the world by a president of the United States encouraging a mob. This reminded me more of states I've visited over the 100 countries I've gone to, in third tin horn dictatorships. It just cannot be sustained, has to be immediately investigated in depth, and people have to be held accountable.
And lastly, do you think you need to change any of the planning for your inauguration as a result of this?
A totally different entity is in charge of the inauguration that was in charge of protecting the Capitol, the Secret Service. I have great confidence in the Secret Service. I have great confidence in their ability to make sure that the inauguration goes off safely and goes off without a hitch. So so I have confidence in what is in the planning that's been underway before this and continues with the Secret Service as the lead agency.
Thank you.
Thank you.
President-elect Biden, Vice President-elect Harris, good to see you both. I want to pick up on something that you just said about President Trump actively encouraging the insurrection at the Capitol. Given the perceived threat that he poses, my question to you is not so much about the role that Congress should play in impeachment, but rather, should President Trump, in your estimation, remain in office?
I didn't think, look, I've been saying for now well over a year, he is not fit to serve. He is not fit to serve. He's one of the most incompetent presidents in the history of the United States of America. And so the idea that I think he shouldn't be out of office yesterday is not the issue. The question is, what happens with 14 days left to go or 13 days left to go? And I think that what 81 million people stood up and said, it's time for him to go. And the United States Senate voted 93-6 to confirm that we should be sworn in. We were duly elected. So I think it's important we get on with the business of getting him out of office. The quickest way that that will happen is us being sworn in on the 20th. What action happens before or after that is a judgment for the Congress to make, but that's what I am looking forward to, him leaving office. I was told that on the way up here, way over here, that he indicated he wasn't going to show up at the inauguration. One of the few things he and I have ever agreed on. It's a good thing I'm not showing up.
Earlier, you'd said that if you'd hope that he would show up only in the sense that it was valuable to send a signal to the world about the transfer of power. You've clearly changed your perspective on that.
Because he has clearly demonstrated, he's exceeded even my worst notions about him. He's been an embarrassment to the country, embarrassed us around the world, not worthy to hold that office. If we were 6 months out, we should be moving everything to get him out of office, impeaching him again, trying to invoke the 25th Amendment, whatever it took to get him out of office. But I am focused now on us taking control as president and vice president on the 20th and to get our agenda moving as quickly as we can. Thank you.
Another question about holding public officials to account, and this is about an issue that's no longer a headline but is no less significant and serious, and it's about the more than 600 children who were orphaned under the Trump administration as a result of the family separation policy along the border. During the campaign, you said that practice was criminal. Will you commit to making sure that the Trump administration officials responsible for that policy will be held to account?
I'll commit that our Justice Department and our investigative arms will make judgments about who is responsible, how they're responsible, and whether or not the conduct is criminal across the board. But as I said yesterday, I am not going to tell the Justice Department who they should prosecute and who they should not. That's a judgment that will be made by the Attorney General of the United States of America, not influenced by me. But there will be a thorough investigation of who's responsible and whether or not the responsibility is criminal. And if that is concluded, the Attorney General will make that judgment. I will not intervene to tell him who he should or shouldn't indict or if he should indict.
And lastly, beyond the COVID plan, which you've detailed, what are your legislative priorities? You've talked about infrastructure. You've talked about introducing an immigration bill. After January 20th, Democrats will control the House and the Senate. What do you do first?
Three different issues there in that same question. One, the commitments I made that what I would introduce, not necessarily we would move to, but introduce in the United States Congress first, I will do. I will introduce an immigration bill immediately and have it sent to the appropriate committees to begin movement. I will, in fact, countermand executive orders that the president has, in fact, initiated that are contrary to what I think is either his authority or, even if it's his authority, contrary to the interests of the United States on environmental issues and a whole range of other things. And thirdly, I will immediately move, though, to the most urgent need of asking the Congress to give me the financial wherewithal to deal with the virus, to be able to move so that we have Operation Warp Speed really working. Warp Speed got the vaccine to places that were delivered, but did not get them from those vials into people's arms. And so it is a gigantic logistical concern of how we do that. I'm committed to get 100 million shots in people's arms in the first 100 days. I'm committed to insisting that in all federal jurisdictions, any place I have control as president, everyone will be mandated to wear a mask in interstate transportation as well as federal facilities. And thirdly, I'm committed to moving as rapidly as possible to get the vaccine to teachers and the material to children that can provide for the safe opening of our schools at the end of that, beginning at the end of that 100 days. They're the most urgent things we have to do now, immediately upon getting office. There's going to be multiple things, as you well know, because you're a seasoned veteran of how this policy, how we work. And that is that there will be other committees will be holding hearings on a whole range of issues, from my positions on infrastructure, what we should be doing to generate a green economy, and so on. But in terms of the immediate need to get done, not just introduced, but to get done, voted on, and get the money and resources to do it, it turns out that the most urgent need is dealing with the virus, number one, and economic relief to Americans who, through no fault of their own, are really getting battered. Thank you.
both.
Thank you, Mr. President-elect and Madam Vice President-elect. I want to follow up with respect to what you just said about the inauguration and that it's a good thing that the president is not coming. But what about the Vice President, Mike Pence?
He's welcome. I think it's important that as much as we can stick to what have been the historical precedents of how, in the circumstance in which an administration changes, should be maintained. And so if the Vice President is welcome to come, we'd be honored to have him there and to move forward in the transition.
Have you spoken to him at all?
No, I haven't.
And you have called for unity and healing in this country. But after the events of Wednesday, does that make your job easier or harder?
I think it makes my job easier, quite frankly. I've had a number of my Republican colleagues, former colleagues, I used to serve in the Senate for a long time, call me. Many of them are as outraged and disappointed and embarrassed and mortified by the president's conduct as I am and Democrats are. And I think I have said from the beginning, and I have not changed my view, my overarching objective is to unify this country. We must unify the country. And I think that you've heard me say this before, and I apologize for repeating myself, but understandably the questions are repetitive and good. I mean, I'm not being critical of the question. And that is that there's two ways people are inspired: by inspirational leaders and by terrible leaders. By terrible leaders. What this president has done is rip the Band-Aid all the way off to let the country know who he is and what he's about, and how thoroughly unfit for office he is. And you see already a number of Republicans. I was so proud. I know we're on opposite sides. I'll get criticized from some of the people in my party for saying this, but I've worked very hard with and against the former, soon-to-be former Majority Leader, Mitch McConnell. I thought what he said on the floor of the United States Senate was, in fact, the right thing to do. He stood up. He's ashamed. I spoke with a guy I have enormous respect for, and I ran against him, Mitt Romney. I spoke to Mitt this morning again. This is a man of enormous integrity, who lives his faith. There are so many more, but there's others who should be ashamed of themselves. But they make up a minority of the Republican Party. This isn't about Republican Democrat anymore. This is about people who understand what this country's about and the things we have to agree on and move together on. I just think that if you look at it, speaking to some of my Republican colleagues, and I've spoken to a number of them over the last month since we've been elected, through recently as the day in which this god-awful debacle was taking place up on the Hill. And I think they understand that they're going to have to, we need a Republican Party. We need an opposition that's principled and strong. And I think you're going to see them going through this idea of what constitutes a Republican Party. And to hear some of my colleagues, Republican colleagues, talk about how shameful it is of the way Ted Cruz and others are dealing with this, how they're responsible as well for what happened.
Do you think some of them should resign? Should Senator Cruz or Senator Hawley resign?
I think they should be just flat beaten the next time they run. I think the American public has a real good, clear look at who they are. They're part of the big lie. The big lie. I was being reminded by a friend of mine, and maybe you were with me, I can't recall, when we were told that, you know, Goebbels in The Great Lie, you keep repeating the lie, repeating the lie. Well, there was a print that when Dresden was bombed, firebombed, there were 250 people that were killed, or was it 2,500 people were killed? And Goebbels said, no, 25,000 or 250,000 were killed. And our papers printed that. Our papers printed it. It's the big lie. People will know it's one thing for one man, one woman, to repeat the lie over and over and over again. By the way, Trump said that before he ran. If you say it enough, I'm going to convince you. I'll say it enough. The press is bad, the press is bad, the press is bad, the press is bad. If he's the only one saying it, that's one thing. But the acolytes that follow him, like Cruz and others, they are as responsible as he is. And so it's not about whether or not they get impeached. It's about whether or not they can continue to hold power because of the disgust the American people have for their actions. There are decent people out there who actually believe these lies because they've heard it again and again. I was with a friend of mine who's a medical doctor telling me that his neighbor said to him, he lives in another state, his neighbor's a good person, said, but you know, doc, this is true. There's a lot of chicanery that went on in this election. He said, tell me what? Well, I just know there was. They say it is. They say it is. This is a human condition. You say it and say it and say it and say it. The degree to which it becomes corrosive is in direct proportion of the number of people who say it. And so it's interesting to me, and I was pleased to hear some of the more prominent Republicans say to me that the Ted Cruzes of the world are as responsible in terms of people believing the lies as, not as responsible, but similarly responsible like Trump. But they didn't say, go to the Capitol, I'll be with you, follow. That's a different story. Thank you.
Thank you.
Thank you all very, very much. Appreciate it. Thank you.
Welcome, everyone, to Closing Bell. I'm Sarah Eisen here with Wilfred Frost. We've just been listening to President-elect Biden taking questions from reporters 12 days until his inauguration. Some sharp criticism for the sitting president, President Trump, saying he is not fit to serve and is one of the most incompetent presidents in history. Though he did not call for impeachment, said that decision is going to be up to Congress, said he's felt this way for a while, called him an embarrassment and not worthy to hold that office. As it relates to headlines and news President-elect Biden made on the stimulus front, which could be moving markets here, we saw stocks come off their lows and actually turn into positive territory. President-elect Biden saying the price tag for his new economic package will be, quote, high, and he's going to lay out that economic package on Thursday. Biden saying the package will be in the trillions of dollars. We know this is a market that likes stimulus. He says now is the time to spend. He also said that his package will include unemployment insurance and rent forbearance. It is necessary to spend the money now, perhaps why we saw the stock market rebound off of those lows and go into positive territory. Dow's only up about 9 points or so. Let's bring in Kayla Tausche in Washington for more on what we heard from the president-elect. Kayla.
Well, you just ran through a lot of it, Sarah, but I think the market is focused on those stimulus comments and the fact that the president-elect is going to be rolling out the contours of what he calls a comprehensive package even before his inauguration, saying that the economy does not need a bridge to the other side, that it needs an injection of money right now. He would not say whether he would be pushing the Senate to consider a standalone bill for just those $2,000 direct payment checks for Americans, as he had been calling for just earlier in the week, saying that if the two Democratic candidates won the Senate runoffs in the state of Georgia, that those checks would essentially be a shoo-in, but he did not specifically break those out today. And perhaps there is one reason for that. Earlier in the day, we saw a position reported by the Washington Post for West Virginia moderate Democrat Joe Manchin, who is going to be a key participant in the debate over the stimulus. As a moderate, he has even more elevated influence right now with the razor-thin margins for Democrats in the upcoming Senate that is going to be seated. And Manchin said absolutely not. He would not be considering those standalone checks. Well, we checked in with Manchin's office, and they struck a more nuanced tone about whether, in fact, that would be something that he would support, and said that essentially he would be evaluating the proposals as they came, that the administration would be submitting those proposals, and he would take it on a case-by-case basis, saying when the time comes, Senator Manchin will evaluate those proposals. He has also made clear that the focus when delivering economic relief must be on those who are unemployed through no fault of their own. So clearly he is undecided on checks specifically and on any broader tenets of a stimulus package. He's going to be considering a package as it comes together and as it is announced next week, which the president-elect said will be Thursday. Sarah?
I'll pick it up there, Kayla. Thanks so much for that. Market, as Kayla reported, back in positive territory, having dipped initially on that report of what Senator Manchin felt about stimulus checks. We're up about 1/3% on the S&P at the moment. The Dow, as you can see, just positive. NASDAQ leads up 0.7%. For more on the message we just heard from President-elect Biden and the state of the economy, let's bring in Seth Carpenter from UBS and Dana Peterson from the Conference Board. Thanks both for joining us. Dana, I'll start with you. Did we get a glimpse this morning with the jobs data how important more stimulus is? And if we don't get it, and we don't get it soon because of perhaps opposition in the Senate, would a double-dip recession be possible?
Well, sure, anything's possible. But I think what's going to be very important is that these fiscal supports, if there are more, definitely support people who have had interruptions in employment and also in incomes. And what's also going to be very important is clearly the rollout of vaccines, because indeed people are not able to work because businesses are closed, because governments are placing restrictions on mobility and business openings. And also, I would add, the weather has a strong factor in terms of whether or not certainly restaurants can remain open. And so all these things combined would be very important for bolstering the labor market and also the broader economy in the U.S.
Seth, we heard the number trillions come out President-elect Biden's mouth there. I mean, how big a boost could that deliver to the economy if it did get delivered and got delivered, let's say, maybe not quite Q1, but H1?
Yeah, I mean, $1 trillion is clearly a huge number. And I think some of everything that Dana said, I agree with. And if we think about in the context of today's jobs report, the two places where the losses were most concentrated were the hospitality and leisure sector, and then the state and local government employment as well. And so if we saw a package that was able to roll out the vaccine quickly and get people back to spending on services in hospitality and leisure, that sector could bounce back rather quickly. And the Democrats have been calling for more transfers to state and local governments. And the reason we've seen those sectors shedding jobs is because of their budget crunches. And so I think a package as big as $1 trillion really would be pretty stimulative to the economy.
But that's what we're getting, Seth. They just passed another $900 billion package, and we're getting that along with the vaccine rollout. That wasn't reflected, obviously, yet in December's jobs report. So I'm just wondering if this is going to be an economy in a few months that needs trillions of dollars of extra support, as President-elect Biden is planning.
Yeah, I mean, I think it's going to, for sure, depend on exactly when it hits the economy. So with the December $900 billion package in, we've got about a 4.6% forecast for this year. That assumes that the vaccine rollout continues, and then in the second quarter, you really do start to see a surge in consumer spending, especially on services. So if you were to pile $1 trillion on top of that, then you'd have a truly big boost to the economy. But don't forget, as of this morning's data, payrolls are down 6.5% relative to where they were pre-COVID. And so that's 6.5% down to a year ago. And so it's going to take a long time for the economy to not just re-employ all the people who have lost their jobs to date, but also to make up for the people who would have come into the labor market over the intervening year. So I think there's no harm really in trying to get back to full employment in a tight labor market as soon as we can.
Dana, where do you stand on the strength of the consumer more broadly, and whether there's quite a lot of pent-up firepower to be deployed?
Our thoughts are that, yes, there is quite a bit of pent-up demand there for services, and that certainly by the middle of this year, hopefully vaccines will be widely available. Whether people take them or not, they know that they can have access to that. And at that point, they can go out and engage in in-person types of services, restaurants, tourism, travel, et cetera. And consequently, businesses will have to ramp up employment in order to satisfy that demand. And so, I mean, his call is for second quarter. We're a little bit later, thinking maybe the third quarter is when we will see a big ramp up in consumption. But we do believe that consumers are optimistic. Our own survey of consumer sentiment, indeed, late last year showed that there was a deterioration in current conditions. But looking ahead, consumers did believe that business conditions would improve, and also that labor market conditions would be better, and that they would see higher income. So, and all of that was 6 months forward in terms of their expectations, matching up with our expectations for when we'll see stronger growth.
10-year yield, 1.1%. Thank you both for joining us. Dana Peterson, Seth Carpenter. We appreciate it. After the break, the president and the platforms. We're going to talk to New York Times columnist Kevin Roose about actions that social media companies took this week against President Trump and why he says this may be just the start. Plus, the U.S. hitting yet another COVID record with more than 4,000 deaths yesterday. So how can the country speed up the effort to get more vaccines into arms? We're going to ask Dr. Scott Gottlieb on a Friday next. And as we head to break, a check on bonds for you. Yields are higher again today. The 10-year past 1.11%, as I was just saying. Coca-Cola leading the Dow after underperforming, and all three of the major averages back in positive territory with now less than 40 minutes left till the close. We'll be right back.
The Bond Report is brought to you by PIMCO, a global leader in active fixed income.
When the future first arrives, we often don't recognize it. Interactive Brokers founder Thomas Petterfy brought the future to the floor of the American Stock Exchange in 1983. The company had fabricated Wall Street's first mobile computer, and it changed finance forever. Today, Interactive Brokers continues to push finance forward by building the latest technology you need to increase your success. Move your account to Interactive Brokers.
How far does $1 million go in retirement? Like so much in life, it depends. Is your portfolio in stocks, bonds, cash, gold? Have you planned for greater healthcare costs as you age? Where do you live? Cost of living makes a difference, as do market conditions. Bull or bear? Lots to think about. Fisher Investments can help.
Call now for your free Fisher Guide, the 15-minute retirement plan, and find out how long your portfolio will last, how much income you can take each year, how cost of living may impact your retirement, and more. Call Fisher Investments for your free guide, 1-800-330-0011.
For over 40 years, Fisher has helped investors achieve a comfortable retirement. If your portfolio is over $500,000 and you want to make your retirement last, call now.
Call now for your free retirement guide. Call 1-800-330-0011.
Don't just retire. Retire well.
Tonight, the push to impeach the president. Can it happen before or even after he leaves office? And the Biden team vows a major controversial change to the vaccine rollout. The facts, the truth, the news with Shepard Smith, 7 Eastern, CNBC.
I was having night terrors.
I wasn't sleeping. I'd seen BetterHelp ads, and I was like, I should give it a shot. I was paired with a really good counselor. I feel hopeful for the first time in a long time.
Selling a home is expensive and stressful, so we set out to create a better home selling experience with a network of the most successful real estate agents in America that'll sell your home for as little as a 2% commission.
The icing on the cake with the Ideal Agent was that we saved $12,000 in commissions.
They were so stress-free. The whole process was amazing, and I would definitely recommend them.
We are not a discount brokerage. These are top local agents that'll get you the best results.
Hi, I'm Hanno. I created Gabi because most people overpay on car insurance. Gabi is a free tool that saves you money by finding the best deal. Gabi users save more than $800 per year on average. Go to gabi.com and stop overpaying for car insurance.
Welcome back. Time for a CNBC News Update with Sue Herrera. Hi, Sue.
Hello, Wilf. Hello, everybody. Here's what's happening at this hour. During a conference call with reporters this afternoon, a Justice Department official said they are not expecting to file any indictment charges against speakers at the rally that preceded Wednesday's storming of the Capitol. One of those speakers was President Trump. The DOJ says it is focusing only on criminal acts at the Capitol building. During that same call, an FBI official said there is no indication that anti-fascists disguised as Trump supporters played any role in the violence, as has been suggested by some Republican lawmakers. And among those charged in connection with the Capitol invasion, Derek Evans, a West Virginia state lawmaker who allegedly live-streamed himself with the rioters, and also Bradley Ruxdales, the CEO of a small Chicago area company who tells the Wall Street Journal his participation was the single worst personal decision of his life. He is on administrative leave. I'll send it back to you, Sarah.
Sue, thank you. Sue Herrera. This week, a slew of media and tech platforms have either suspended or outright banned President Trump's accounts following Wednesday's riot at the Capitol, including Facebook, Twitter, Snapchat, and Shopify. Twitter reinstated Trump's account yesterday afternoon. IAC Chairman Barry Diller joining CNBC earlier today. He weighed in on how much he thinks social media platforms are to blame for the unrest in this country.
They're big megaphones. That's what they are. They're big communications media. And he's used it magnificently. Horrible word to ascribe to what he's done, but he's used it as an ultimate pro. And I don't think it makes sense to ban him. I think you get into all sorts of issues about banning speech and things like that. I mean, if he says something that's factually untrue, point it out, do all of that stuff. But I'm not much up for the banning thing.
Joining us now, New York Times technology columnist Kevin Roose. Been all over the social media story. Kevin, would any of this have happened this week if not for Facebook and Twitter?
It's hard to say. I mean, clearly the blame goes well beyond those platforms. There are politicians, including the president, who directly incited this violence. But I think the information environment that we're in, the fact that there are, thousands or millions of people out there who believe that this election was stolen and were ready to avenge that, I think that has a lot to do with these social media platforms and the way that they're built and the approach that they've taken to misinformation.
Kevin, to what extent will these bans, temporary or permanent, just lead to a significant growth on rival platforms like Parler, but others are out there too, and I guess new ones could be created, or is the critical mass that's present on the likes of Twitter, Instagram, Facebook, make that less likely?
I think we'll see some growth on the so-called alt platforms, which we've talked about before. But I think the real thing here is that I think this kind of deplatforming would be devastating for the president. Look at what happened to Alex Jones. He was a huge figure on the right, and then he lost his Twitter and Facebook and YouTube accounts, and he's basically disappeared. And the same things happened to a number of other alt-right figures who were banned from these platforms. Obviously, some people will follow the president no matter where he goes, to Gab or Parler or any other platforms. But so much of what makes these mediums so powerful for him is that everyone is there. It's not just his base. It's people who disagree with him. It's celebrities. It's the media. It allows him to kind of program the newsrooms of the nation. And I think without that mass reach, he'd be a lot less effective.
Facebook QAnon specific story question here for you, Kevin. You know, Facebook made a huge to-do about cracking down ahead of the election and purging QAnon accounts. To what extent have they effectively done that? Are they not still using that as chat rooms and meetup places for events like we saw this week?
I think the sort of biggest and most obvious QAnon presences on Facebook have largely gone away. The pages that had hundreds of thousands of followers, the groups that had, you know, tons and tons of members, those have been taken down. But there are these other sort of splinter groups, these Stop the Steal groups that are still very active, anti-vaccine groups, anti-human trafficking groups, these things that are sort of adjacent to QAnon. Many of those are still present on the platform, and that's where a lot of that activity is taking place. And I would add that this was not just a Facebook thing this week. These people were organizing on all kinds of platforms. Twitter was a big part of it. There were Telegram channels and Twitch streams and YouTube streams and lots of different ways that these people were organizing. So I think that the QAnon sort of things that are sort of obviously and explicitly QAnon have had a harder time sticking around, but there's still plenty of QAnon out there.
Kevin, is this finally a catalyst that leads to regulation in the next 12 months that alters whether or not these platforms are responsible for the accuracy of posts that are made?
I think we'll see some movement on that. I think it remains to be seen what the Biden administration's position will be on things like Section 230. We haven't really heard much from them on that so far. But I do think there's a lot of energy right now for reforming these social networks. Clearly, they have proven that they can't effectively police themselves, and that we need new rules of the road for us to be able to figure out how we do this stuff effectively and how we keep these extremist movements from gaining so much power.
Kevin Roose, thanks for joining us. Much appreciated.
Thank you for having me.
We've got 26 minutes left of the session. The Dow's flat. It had been up about 100 points earlier, down 250 at the lows. So we're well off the lows with just, 25 minutes left of the session. Up next, we'll speak to former FDA Commissioner Dr. Scott Gottlieb about the vaccine rollout and warnings of a new U.S. variant. We'll be right back.
Enterprise Artificial Intelligence has the power to transform the most complex organizations and the world, delivering medical supplies where they're needed, keeping our armed forces at the ready, cleaner, safer energy, all thanks to 1 billion predictions per day. C3.ai is AI at a global scale, harnessing the power of data to build a better future. C3.ai. This is Enterprise AI.
Keeping your oysters growing while keeping your business growing has you swamped. You need to hire.
I need Indeed.
Indeed you do. The moment you sponsor a job on Indeed, you get a short list of quality candidates from our resume database, so you can start hiring right away. Claim your $75 credit when you post your first job at Indeed.com/promo.
This is my phone. It's my lifeline. It's also my new bank, GoToBank, with the ultimate app that makes banking super easy. There are no monthly fees with direct deposit, a free ATM network, and I get paid up to 2 days early. Lets me lock and unlock my account, so you know it's secure. And I get 10 times the national average on my savings. GoToBank. It's mobile banking at its best. Who's your go-to? Open an account at gotobank.com.
Get up, let's go! Stay
stay up, go!
It feels good to breathe, doesn't it?
Stop cycle! Welcome home.
Three meetings and 3 stops today. There's just never enough time. If you've ever considered flying private jets, you have to check out One Flight's badge. The badge makes searching and booking private jets as simple as booking a hotel. Just type in your location and find the closest airport. Then choose from over 4,000 jets in one place. When I land, there's always a car waiting for me, courtesy of One Flight. What's your time worth? Badging.
Super Wild Card Weekend is here with 2 primetime showdowns on NBC. Bucks, Washington.
To the end zone, touchdown.
Browns, Steelers.
That was awesome.
This weekend on NBC and streaming on Peacock.
Dow's up 22 points, 23 minutes left of trade. As coronavirus cases surge across the country, the White House task force is saying that the latest spread could be due to a new USA variant, in addition to the UK variant that's already currently spreading. Joining us now is former FDA Commissioner Dr. Scott Gottlieb. He's a CNBC contributor, sits on the boards of Pfizer and Humana. When we see these headlines, Dr. Gottlieb, about variants and mutations, it's scary. And of course, investors want to know whether it's going to be potentially more deadly and more transmissible and what that's going to mean for lockdowns. Do you know anything about this new U.S. variant?
Yeah, well, my understanding is that the task force thinks that there might be a new variant here spreading in the U.S., and it might be the prevalent strain, largely because when they look at the curve in terms of the number of infections that we're having now, it seems to fit on top of the curve that's being experienced in the UK. So the behavior of the strain that's circulating here in the United States seems to be behaving like the strain that's circulating in the United Kingdom. Now, it's not that strain. If it was, we'd recognize that because we're looking for it. But there's a perception that there could be a different variant here spreading in the U.S. that has characteristics similar to the strain that's spreading in the United Kingdom. So this isn't actually the fact that we've discovered a different variant here in the United States, although there are genetic changes to the prevalent strain here in the U.S., or that we've been able to correlate that with actual experimental evidence that proves that it's behaving differently. It's largely pattern recognition where we're fitting our curve on top of the UK curve. And right now, the trajectory of what's ensuing here in the United States looks a lot like what has ensued in the United Kingdom.
Well, potentially the good news on that is that the company that you sit on the board of, Pfizer, has come out and said that the vaccine appears to protect against the UK variant, the South African variant, which I think a lot of scientists were a little more worried about. My question is, how high is the probability that we get a mutation of COVID-19 that does not and is not protected by the current vaccine? I'm thinking of chickenpox and mumps and measles, which don't seem to have spread beyond a vaccine. What do you think is the risk for this?
Well, the experimental evidence that came out today from Pfizer, and it hasn't been peer-reviewed yet, seems to suggest that the vaccine is protective against the UK variant. They looked at 20 patients who had that variant, the antibodies that they produced, or 20 patients who were vaccinated, and then tested the antibodies that they produced against some of the mutations, some of the key mutations found in that variant. They didn't test it specifically against the key change that we're seeing in the South African variant. So the South African variant is basically the UK variant with some additional features that seems to mutate a region of the spike protein, that key protein on the virus surface that's used in the vaccines. That is the key one, the one that we developed some of our most productive antibodies against. And so that experimental evidence is underway. They're doing those experiments. We'll hopefully have that in the next couple of weeks. I think it's unlikely that you're going to see a mutation or even a series of mutations that fully thwarts our vaccines, because what we've used in the vaccines is the full-length spike protein. So you're developing what's called a polyclonal effect, meaning that you're developing antibodies against many different parts of that protein. So even if some of those antibodies don't work well anymore because certain regions of the protein mutated, you're going to have antibodies that bind to other parts of that spike protein. By comparison with flu, most of the antibodies that we develop to flu each season really target a very specific region of that virus, and that happens to be the region that virus mutates very easily. So that's why that virus can fully thwart our vaccines and why the coronavirus is unlikely to do that within the span of one season.
Dr. Gottlieb, given that some of the curves are looking similar to what the UK curves were a week or two ago, does that mean we're headed for full lockdown, as is the case in the UK, where it's clearly very necessary? The Mayor of London saying it's out of control in London, that 1 in 30 people have it, and deaths across all of England hit a peak for the whole of the COVID pandemic today.
Yeah, I think not necessarily, and I wouldn't necessarily draw conclusions by the fact that the trajectory of our curves look like the UK curve when you superimpose them and you sort of erase 2 or 3 weeks. You kind of go back in time and then try to superimpose our curve on top of theirs, because a lot has happened in the intervening time. We had holidays, which caused an acceleration in cases. We don't know how much that's contributing to the acceleration. Remember, the UK had a surge, then they seem to have a decline, and they seem to have a surge again. We seem to be following the same kind of pattern, but we had holidays in the middle of that. And so I think it's still hard to draw conclusions based on that alone. We know that the UK variant is here in the United States. We know it's becoming more prevalent, but it isn't the prevalent strain yet. And I think we're really in a race against time to try to get more protective immunity into the population with the vaccine, to hopefully thwart that from becoming the more prevalent strain. And the announcement today from President-elect Biden that they're going to try to push out more vaccine supply, I think is a good step, trying to get more vaccines in arms during a really critical window of opportunity we have to try to get protective immunity into the population.
Yeah, I knew you'd be happy about that. I know it's something that you've advocated for. Assuming we do that and we get more vaccines in arms, and also that important study last night that the immunity seems to last at least 8 months for people who have had COVID-19, how do we know when it's okay to go out and resume life as normal, potentially take our masks off? When does that happen?
Well, I think we're going to know based on what the prevalence is of the infection in society. And you know, if things don't go miserably wrong, we are going to have a very dense epidemic here in January. That's kind of baked. There's not much we're going to do about that right now. We need to start wearing masks more and adhering to good practices to try to thwart that spread. But a lot of that's underway. We're going to see hospitalizations continue to grow. We're going to see deaths, unfortunately, continue to increase. But the virus should peak at some point this month. The number of new daily cases should peak and start to come down, maybe over the next 2 weeks. And as we get into February, we'll continue to see cases come down. And as we get into the spring and the summer, the combination of having infected 30–40% of the population, having vaccinated another 20%, and then having the seasonal backstop over the spring and the summer, prevalence should decline. Now, what could change that equation is if the UK variant or one of these more contagious variants becomes the prevalent strain, and then it's going to be a lot harder. But I think you're going to know when you can take a deep breath on all this, when prevalence declines to the point that you just don't see a lot of spread and your daily risk of contracting COVID's low, and hopefully more of us are vaccinated, so that's going to afford a level of protection.
Dr. Gottlieb, great to see you. Thanks for joining us.
Thanks a lot.
Sticking with healthcare, shares of Sarepta are plunging today. Let's get to Meg Terrell for what's behind that big drop. Hey, Meg.
Hey, well, it's a sad story. Sarepta has been developing a gene therapy for this devastating disease called Duchenne muscular dystrophy, which affects kids. And it had a disappointing result in a much-anticipated clinical trial. They were looking at 41 kids included in this trial. And what they found, you can see here the stock down more than 50% on this news, is that while the gene therapy did meet a goal in terms of increasing expression of a really important protein for muscle function, it missed a goal showing actual improvement in muscle function. So this casting a lot of doubt on both the speed with which this therapy might be able to be brought to the FDA for potential accelerated approval, and also the approach in general. And you can see here, Pfizer and Solid Biosciences also working on similar technologies. Solid down quite a bit, guys. Back over to you.
Meg Terrell, big move on that stock. Thank you. Straight ahead. Tesla adding to its supercharged gains, and value investor Bill Miller talking Bitcoin. Those stories and much more when we take you inside the market zone with the Dow up 42 points. And a reminder, you can always watch or listen to us live on the go on the CNBC app. Closing bell will be right back. 15 minutes left of trade.
Labradoodles, cronuts, skorts.
It's a skirt and shorts.
The world loves a hybrid. So do businesses. So today, they're going hybrid with IBM. A hybrid cloud approach lets them use Watson AI to modernize without rebuilding and bring all their partners and customers together in one place. That's why businesses from retail to banking are going with a smarter hybrid cloud, using the tools, platform, and expertise of IBM.
For every trip you've been dreaming of, Expedia has millions of flexible booking options, because the best trip is wherever we go together.
Battling COVID, doses of hope. The IPO alternative moving investors.
The public finally getting into some of the smaller companies that are out there.
New Year optimism on the path forward. Stay connected, stay informed. Watch or listen live on the CNBC app.
No more waiting. This year is going to be different. My New Year's resolution: get happy.
Now you can skip the grocery store and stay healthy at home. Sunbasket delivers totally delicious meals ready in minutes. Fresh and ready meals. New from Sunbasket. Use code TV35 to get $35 off plus 4 free gifts.
Hey, I'm Nick. We created Gabby because most people overpay for car insurance. Gabby is a free tool that saves you money by finding the best deal. Gabby saves users over $800 a year on average. Go to Gabby.com and stop overpaying for car insurance.
The Ridge wallet does a lot more than a typical wallet. It's small and modern and expands to hold cards and cash. It's made from military-grade material. It comes in 12 colors with a cash strap or a money clip. It blocks RFID, has a lifetime warranty, and free shipping and returns. Get 10% off today at ridge.com/TV.
Heading into retirement, you want to follow your passions. Bright House Smart Care is a hybrid life insurance and long-term care product. It protects your family while providing long-term care coverage should you need it. Talk to your advisor. Bright House Financial. Build for what's ahead.
You know what's making Sarah's migraine worse?
Okay, let's table that.
But you know what gives her some relief? Using ZocDoc to book a video visit.
You'll get the prescription this afternoon. Does that work?
Yes!
Oh!
ZocDoc makes healthcare easy.
Night, buddy.
Arms, stay.
Sleep soundly tonight, with peace of mind from the brand that more families trust for quality and timeless protection. ADT, real protection.
With 11 minutes left to the trading day, we're now in the closing bell market zone. Commercial-free coverage of all of the action heading into the close. Joining us today are Short Hills Capital Partners Chief Investment Officer Stephen Weiss and Ally Chief Investment Strategist Lindsay Bell. Very good afternoon to you both. Let's kick things off with the broader market. Stocks fairly volatile today, falling earlier on possible opposition to further stimulus from Senator Joe Manchin. Major averages, though, on track to finish the week in the green, and any close higher for the Dow S&P NASDAQ will be a record, and they are all set to be higher as things stand. We've had quite a nice improvement in the final hour and a half, as you can see there. And we're now higher by 70 points on the Dow. The high was 100. The NASDAQ leads the charge, though, up nearly 1%. Steve Weiss, I'll come to you first. You're pretty constructive that the result we got in Georgia does genuinely mean markets have reason to rally further from here.
Yeah, I was in the minority, even back before the presidential election, saying that a blue wave. We didn't quite get a blue wave, but we've got pretty much a Democratic-controlled Congress will allow Biden to come out with massive spending, infrastructure spending, which both sides agree on, although may differ on the amount. And we saw that today at his press conference, that he's going to come out with a bill that's got a very high price tag. That is going to just drive the market to incredible levels, because the backdrop is panacea. You've got low rates. Even if you get a tax plan, which I don't think you will, and we heard from Joe Manchin today about there was some conflict about what he was saying. Bottom line is that you have enough Democrats that will prevent our major tax plan. So what you'll have, massive spending, massive job creation, more and more money coming into an economy. I think you'll see GDP levels going back to 5%, maybe 6% going after next year or so. Not on a bounce back from the decline due to COVID, but natural growth. So when you take that and when you remove the uncertainty that CEOs, at least who I spoke to, wouldn't talk about publicly, but spoke privately, their lack of desire to spend the massive cash in their balance sheets because they didn't know who were going to wake up with a trade war the next day, or what's going to happen with China or Germany, et cetera. Now you're going to see that CapEx deployed. It had been declining under Trump. Now it's going to grow aggressively, less into buybacks, more into the economy. So we'll see a massive, massive economic push to the U.S. and a synchronized global economic expansion due to low rates as vaccines take hold towards the end of the year. So yes, I'm very positive, Wilfred.
I mean, you just articulated, Stephen, why stocks are up 1.8% this week on a week where, you know, we saw our democratic institutions threatened in a way we've never seen before. And on a day where we saw 140,000 jobs lost in December, we're now more than 9 million jobs short of where we were in February. So is that the read? It's just all looking forward?
Exactly, and that's what markets typically do. They look forward, they knee-jerk down on reactions, and then that's your opportunity. So it's important not to confuse volatility with risk. They're completely different things. Volatility often provides opportunity. Now, the market's looking through as it has, but I'll tell you something else. There's a new generation of investors out there, and we've seen so many flash corrections, down 10% that last a month or less, and then the market recovers. Markets go up 90% of the time. So it'd be sort of foolish to trigger any tax implications for yourself, paying the government 40, 50%, depending upon your tax bracket, only to buy back those stocks a week or 2 weeks later. So stay long, but you got to stay in the right stocks. There are some bubble stocks out there. There are some that defy expectations, but generally I'm finding things to do.
Let's talk Tesla. We've got to. Stocks skyrocketing again, up 23% just this week. The company surpassing Facebook in market value, and Elon Musk now the richest person in the world. Meanwhile, Evercore ISI upgrading Tesla to in line from underperform, the firm admitting it has, quote, been on the considerably wrong side of Tesla for over a year now. No kidding. Lindsay, what's the catalyst for moves like we're seeing in Tesla, up 7%, no matter what the overall market seems to be doing?
Yeah, I mean, if you look at Tesla, too, it's been up 17% since it joined the S&P 500 in late December. And that's bucking the trend. Usually what you see when a stock joins the S&P 500, you get a big pop, especially a stock like a Tesla or Facebook, Yahoo back in the day. And then they give it back once they're in the index after the excitement is gone and it's a show me story. But not with Tesla. That hasn't been the case. And I think it's really what you're seeing is investors chasing some of these stocks that have been hot. They're disruptors in their industries, and the expectation is for growth to accelerate once we get past the pandemic. And so I think that's what investors are really looking for. They like those growth and momentum trades.
Bitcoin hitting another all-time high, crossing $42,000 at one point today. The cryptocurrency up more than 30% this week alone. Earlier today, Bitcoin bull Bill Miller of Miller Value Partners joined CNBC and weighed in on the cryptocurrency's recent surge and where he estimates it will go from here.
One of the things that's interesting about Bitcoin is that it gets less risky the higher it goes. So that's the opposite of what happens with most stocks. Every day, Bitcoin's a supply-demand story. There's 900 new Bitcoins created every day. It's estimated that PayPal and Square alone are buying, their customers are buying all of those. And Bitcoin's total supply is growing less than 2% a year, and it's obvious by the price that the demand is growing much, much faster than that. So as long as that obtains, Bitcoin is likely to go higher and perhaps considerably higher.
Steve, I know you're constructive looking forward for the reasons you gave already. What if we did see the last two assets we've talked about, Tesla, which has doubled since early November, Bitcoin, which has doubled since mid-December? What if we saw them both correct to the tune of 20 to 30%, which is not unfathomable at all? Could that derail all risk-on sentiment that has been built up, particularly in the minds of retail investors over the last few months, indeed last year or so?
Well, if you divorce Tesla's impact and the fact they're a component of the S&P, I don't think so. I mean, look, Bitcoin, as Bill pointed out, and he's a smart investor, and I own some Bitcoin. I own it through GBTC, which is a trust, so I don't have to go through, the machinations of paying 5% commissions. But it's a minority that owns Bitcoin. And we had these conversations going back years. What if FANG comes down? What if FANG corrects? What if Apple corrects? Is that going to hit the market? And that was a valuation that wasn't unreasonable. And the answer then was no. And the answer to this is no as well. I think everybody, if they're honest with themselves, who owns Tesla, realizes that the valuation makes no sense. Doesn't mean sell it. I think people realize that Bitcoin doesn't really make a lot of sense. There's no value there. There's no there. I own speculatively in a momentum trade. The reason I bought it is because last week the comptroller of the currency came out with some guidelines on stable coins, of which Bitcoin is not, but it gets them closer to maybe saying, okay, Bitcoin's okay as a currency. In my view, until you see stability in pricing and less volatility, you will not see Bitcoin as anything more than just, a whim and a prayer right now.
But I like how billionaire investor Chamath Palihapitiya put it, I think yesterday on CNBC. He said it's an uncorrelated hedge against untrustworthy national leaders. Lindsay, and what's interesting is that Bitcoin's rallying today along with the U.S. dollar. You might think they move in opposite directions because lack of faith in the fiat currency, that whole thing. How much are your clients asking about it, and what are you telling them?
Yeah, our clients are retail investors, so we do see an extreme amount of interest in Bitcoin. We don't offer the coins on our platform, but they are in the GBTC, like Steve just mentioned, and they're looking for different ways that they can play it through options for certain. So, the way we look at Bitcoin, I totally get what Bill Miller is saying. The demand-supply story is right there. If you think about demand, financial services companies, they've been building out their product offerings around this for a very long time. The ecosystem is being developed. Payments companies like Square, PayPal, they're buying up, their customers are the ones buying up the new supply of Bitcoin, and retailers are starting to accept Bitcoin. So it's becoming much more mainstream and used, and the supply is obviously very controlled. So I can understand where he's getting his upside to the price target. But to say that there's less risk the higher you go, I think there still is a lot of risk. This is an asset class, and not a lot of people fully understand. Regulation is already starting. We've heard from FinCEN recently and the OCC this week. The OCC obviously saying that that banks can accept the currency. I think there's a long road ahead for Bitcoin for sure, and it's been a fun one to watch.
I agree. That is spoken like a bull, saying there's less risk the more it goes up. Let's hit Alibaba. Shares rallying after not being included on the China stock ban list. Deirdre Bosa with the details here. Deirdre.
Sarah, finally a little bit of reprieve for Alibaba and Jack Ma. The company and Tencent, two of China's biggest internet companies with a combined market cap of about $1.3 trillion. They were reportedly being considered for that Treasury blacklist. Alibaba, though, keep in mind, still down more than 20% over the last 3 months. Chinese regulators, they continue to pressure not just the e-commerce giant, but also its payment affiliate, Ant Group. On Monday, guys, the ban will, however, cut off Chinese telecoms carriers from the U.S. benchmarks. Back to you.
Deirdre Bosa. Deirdre, thank you. As we head into the close, take a look at the major averages. We are tracking record closes for the Dow, up 59 points, for the S&P 500, and for the NASDAQ. 3 record closes and booking some solid gains in overall stocks for the week, with S&P looking for a gain of 1.8%. We also had a new intraday record high today. There is the Dow, another strong week on Wall Street. The Russell 2000 index of small caps bucking the trend, closing down about 1/3 of 1%, but it too is trading just around a record high. Overall, a pretty solid week, Wilfred, given some of the events that unfolded in this country.
And a particularly solid week for the Russell itself, up 5.9%, but the only index down today. Welcome to the Closing Bell. I'm Wilfred Frost, along with Sarah Eisen. The Dow, S&P, and NASDAQ, as Sarah said, closing at record highs, up 0.5% for the S&P, 0.2% for the Dow, or 56 points. The high of the session for the Dow, 100 points, the low 250. So as you can see from the intraday charts of the indices, a nice rally in the final couple of hours of trade, taking us closer to the highs than the lows. The Nasdaq led the charge, up just over 1%. The Russell down 0.25%, but up nearly 6% for the week, and all of the major averages up comfortably for the week by at least 1.6%. A lot to come on the rest of the show. SunPower and other solar stocks down today, but they've got a big rally in the past week after Democrats won the Georgia Senate runoff. We will talk to the CEO of SunPower on whether the change of power in Washington will lead to more government spending on renewable energy, as some market participants expect. Stephen Weiss from Short Hill Capitals and Lindsay Bell from Ally Investors still with us, and Peter Cucini from Alpha Omega Advisors joins the conversation as well. Very good afternoon to you, Peter. I'll come to you first of all. In terms of what you think about the markets short term, we know your view medium and longer term isn't as constructive as most, but you had a tactical buy more recently. Do you still have that on?
Yeah, just be Happy New Year, Wilf. Just before Thanksgiving, I came on the show and I did a bit of a mea culpa, admitting that I had been too cautious since late June or early July. And, I came to realize that sentiment and flows were likely to carry equities higher into the end of the year and likely into the new year. On the 6th, just a couple of days ago, given what I'm seeing, especially in small caps, and you mentioned the Russell a moment ago, relative to both valuation as well as technicals, I really felt it was time to sort of say that 6 weeks of bullishness had run its course for me. To me right now, I think investors are looking to buy disruption, the likes of Moderna or the next Tesla, and really not paying any attention to valuation whatsoever. And to me, that's really, and I loathe to use the term, but that really is the definition of what makes for a bubble.
Except for the best performing sector of the week, Peter, is energy, up 9%, materials, financials, and consumer discretionary right behind it. So you have these pockets where what you're talking about with Tesla and Bitcoin, I get, but also value stocks are catching a serious bid.
Yeah, I agree with you, and I think that's a function of sentiment. I think people are gaining quite a bit of confidence, especially around the stimulus package being increased. We just got a $900 billion package, and there's talk of now of trillions more. And look, that money is going directly into checking accounts, which means that liquidity is abounding. And that money is going into the stock market, and that's been shown in the flow data as well as many surveys. And I think that's emboldening investors. And, if you look at transports or if you look at regional banks, the prospects for transports to have better performance than pre-pandemic, in my view, is quite slim from an earnings standpoint. And that's precisely what's being baked into stock prices now, a rebound well in advance and above what the performance was prior to the pandemic.
Lindsay, what do you get the feeling your investors' positioning is at the moment? There's always so much debate with high levels of cash on the sidelines and so on and so forth. Do you think people are quite bullishly positioned or not?
Our customers certainly remain bullish on the market. The amount of buying versus selling remains elevated. We're getting new customers in the door every day. So there's definitely interest. Apple, Tesla remain at the top of the list of their favorite stocks. So I think amongst the retail investor, there still is optimism and excitement about what the stock market has to hold in the year of 2021. So we remain optimistic for certain, and I do think that some of these cyclical sectors, like the industrials and materials, that have done well at the end of 2020, I think they have plenty of room to run because they're going to finally see they're going to be one of the early beneficiaries of the earnings recovery. They're expected to have some of the best earnings growth in 2021 after a weak 2020. And in addition, these are companies that are going to benefit from the early recovery in other parts of the world as they have plenty of overseas exposure. And by the way, the weaker dollar helps them.
So what do you do with tech, Stephen Weiss? If that's the playbook that everyone's following right now, value, cyclical, look forward, small caps, where does technology fit in? It looks like as a group, as a sector, closed kind of flattish for the week, up 0.4%.
So here's how I look at things. Everybody's got their own strategy. Peter's got his top down. This looks like a bubble. You know, that looks like a bubble. I focus on bottoms up. I look at stocks, and I love tech. 5G, I mentioned on the show before, to me is the next industrial revolution. It's not just me saying it. It's countries, it's companies, it's the next industrial revolution. I don't see bubbles in companies like Skyworks, which is selling roughly at a market multiple, slight discount, but growing bottom line at 20%, or Qorvo or Qualcomm, where their total addressable markets, you can't even calculate them. They've grown so much. Skyworks, they just sold RF chips into smartphones a few years ago, 100% of it. Now 30% into other things. Qualcomm's selling into Peloton bikes, into cars, every place you can imagine. So focus on the ones that are in the headlines, the minority stocks, which I mean small group of stocks like Zoom, like DocuSign. Forget those. Forget the Teslas. Look at where there's value, where there are fundamentals to support it. Don't invest in energy unless it's clean energy. Amazon told us how we've got to look at retail. Look at it a different way. I would tell you that fossil fuel companies and utilities are the mall-based stores of last year, last decade. Buy the clean energy. Buy Atlantica Sustainable, which is AY. Buy companies like Vestas Wind Partners, a $50 billion market cap company nobody's ever heard of that's domiciled in Denmark that makes windmills. Buy those stocks. Those are the Teslas of the Amazons of this millennium, not fossil fuel companies. That's where I'd be.
I don't know. EOG's up 18% this week. Occidental up 16. Apache up 17. Signs of life in this group, Steve.
Well, but they'll lag going forward. I'm not saying they're going out of business. Retail stocks we saw moved up. There's some to buy there. These are dead count bounces. You can't name one superstar, allegedly superstar hedge fund manager who just ran energy, who survived, who has a fund. Tell me commodity funds that have lasted more than 3 years. It's boom and bust cycles. This will be no different. Okay? If you want to own energy, you're partners with Putin, you're partners with Saudi Arabia, you're partners with countries that have to run for cash flow, not profitability. You can't control your own fate.
Get your point. Let's go over to Bob Pisani now for a closer look at this week's market rally. Bob.
Sarah, at a new high, but quite a rocky ride along the way. We dropped 25 points in the middle of the day. Look at the S&P 500. Senator Manchin came out and said he was generally opposed to the $2,000 stimulus checks. He appeared to have softened his stance later on. The president-elect said the jobs report was weak, so we needed stimulus. They're believing the stimulus story. How much? All the railroads are at new highs, folks. CSX, Union Pacific, those are stimulus plays. Even Canada National Railway was at a new high, 52-week high at least here. January trend's pretty simple here. Small caps like the Russell 2000 over big caps like the S&P. Look at that outperformance this week. Energy and cyclical sectors over consumer staples and other general defensive groups. And also value over growth, 2% versus less than 1% in the growth area. What else do they like? They love these thematic techs. I keep telling you about them, and they just keep going. 3D printing. Look, this is 1 week, up 18%. Clean energy, 16. Solar, 15. Lithium and batteries. Cybersecurity, social media. They love buying tech in these thematic ETF packages. The creations have been enormous in the last 2.5 months. And I'll bet you that's still got some legs to go. But remember, what happened today with that non-farm payrolls report reminded us that the COVID winter is very, very real. And we're certainly in for a tough several months. Guys, have a good weekend.
You too, Bob. Thanks so much, Bob Pisani there. Peter, where will rates get to by the end of the year, and what does it mean for PE multiples?
Yeah, look, I think there's upward pressure on the long end of the curve from the massive deficits we're running and the issuance that's required. I think that is the main driver, and obviously there's something of a circularity to the logic here because more stimulus leads to potentially more inflation and more growth. But I think higher rates, the higher rates we've seen in the past few days, are really more a function of expectations for future supply on the long end of the curve. And everyone's been making the case of late that real rates are as negative as they have been for many a month. And that doesn't have a lot of weight for me, because that depends on what you think the inflation rate is going to be on a go-forward basis. Just because break-evens on the 10-year are right now above 2% does not mean they will be in 6 months. And in fact, the 10-year break-even is incredibly volatile. And generally, when it's at this level, inflation actually tends to stall. So whether or not that persists really is a function of how much the stimulus impacts inflation. And lastly, Wolf, I'd just like to say, not once has really anybody talked about valuation except for Steve. And I agree with Steve, by the way. I sit on the board of a clean energy company called Encino. So I agree with you. There are opportunities there. But when you look at the Russell, it's trading at 2 times sales, which is as high as it has ever traded, and 35 times enterprise value to EBITDA on a trailing basis. So these companies have a tremendous amount of work to do in order to grow into these fantastic multiples. And I think that's really the part of the conversation that is really missing. There's a great story around an earnings recovery, but yes, in what context? What are valuations? And valuations are very rich, especially for small caps.
Well, earnings season kicks off in just about a week or two, so we will learn more then. Peter Cicchini, Lindsay Bell, Stephen Weiss, thank you all for joining us. We appreciate it. Coming up next, the CEO of SunPower.